is hot. Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Hello. Good morning.
Good morning. Good morning. Hola to everybody. We had a little bit of computer gremlins going on this morning, but we started right on time. So looking good, everybody. Looking good.
Yeah,
Let's take the rest of the day off.
The production team can. We just started. I mean, they just gave us the tools to work.
I will say it's usually you that has the problem, and this was just a group problem. We had a little bit of everything today. So
Now, is that how we want to start the day?
so to be honest, I'm an honest guy.
We're all supposed to be friends here. Is that how we're supposed to start the day?
Sorry.
How is everybody this morning? V, let's start with you. How you doing, young lady?
I'm good. It's going to be 60 degrees today. That is in a pants. So I'm going to hit the beach.
Have a little picnic outside for lunch, something.
It's also going to be like 35-mile-an-hour winds. So
perfect.
Yeah, I was going to say I haven't stepped outside yet, but that's what I heard. I heard the wind howling so far. I don't know about the 60 degrees yet. If the wind is like that, man, 60 degrees is going to be hard to get.
no, I know, but it's okay. But it's still Friday, so we did it.
Yes, we did. Yes, we did. Friday is right.
Friday.
Yeah. Not Friday in the market. We got another war popping up, and markets getting a little bit softer. Oil's going higher.
It was heavy yesterday, though. So
Yeah.
We got some action. Don't discount the Friday. Nobody's taking Friday off right now.
I know
thanks for nothing, NVIDIA.
seriously. But the Vecchio war trade might play out right now. I've got that butterfly right at the money in oil futures. I might have to put something in there.
So do you have to pay Vecchio a VIG for this war? Like, what are
it's more of like a shakedown, like he'll come calling for that, I'm sure.
But he is pseudo-Italian. I mean, he's like a suburban Italian. You know what I mean? So
yeah, you got to be.
You live in Glenbrook, Glenview, whatever. I can't even get it out.
But I made my bones in the city. You know what I mean? I just came out here to retire to get away from the mob. You know what?
Yeah, exactly.
That's all.
All right,
you literally
there
have
it
a
is.
Glenview Park sticker on your car.
That's my PTA.
Okay. So what did you do there, Nikki?
I closed the butterfly, so I was long the 67 call in the oil futures expiring today, and then I had two shorts at the 70 strike, and then I have a wing that's further out of the money. Maybe I'll put like a 3 or 4 cent bid in, see if I get filled there, which is like
You mean offer?
Offer. I'm sorry.
Right, you got it's no bid at is what you're saying. So that's a good point you're making right there. So if you have a 3-legged spread like a butterfly or anything else like that, and one of the legs is no bid, you can put it in below the natural offer or above the natural offer or below the natural bid and not get filled because the computer can't sell something at zero. So you just do the 2 legs and you leave the one naked long. Only good things can happen on that. Or you put an offer in like you did for 2-3 cents or whatever, and hopefully you get filled.
Yeah, that's what I put it in for. I mean, if you get a little bit of a spike here, but we're right at the money with the butterfly. So it's trading at what I close it at
45 cents.
45 cents. That's $450 out of that.
Yeah, right. With the oil trading right at 67, you were long the 67 calls, short the 70. So you weren't at your short strike, which would have been optimal. Yeah. You were right at your long strike. But like you said, today's the day, and we're at highs, oil up $2.
Yep. Big move. So just taking advantage of the move.
Big move indeed. Yeah.
Awesome.
Yeah. Quick one. That's a week's worth of bagels.
Yeah.
Yeah.
Someday, dare to dream. Dare to dream.
Nikki, what are your plans for the weekend? Are you training? Because you're gonna be like, I'm not trying to throw shade, but your activity level is gonna increase by like orders of magnitude of like 10x next week. So
why is he doing a 40-yard dash or something?
Well, like if he's gonna hike Zion National Park compared to popping some zins and hitting a parlay.
Hey, whoa.
There's a difference.
Whoa, this is peak male athleticism right here. Okay, this is peak man. Okay, I'll be just fine. Lots of golf, maybe some hiking. I'll be okay. I actually thought you were setting me up for the Tasty Olympics that you've been trying.
Oh no, we're gonna do the Tasty Combine before you leave. We've already got that established starting next week, so tune in for that.
That's what I was getting at. Yeah, that's good.
I don't know if I'll be available for those events. The recording aspect worries me a little bit.
Come on, dude.
You don't want to be running like Dave Portnoy.
Yeah, I don't want these out there. I also don't want to see...
I need to hit a level for views, likes, engagement, shares. Like someone just eating it in the hallway, pulling a hammy. I hit my numbers. Your girl gets a bonus.
I'm a little afraid because when you watch a video of yourself running or doing anything athletic, it's far different than what the mind perceives your athleticism in the moment, right? So, you feel like you're a superstar, and then you watch it and you're like, ooh, that is.
So just do what the influencers do, Nikki. A lot. Just put on a tight outfit and point your ass at the camera.
Oh, is that the views you want? Is this where we're going?
Look, a number is a number. Likes are likes.
That's true. I've done it before. It's okay. Oh my God.
I can't wait to see this. It's going to be good.
You're part of it too. You think you're safe? If I'm doing the Olympics, you're doing the Olympics.
It's team bat. I'm the coach.
Oh.
No, we have a senior division, and it is you, it is you, and it is Marty, and it is Pete.
Marty's just getting off of. I think Marty had ankle surgery for like a year and a half.
Yeah.
I mean, Marty's not. I don't want that hanging over me.
No.
I will then substitute Clink for Marty then. Clink has the size. He's got size.
Yeah, I could see Clink good at like a shot put. I think Clink I would take for the shot put. Marty, if he had
Marty used to have wheels. Marty
would have wheels, but he's on one leg. So he probably is still the favorite technically on one leg. But if he had two, he'd be a runaway favorite. I don't know if I'm taking Pete in really anything.
He's got hips, knees, ankles, problem, knees and toes.
Yeah. Oh
Pete's the bionic man. So
yes, that's true.
There you go. So
yeah.
I know, but what are you doing this weekend, Nikki? Anything fun?
No crazy plans. Got some plans with my buddies on Saturday, and that's about it. If it's nice enough, go hit some golf balls. Maybe go to the Dome. Who knows? You
love that Dome. That's cool.
I mean, what else do you do when it's 30 degrees and howling wind outside?
Facts.
And there's no sun. So I got to prepare for next week, my golf trip. So, I got to get my swings in.
Yeah.
So that's my big plans.
Wear sunscreen.
I always do wear sunscreen, but I do like one application because I got to get that glow, I gotta get that beautiful. Then use a bronzer, honey. Don't get cancer. No, it's okay. We'll be all right. How about you, Bat? What'd you get up to last night? Sad. Now that Vinny's driving and everything else, he drove himself to what's going to be probably his last practice for this hockey season. But don't worry, we're 2 weeks away from spring hockey. Oh God. Yes. Oh my God. So the hockey reports will continue going on. So don't worry about it. Mm-hmm. He's reporting from spring training in Arizona. Yeah. Yes, he's going to drive himself to those too. Your days are, I know. So do you have like a dash cam? Are you like reviewing the footage of him driving somehow? Or are you just taking his word that he Oh, that would be good. That's an excellent thing. I could just put in a fake one. I probably got like an old computer, like clip-on camera.
I'll just put that in there and tell them.
Real ones are so cheap on Amazon. Like you could get it like for so cheap on Amazon right now.
I know. But I bought him a 3-row vehicle so that there could be extracurricular activity. And I don't know if I really want to film all of that. So I
was talking about outside of the vehicle.
Oh, outside, facing out.
Like pedestrians and women with strollers.
Yeah, just to make sure you have. Yeah, that is a good idea, Vanetta. That is a good idea.
It's not bad. I'm not gonna lie. It's not bad. I mean. And then he can do Ubers and stuff like that too on the side. Like, he could become like a Door Dasher or something. It'd be good.
I'm just saying it wasn't even, and it was a while ago, but when I was a pharmaceutical sales rep, like my company car had like a tracker in it. And so it knew, where I was going, if I was going to doctor's offices, how fast I was driving and all that. So,
Vanetta in the pursuit of happiness.
Did we tell you about the new tastylive tracker that we were?
Oh, please don't make us bring back Where's Bob? Please. Please.
That was good.
Yeah.
Yeah, but Nikki, how glad are you that like Life 360 didn't exist when we were growing up?
Yeah, that is good. I mean, we were pioneers in this space. The Where's Bob was the original Find My Friends.
Yeah. It was.
That's so funny. Anyway,
that Life 360 is good though. I remember when, we would try to see where Vinny was, and they would show him in the middle of the street on his bicycle, and then I would say, "Did you ride in the street today?" And he'd be like, no. I go, really? On Lake Street between...
You're like, oh, that's really interesting.
It's pretty good. I'm not going to lie.
Oh, my God.
It has its place. Definitely has its place.
So good. Well, you can keep track of us today because I'm about to tell you where we're going to be. But on this fantastic Friday, you made it. Hopefully you are surviving the week. Hopefully if you're on the East Coast, you have power now and that you're kind of trying to dig out. Just brutal numbers, man. Like, yikes.
Crazy.
Brutal numbers indeed.
I know. So, but hopefully wherever you are on this fantastic Friday, you are, you're safe and warm on this wonderful day at the top of the 8 o'clock hour. We got the weekend stocks with Jamal in the house, recapping the crazy week. We're going to have PPI today. NVIDIA had earnings, had some other like little baby kind of tech earnings. But Jamal is going to break it all down at 8 o'clock today. Then 8:40, we got Fast Market. We love audience participation. This is where viewers submit their trade ideas. Volatility kind of is back.
It's back this morning with a vengeance, flirting with.
Oh, I'm sure. I'm sure. So, yeah, probably going to have to reconfigure maybe some of the trades that came in yesterday. But the bat to professionals, and they're going to hold it down at 8:40 for Fast Market. And then 9 o'clock for Market Measures. Does SPX respond to IPOs? Ooh, what's that?
It's an interesting one, and it's very timely because, the rest of the year we have a ton of IPOs coming out. You've got OpenAI, Anthropic, SpaceX, Stripe, maybe. But we're going to look back at past IPOs going all the way back to even the .com bubble and seeing if those days, the day before, day of the IPO, are any different than just an average day. So it kind of gives you an idea of like, what's the initial reaction? Is it a buy the rumor, sell the news type thing? It's a really cool study to look back at IPOs because these IPOs are probably are the biggest in history market cap wise, but there's some significance to them. So we'll see if there's anything there in the market move of those days.
I don't think anything moved the market as much as pets.com. No, I'm just kidding.
I think that was one that was on there. I think and eBay was on the list. There's a couple names that were pretty interesting that I was like, oh my God.
Yeah, that's a blast from the past.
Yeah, Yahoo, Amazon, eBay, and iPet, which I think was pets.com.
Yeah.
That's the .com basket that we're looking at.
That's so funny. And then live from the trade desk at around 9:20, we got Quentin Q in the house, counting down all the top trending tickers over at Tasty Trade. We have not informed him of his participation in the Tasty Combine.
But on a serious note, I think we have to have representatives from each side of the business because
100%.
I think the risk of injury, the overall health insurance premium that would increase for the company as a whole, if it was a company-wide competition, I don't know if that's worth it for us.
It'll make it interesting. It'll make it for an interesting way of talking to the insurance company. Says, yeah, we were at the tastylive Combine.
Yeah, yeah, we have 4 ACL tears. We have a couple tore biceps.
And they're like, who is this marketing girl?
Yeah.
And meanwhile, my ass is in Mexico.
Yeah.
Because I hit my numbers, so
there you go.
Adios. That's funny. I love that for me. Anyway, let's get this Boeing on the going. Yeah.
Let's do it.
Our leading story, breaking news,
coming
across the wire. Our leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's February the 27th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for
the news?
Ready.
So the S&P 500's rolling 30-day trading range is at its lowest level since October of 2018. As we coined, actually you guys coined it, we are violently unchanged. Software stocks have sunk, but defensive names, including consumer staples like Walmart and Costco, have rallied. But despite all the chaotic moves, the S&P is pretty much steady. It was trading only marginally above its October peak. That was at Wednesday at the time. How much longer do you think we're going to do this?
Oh, I don't know, but we're still doing it, right? I mean, even S&P's down 45 handles, and NASDAQ and the Russell being the weakest, down full 1%, 30 handles. So it ain't over. Last night looked a little complacent until the S&P started selling off, and right now, with volatility, /VX 2075, just rounding there, more of the same. And you know what that leads to? It leads to more scalping, Nick, and that's what you've really been doing. When you have a 20+% vol, and it's amazing how we keep getting just at that 20 vol, going under it by a skosh, and then coming right back, as the market has done this too. But when you get a 20+ vol, you get extremes on both sides, and that's what we're seeing here in a fairly tight range, as you just outlined. I don't think it's over. It doesn't look like it's over by any stretch of the imagination.
Yeah,
Nikki, what are your favorite strategies in this scenario?
So the scalping has been amazing because you've had just two-sided action basically every day. I mean, you've had times where you can sell them. You've had times where you can buy them. I mean, we've pretty much finished in the middle of the range. I was actually talking about this yesterday with Mike. It's like, the hard days are the ones where you just trend in one direction and you just kind of sit at the bottom. When you have days like this where, you have a sell-off and they get bought back, you're getting, or if you have a rally and it gets sold, you have opportunities not only to scalp, but to take positions off and kind of massage your positions that you have on. So it's been a really good trade. So that's been one of the keys to this year so far. The other ones have just been, kind of getting a little bit directional, legging out of, in that same vein of scalping. The way you do that with options is like you put on a strangle and, you're in a software stock and the stock falls out of bed and you just kind of leg out of the calls and lean a little directional with just the short put. That kind of adjustment has been, fruitful.
And all 3 of the 4 indices are right at their lows from yesterday, which was fairly significant down day until we rallied. Only the Dow is below that. The Dow was strong yesterday. It's down 400 and change below yesterday's low.
Yeah. And if you're afraid of the naked premium, which I don't blame you for, given the market volatility and the swings that we've had and kind of just the sentiment overall, look at some calendar spreads or diagonal spreads. I mean, there's a lot of volatility in the front of the curve in most stocks. So, that sort of trade will mitigate a lot of your tail risk that you have on either side. If there's a crazy move to either direction, that sort of trade is going to be a less painful way to trade around what has been a pretty violently unchanged market.
Great point.
Concerns about AI's potential as a destructive force on the U.S. labor market have contributed to a rally in the 10-year note and 30-year bond, sending their yields to the lowest levels since November. Do you really think bond yields are being tied to fear over AI?
You know what? We're gonna only Vecchio knows. Bonds 118.08. They're up 12 ticks. They're just a skosh off of their highs. As bonds go higher, yields go lower, as you just pointed out, Bonetta. Yeah. I mean, I don't know. I mean, listen, they were 170 a few years ago. I mean, this is. Who knows? I mean, although
this is the first time we've got above 118, though.
Yes, and
in quite some time.
Home mortgage rates are at
below 6%. For the first time in I think since like 2022. So
that's the news. Like that's how public, I believe, takes advantage of it.
Yeah.
What's the loan rate you think I could get on a boat right now? No, I'm just I'm just kidding. But come on, buy me a boat.
Are you 16?
Oh man. Hey, Canada is warning, their trade minister is warning that the United States-Mexico-Canada agreement could be subject to annual review and that uncertainty could be the objective of the Trump administration. I guess the trade leaders of the three nations are set to meet next week. Canadian Prime Minister Mark Carney has set a goal for Canada to double its non-U.S. exports in the next decade. Could this add even more volatility to the market?
I mean,
maybe
21. I don't know if this volatility. I mean, we got war still in the Ukraine. We got a war now in Afghanistan. I mean, we got skirmishes between Canada and the U.S. talking.
Don't forget Iran.
Yeah.
I don't know. I don't know if this has anything to do with volatility in the market itself.
Let's talk about the dollar, though, and we can talk about the peso and the loonie or other currencies like the yen and the euro.
Yeah, euro up small. British pound is up unchanged, maybe down small if you're looking at that. The Japanese yen, I know there was some PPI-like numbers or something. I forget what it was, but anyway, there were some Japanese numbers that came out. Their dollar's a little bit, the yen's a little bit stronger there. And just since you mentioned the Canadian dollar /6C is up small, they're all basically unchanged.
I do want to point out silver up almost 4% maybe this morning.
Yeah, huge move.
Almost 5.5% right now. Silver trading at 92 and change, 92.6. Yeah, Ivy ranked 67 in there. Yeah, go ahead.
Do we play into that gold silver ratio again?
You know what? I looked at it. It's about 56 3/4 right now. It's about 57 and change. I think we sit for a second, but you are right. You do have a huge move here between the two, and he got silver up 6% now. So it really is a heavy silver trade when you buy 2 gold and sell 1 silver, when you're using the small micros, the way that we are. You've got silver about 10 cents, 15 cents off its highs. I guess so. Why not?
Yeah.
Getting to the spate of earnings from last night, CoreWeave shares slip 8% as quarterly revenue guidance disappoints. The AI-centric cloud infrastructure provider, how many is that on a bingo card? They introduced object storage service during the quarter. CoreWeave brought in revenue $1.57 billion versus $1.55 expected.
That's our gold silver ratio, by the way. I just put it
on. put it on approximately at 56.70 or something like that, just to give everybody. Remember, it was trading about $1,500 higher than that when we were putting it on or looking at it.
Yesterday,
yes.
And it got up to 60-ish yesterday too. So
it did.
CRW. I'm so sorry. PPI is going to come out today. I forgot to mention that at the top of the. I'm so sorry, but it's going to come out. So
yes, 4 minutes.
Trading at 85 and change, down from 97 and change. That's a big $12 lower. CoreWeave will certainly take a little bit of a hit here.
Yeah, I did a put ratio spread. I'm long the 75 and short 2 of the 65s out in April. I did it at like a 40 cent or something around that. What I do, 40 cent credit. It'll probably be $100, $150 loser on the open here, but you got 49 days to go till expiration. Break even's down at 55, so that would be kind of the low.
Yep, you'll probably sit.
Yeah.
Real fast, in other earnings, Dell, the company expects AI server revenue to grow 103% to about $50 billion in fiscal 2027. The company says it has more than 4,000 AI server customers, and they forecasted annual revenue of $138 billion to $142 billion, which was above analysts' average estimate of 125. Dell shares are outperforming its peers HP and Lenovo.
Yeah, big 10% move in there, up about $15, $16.
Yeah.
Their revenue hit a record $33.4 billion for the quarter.
Yeah, well outside the expected move, almost double the expected move here. From the weekly expiration, if you look at the at-the-money straddle, this will be a good one for us too. We got a crab trade here. It'll be interesting to see what happens with volatility because I'm short the options in the March monthly, so might not move as much, but it should be a good trade here. But yeah, this is a huge move. It's part of the government portfolio. I mean, he's Michael Dell is funding the Trump account, so you can't fade this one.
No. Gotta get in there.
Yeah.
Did you know MP Materials had earnings?
I saw that on my list after the close, but did not do anything with it.
The shares did end up falling. They posted a net income of $9.4 million or 5 cents per share. They process and mine critical minerals in California, and it was added, like you said, to the government portfolio. So they posted revenue of $19.9 million in magnetics revenue and $8.4 in adjusted magnetics profit.
Yeah, it's down about $1. Not doing too much of anything. That's well inside the expected. Ivy rank was only 31 in there.
Sure. Just real fast, Intuit expects profit below estimates on higher marketing spending during the U.S. tax season. Shares fell around 4% in extended trading. The third quarter is typically Intuit's strongest, but again, everything kind of just came in line with analysts' expectations. So.
Into it, no, been into it at all. Once a $600+ stock, and I'm talking about at the end of last year, is now trading $380, down $15. Not into it.
Yeah, not a good move, but I mean, a relatively small move to the expected move. You had about let's call it a $30 expected move through the end of this week, so it's only down about half that. I think that's been the story with a lot of these software names is like the bad is already taken out of most of these. I mean, if you look at like a CRM, Snowflake, what was another one that had earnings this week? Those two, started basically flat, down small, and then kind of rallied through the rest of the session. It seems like we've discounted the AI Skynet takeover, at least to some respects here. Some of these
CRM's down $8 since you mentioned it. I mean, the market's down almost 60 handles right now. It's down 60 handles. I
don't know if your number's out or not. So sorry.
It has.
It must have just come out.
Even the S&Ps dipped a little bit. Volatility expanded a little bit. Bonds didn't move. They're 118.06, so they didn't move too much. Even the S&P sold off about 10 handles. They've recovered those 10 right now. They're still down 55. NASDAQ's down 200 and change. The Russell is the weakest of the group, down 1.5%, down 40. on that. Oil is now up $2.33, making a new high. I don't think it has anything to do with PPI, but there it is. And gold silver ratio is hanging in there.
Silver came down about $1 though.
Yep.
So big move.
Mm-hmm.
AI chip designer Broadcom says they expect to sell at least 1 million chips by 2027 based on its stacked design tech. Part of you guys are doing a new series for social media called Split Decisions. And you talked about Broadcom.
Yeah, I liked it. I think we both liked it a little. You scalped your puts, didn't you?
Yeah, that was it worked nicely. It was good timing. But we sold the 250 puts, I believe it was.
Yep.
What was it?
AVGO traded down to 307 yesterday, back up to 321. It's now back down to 313, down $7 or $8.
Yeah. So maybe we lag back into that.
Maybe
sell those puts out again.
Yep. Ivy ranking there is 61. Earnings coming March 4th. Even the S&P down 62, trading at or near their lows.
Nice work if you can get it.
Mm-hmm.
Hey, Block shares soared as much as 24% as the company slashes the workforce nearly in half. Jack Dorsey, the company's founder, took to Twitter to explain all of his reasoning for doing things. He's like, look, AI has become more efficient. He's like, this isn't because the company's in trouble. It's because we've gotten better at doing things. And then he laid out like what all the employees were going to get and their benefits. And I was in everybody's business. So they're going to get 20 weeks of severance. 1 week per every year of tenure. They're going to get 6 months of health insurance plus $5,000 to help with any incidental expenses.
That's nowhere near what's coming this way, Venata. So don't have any ideas, okay? Let me tell you, you get a kick in the tuchus and then you're out. That's it. That's all you get.
XYZ, I'm going to help both of you guys up $10, good 10% move plus in there off of its lows it was making, which was around just under 50-ish. It closed at 54. It's looking at 65 right now.
I will say, he can say AI all he wants. They had like 12,000 employees. I mean, there's a lot of these companies. There's probably a lot of bloat, and for a long time, it's been just cheaper to like not get rid of people because you don't get like sued. The what?
It's cheaper to keep her.
But no, you're right, Nikki. The company had 10,205 employees in December 31st, 2025.
Yeah, there's other companies like I think DocuSign has something like 50,000 employees. It's like
it's all in the cloud. It's like
it's probably a little inflated. Like there's probably a little bit of bloat across the board. I don't know if this is the doomsday situation that's coming for us, but at least a little bit.
Anthropic has rejected the Pentagon's best and final author on Claude military use, calling safeguard language an escape hatch. They said that any compromise would cut safeguards and would allow the U.S. government to use Anthropic for mass surveillance or to create weapons the world has never seen. So they rejected the offer to resolve the standoff over military use of its AI model Claude. So the Defense Department may strip away any contracts that had been offered to Anthropic. So the company could lose the $200 million defense contract it signed last July. And it has the status as the only AI company operating on classified Pentagon network. So we'll see what happens. But the deadline's today.
Yeah, everything's moving a little fast right now. So
yeah, it is.
I think there's going to have to be some guardrails put in. It's just I hope our government is up to the task of this because it's quite large.
Yeah. In crazy news, because I was like, what is Meta doing? So the news finally came out. Meta internally failed at building out its own AI chip. And so that's why the first part of this week, they're like, oh, yeah, we're partnering with NVIDIA. Then the next day, they're like, yeah, we're also partnering with AMD. And then yesterday, they're like, yes, we have now signed a multi-billion-dollar deal to rent Google AI chips. Girl.
Yeah, they're all over the place. They don't know what branch to hang on to. Meta's down $10. Google is basically unchanged with the mini S&P down 62 and Nasdaq down 250 here. It's down $2.
But think of how much money they've wasted, not wait, but like had to spend to realize that they can't build their own chips, and now they have to pay like retail, you know, for these chips from the three biggest companies. Like, I would like a word with you if I'm a Facebook shareholder.
Yeah, but it's also on the same light. If all these companies are shelling out billions and billions and billions of dollars, there has to be something there. Like these are the biggest, most successful brands and companies in the world, and if they're seeing something that justifies spending all of their free cash flow and then some, you know, for years to come, this has got to be world changing. I mean,
they couldn't even build a Meta figure that had legs in the multiverse, so whatever.
Yeah, but that stuff but that's not like world changing. That was like a couple $1 billion. If Amazon
but I'm saying they couldn't even do that in terms of like technological development.
Yeah.
Like internally as a company.
Yeah.
If they thought they could build like the best AI chip ever. Okay.
Right.
Yeah. Things are changing.
Yeah, they are, right? And fast.
Speaking of eBay is laying off 800 roles, or around 6% of its workforce. The online marketplace says that they too have been investing heavily in AI. And last week they announced they're going to acquire Etsy's resale app Depop. But the job cuts are occurring across the company. Strategic priorities.
Yeah. I don't know about this. I mean, eBay. When was the last time somebody used eBay?
I use eBay.
Do you really? eBay
Not like every day, but I bought a Thunderbolt drive on eBay and I was very happy with the price.
I'm curious. What's a Thunderbolt drive?
I'm running my Mac Mini here and some other computers, so I can switch between computers with my external devices, and using it for my uploads for my photos and videos that I process as a hobby.
Did it come from Changshu, China?
No. It's a known drive, but they're expensive. But I found a new one, and it works. I did not get scammed.
Sweet. All right. Well, eBay unchanged. Place your bets.
And I bought a piece of luggage from eBay. Like I needed like luggage to take like camping gear with me when I flew out in December.
Oh, don't buy too much. I might have some camping gear on the cheap.
and it'll be brand new. It'll be never used.
give me till like September. I have a feeling.
Gold. I'll take it.
It'll still have the plastic on it.
No, you need to send him in the backyard. He's got to camp out in the backyard.
I have an igloo up. He can go in the igloo. I told him this. He can go out there.
You should be like, hey, you know, like when you're out in the woods, you know, you might not get cell service either, so you don't get your cell phone. You get to go out.
And you might not get hot chocolate brought out to you by your mother.
Yeah.
Well, and you can only have 2 beers.
Yeah.
You'll see, mister. Hey, smartphone market, this is wild, is set for the biggest ever decline in 2026 because memory prices are so expensive. It's going to sink to a more than decade low in shipments because surging memory chip prices are driving up device costs, and people are like, you know what? The phone I have, it's all right.
It's all right.
Yeah, until they nuke your battery from the cloud.
It is amazing how they can do that.
What if your phone costs like $3,000 because of the chips inside of it, though? Like, I don't know. Let's go back. Let's bring back pagers. Let's bring back
more importantly,
pagers. Landlines. I want a landline.
Yeah.
We all got rid of our landlines. More importantly, do I do the update to iOS 26.3?
No. Don't do the update.
No,
don't update.
I don't like the last update I did. Am I going to like this? I might like this one better. I think I'm stuck. I mean,
you might be stuck. Yeah, don't. Yeah.
Oh, all right.
Well, what's Apple doing this morning?
It's been a little bit of a bucker.
Yeah.
Kind of doing its own thing. It is lower, but it's lower by about $1 this morning. I mean, everything else is down, 1%, 2%, 3%, and Apple's basically unchanged.
All right.
Down $1.
Hey, massive move last night, and that maybe this is the only stock in the green, but Netflix is the loser of the deal for Warner Brothers. Stock was up. I saw it up 9% in after hours. So Paramount was the highest bid. They were able to like reopen the bidding because it's the president's son-in-law. I don't know. And so they came in with a $31 per share offer, and Netflix was like, "Yeah, we're not going to beat that." So they agreed to pay the 2.8 billion. Paramount agreed to pay the 2.8 breakup fee that Warner Brothers would owe Netflix.
Billion.
Yeah, 2.8 billion.
Billion.
Billion. Yeah, that's what I said.
Yeah, I know. I mean, I just want everybody else to know. I mean,
yeah.
This is not like you're.
That's why Netflix stock is up. They got $3 billion, and they don't have to get saddled with whatever this mess is.
Yeah, this is not your government slapping $100 million fine on somebody that does something horribly wrong here. This is 2.8 billion.
Yeah, it's a huge number.
Netflix trading 91, significantly off its lows of 75, significantly off of its highs in the 100 plus in Netflix. So it's on its way, 91 and change. Definitely going to be a bucker here today. I think this move is going to be muted because of the market action.
For sure. It's going to be good for us, though. Finally getting bailed out a little bit.
Yeah.
Caesars Entertainment is weighing takeover offers from several potential bidders, including a bid from Texas and gaming hospitality billionaire Tillman Fertitta. What? Caesars is also, has received an offer from Fertitta Entertainment, the group behind the Golden Nugget.
Yeah. What restaurants he owns? Like, doesn't he own like? Is he like Texas Roadhouse, like those ones too?
I will look up.
I feel like he owns a lot of like the fast casual, like off the highway restaurants.
He owns Maestro's, Morton's, Bubba Gump Shrimp, and Saltgrass. Oh, I like a Saltgrass Steakhouse. And the Houston Rockets. He owns the friggin' Houston Rockets.
I thought it was lower tier than that. I'm surprised.
Yeah, no, he fancy.
So those are good ones. Morton's. I mean, that's a staple. Like if you ever get divorced again, Dad, that's probably where you'd go.
Your Uncle Barry just sent me a picture in booth 1 at Morton's back in the day when booth 1 really meant something.
Yes.
Of all of us. Yes, that was my booth back in the day. I owned that booth. That was my
well, his 275-foot yacht, the Boardwalk, is currently listed for sale. He is regarded as the world's richest restaurateur.
Wow.
I am going to do some digging. I might send some emails today.
There you go.
Las Vegas Sands kind of on a discount if you're reading this.
No, Caesar. C.
Oh, Caesar. Sorry, I was looking at. Oh, gotcha.
CZR.
Yeah, CZR. My.
It's bouncing a little bit. It's up a little bit on this news.
It was up yesterday more than today. Yesterday it went from 21 to 24. So yeah, I guess so. All right.
In a post that went instantly viral, Tampa International Airport took to Twitter yesterday and said, "We've had enough. We've seen enough. We've had enough. It's time to ban pajamas at the Tampa International Airport." After successfully banning Crocs, they now have their sights set on pajamas. I thought this was real. I guess they said that it was a joke. I don't know what to believe, but has anyone reached out to Dr. Jim?
Oh, he's in shambles, I'm sure. He'll never leave.
You know what? Dr. Jim has got this taken care of for a long time. He saw this coming. That's how good he is. He walks into the airport dressed for success, ready for a meeting on stage and his best foot forward. Then he goes into the dirty, disgusting bathrooms.
Yeah.
Changes into his flip-flops and shorts and comes out in his pajamas like this. So I think he'd still be able to get around this rule if they do put it out. You can't get Dr. Jim. He's too good.
He's too smart. He's too smart. He's a doctor.
He's
a doctor. I mean, come on. You can't fool him.
Come on, Vanilla.
Another slop bowl reported earnings yesterday, but it wasn't super important, which is why it's at the end of my stories. But Sweet Green reported disappointing sales, offering another reality check for restaurants after Cava saw a nice rally. The salad chain is currently testing new wrap sandwiches sandwiches offered at lower prices as diners stay selective on spending. They forecast another year of falling same-store sales. Full disclosure, I eat 1 to 2 sweet green salads a week, but I do not pay for them.
They are an expensive salad, aren't they?
They're like a $20 salad.
Yeah.
Sweet greens, not so sweet of a stock, flirting with $5, $5.20, down about 80, 90 cents. Kava, which caught itself a bid yesterday and the day before, is down a little bit, down around $2, well off of its lows of 65, trading 82 and change.
So you need 4 shares of sweet green to buy 1 salad. Make that make sense.
I think I'd rather have the salad.
I know. Nikki, I got this for you. Doritos is adding protein to their chips. Protein is everywhere. It's in Pop-Tarts. It's in yogurt and cottage cheese. Why not in Doritos? Protein nacho cheese and protein sweet and tangy barbecue. Each serving of Doritos protein has 10 grams of protein. So they use milk powder, casein, as the protein source. So put some protein in ya.
There you go. Why not?
Vanetta, we learned a lot about you and protein yesterday. Do you eat this?
Protein chip, Dorito proteins. I've tried I know where you're trying to go. I'm going to pivot out of that because I'm old.
Yeah.
But the Quest protein chips, I mean, they're good. I'm just worried about
Quest protein chips are not good.
They are good. It's a lot of chemicals. It's a lot of chemicals. So
they're not good.
I stick to my Greek yogurt.
You're better off.
I do like a Bear Bells protein bar, though, so that's what I like. Hey, finally today for my viral video of the day. Every Friday, I like to do a little something I like to call Trader Taste Test, where I scour the internet for food for traders. And this one, Nikki, made me think instantly of you. I don't know if it's even going to be cold enough this weekend, but if it's cold where you are this weekend, you might enjoy this. Watch this.
Why would I eat soup in a bowl when I can eat soup in a potato, leaving no evidence behind, making my grandmother proud that I finished my plate because there is no plate? This is a cheddar broccoli twice baked potato, and even if you're not going to make the potato part, the cheddar broccoli soup is a next level flavor bomb. Back to the potato. It gets baked, hollowed out, mixed with bacon, onion, and garlic powder, some sour cream, chives, pepper, and salt, and some soft butter. That gets placed in a piping bag or a Ziploc
you
bag.
You have a piping bag, don't you, Nikki?
For the cheddar broccoli soup,
you can make one with
garlic and onions,
no
with flour, some evaporated milk, and chicken stock. Then I mix in the broccoli and a ton of cheddar cheese.
Veggies.
And for some spice.
So it's healthy, basically.
Let me know what other things I should stuff in a twice-baked potato. Nailed
what are your thoughts, Nikki?
Why would I eat soup in a bowl?
I like a baked potato, but I'm not a baked potato guy. It's just a little too heavy. There's a little too much there. A broccoli cheddar on occasion, good. Just a little too much. Too heavy.
I can't defect from the chili baked potato kind of thing. So
you can put chili in a baked potato. That would be good.
Yeah, I like that.
I would go that route. Yeah, this one a little too starchy, a little too heavy.
Right, especially before the combine. So you gotta.
Yeah, I'm preparing. I'm just trying to, limit my intake.
Especially before, the S&P's down almost 60 handles. He's got a symbol, and depending on where you buy back your silver contract, you might have about $450 to $500 on that rent. Around $400 on your gold hasn't moved. Well, no, excuse me. I'm looking at MXP. I apologize.
Yeah.
Basically a scratch on that trade.
I'm a scratch on the ratio. Yeah.
My apology. Never mind. You stink. But Vanetta's great. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We got Confirm and Send. And let's talk more about this market because we've got a mover this morning. We'll be back in 90 seconds. Tasty Live. It's moving.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. Well, with confirm and send, but before we do, let's take a quick look at the market. Even the S&Ps are back also, son. Back to close to that 6850 where they've been churning and hanging out, going back and forth between 6850 and 6950, violently unchanged. It seems like we hit both those numbers both days. We're down near the lows from yesterday. NASDAQ down 230 and change, and the Russell's, your weakest of the group, down 37 on a percentage basis, about 1 1/3. The Dow is down 510, trying to gain a little bit momentum to the downside like the Russell. Volatility, that's up significantly, up a full dollar, 5%, flirting with 21. Let's key on that and see what happens there. This is back near the high ends, as every time we've gotten to the E-mini S&Ps and the rest of the market near their lows, this volatility has stayed up and stayed up significantly. Bonds are up 11 ticks. They didn't move after the numbers or whatever, but here we are at new recent highs at 118.06 after trading up to 10. Bitcoin, we'll look at that, down $1,500. It was one of the weakest last night when the E-mini S&Ps were down like 30. Bitcoin was down around here before it caught a small little bid, traded into the 65 handle. It's 66.2 right now, about $1,000 over its lows. Ethereum under 2,000 again. How quickly things change, back into this range here for Bitcoin and Ethereum. Oil up big, up $2.45, just a skosh off of its highs, up almost 4%, 3.25% on Afghanistan and Pakistan war news. Sad there. Gold catching a bid, up 39, up just under 1%. And when you look at silver, that's the big mover. After trading over 93, it's 92.5, still up 5.5%. Silver catching itself a nice bid here in the overall market. IV rank of 67 is good in there. IV rank of 58 in gold is lower. I would expect that IV rank to expand and expand nicely in both of these products if you're looking to take a look at trading anything with them. Net gas up 5 cents near its lows. Netflix is the upside news. $2.8 billion for not taking Paramount to the dance, trading 92.84. It was higher than that too earlier this morning. I guess I got to put NVIDIA back in there because NVIDIA had a day of earnings yesterday where pre-market it was up $5 to $10, ended lower by $10, down just under 85. It's flirting with 82 right now, down another $2.50. That's all I got right now. Just about every stock I've looked at has been lower pre-market.
Yeah, it doesn't look good today going into the weekend. Weekends have been where the volatility comes in. So, I have an order to buy the what?
So that's it. So you make a great point here before we get to confirm and send. Volatility usually contracts into the weekend when it's a complacent inside the move. So I would expect no matter what the E-mini S&Ps do today for some time, especially early in the morning, if they rally back to only down 30 or 35, /VX is going to stay bid right there.
Yeah.
And may stay bid all day long because Here, if you're taking on risk as a market maker or liquidity provider, are you gonna let somebody out for the weekend? You got 2 days of
no, not with the way commodities are moving too. You got oil, almost at 70 here. We're at 67.75. It's up $2.52, the high of the session. Gold and silver are nearing the higher end of where they've been. I mean, they're going to keep vol bid for sure. There's just too much going on.
I looked earlier. I didn't quote it. I apologize. But you had /ES with about a $45 expected move. You got almost a $49 expected move here with about a half an hour before the opening.
Yeah, I'm going to make my bed and put in some working orders to buy the E-minis at 68.50. So I have those in right now. That would be a new low. 51 is the low for today. 68.50 has been your. I'll zoom out here a little bit. 68.50 is right where we are, right around here. That's been that congestion area where we've kind of pierced it, gone through it, but. Ultimately. Oh no, I actually, I'm a chartist now, so I actually put the lines on my chart. I figured out how to do that. So there it is. I mean, look at that.
I had so much hope for you.
It's a 200-point range right there. It's nothing.
I've had so much hope for you. I have had so much hope for you.
I know. So you're such a disappointment. That's 68 and 7.
You're such a disappointment. But go ahead. Confirm and send. Let's do it on this February 27th, the last day of the month. Well, working day of the month.
Yes. You think that has anything to do with the movement today? Think a little rebalance after all the earnings that we had? NVIDIA, kind of a big day in NVIDIA. No, you don't buy that? End of month.
I don't. Maybe there's some rotation. I don't think it has anything to help or do for retail.
I agree. And I think the move in the Russell, because the Russell was actually the strongest of the group yesterday, it was up about 0.5% into the close. And you got bonds, rallying today, rates coming down. You expect that, the Russell relative to everything else would probably be a little bit stronger, and it's getting killed today. So
it's been such a back and forth. If the Nasdaq's the leader, on the close, you could sell that and buy the. I mean, it's been a back and forth. I haven't captured any of that profit, but it sure looks good intraday.
Yeah, it's more of the choppy dispersion, as they've been saying.
Yep.
The violently unchanged.
Violently unchanged.
All right, let's do it. Confirm and send. For a portfolio of 20,000, what is the appropriate amount of Vega to have on without becoming too vulnerable for vol expansion? According to Dr. Jim's portfolio guidelines, he likes to use 0.1% to 0.5% of the net lick of the portfolio beta-weighted deltas in theta. However, I haven't found a guideline for Vega.
Yeah, and you won't find one from us. I mean, it all takes care of itself. It's like almost saying, I sell premium and I sell options, so I don't have the right to exercise or not exercise or put somebody stock or give somebody stock. If something's in the money or anything else like that, how do I mitigate that risk? Well, you roll at 21 days and you're going to 99.95% of the time, it becomes a non-event. You got more of a chance of walking outside and getting hit by lightning if you roll at 21 days. Now, the same thing with Vega. If you keep everything the way Dr. Jim has in his guidelines there, which are the Tasty Trade Tasty Live guidelines there, you don't ever have to worry about Vega, because you worry about Vega on size of your positions, keeping your positions small.
For sure. And the biggest
strategy diversification too. I'm sorry to interrupt.
Yeah, the reason here is that there isn't a common denominator. So when you have beta weighted delta as the denominator is SPY. So everything is weighted towards SPY, and you could put it all together and use a common denominator. With theta, you have time. And assuming you're in the same amount of time for every one of your trades, your theta is a number that you can group everything together. That skews a little bit when you start to change durations and you're doing 0-day stuff or 1-day stuff or weekly stuff. Then your theta gets a little out of whack. But for the most part, theta, the aspect of time is the common denominator, and that's pretty similar across the board for most of your trades. If they're in the 30 to 50-day time frame, it's basically all the same value of time there. Yep. When you get into Vega, it's specific to each underlying, which has different binary events and sentiment and news headlines and whatever. Those are all variables that you can't measure 100 points of Vega in SPY to 100 points of Vega in Tesla. They're totally different positions. And it's the same thing with Gamma, but now that I'm just thinking through it, you probably could figure out some fun way to make a beta weighted Gamma of sorts where, you kind of take the beta of that underlying and the correlation and make kind of a total Gamma risk. But again, that's another one where there's a lot of gray there. There's a lot of assumptions being made. The theta and delta, you can make a common denominator, and that's really the reason.
Yeah.
Cool.
Next one, please. What's your process for reviewing losing trades without becoming overly self-critical?
I don't know. The market is a new beast every single morning. I think it's the greatest thing about markets is that every day is different. We're not accountants in a spreadsheet every single session. Everything, there's new opportunities. There's new things popping off. That's you gotta have thick skin and a short memory in trading in general. I try not to hyper focus on the losing stuff because you're going to be wrong, 30 to 40% of the time to just put a probability on it. I mean, if you're selling 30 delta puts, you're going to be wrong 30% of the time. I mean, it's going to happen a lot. So you have to have the memory of a 16-year-old when you're trading, and I'll explain to you right now. In one sense, you're mad at your buddy Joey, and then Joey asks you to go online to play a game, and you love Joey again, and you're friends. You know what I mean? It doesn't matter anymore. It's the same thing with trading. You get overly critical. You look at it, and you find another opportunity, and then that works, and you're a genius again. I mean, sometimes during the day, and even intraday with the same position, you make an adjustment on delta, and it goes the other way where you could have gotten a better price and been so much advantageous, and you say to yourself, why did I do that? Why did I do that? And then even the S&P's open 50 or 60 handles lower, and you say, I'm a genius for making that adjustment. It may still be a winning trade. It may still be a losing trade. It might be more of a winning trade. It might be more of a losing trade. But at least you did something. Doing something is much better than just standing there and smoking opium. So it's short-term beat up. And you know what? If you have a problem, just send us an email. We'll beat you up. We'll do it for you. You don't have to do it to yourself. Next one, please. What habits separate traders who plateau from traders who consistently improve over time? I think it's kind of a similar question.
Yeah, it is. I don't know. I would say just knowledge. I think I became a much better trader as I looked at more markets to trade, gold, silver, oil. I would kind of value myself as knowing just one market, which was the equity market, specifically more like the S&P 500. Now that I've ventured out, I mean, when you look at a lot of the stocks that we've traded, we trade a lot more NASDAQ stocks. We've traded a lot more as things become in play. Gold and silver obviously in play, oil obviously in play, IV rank high in there. If you don't broaden your horizons, you miss all those high implied volatilities and you're stuck in one scenario. Now, let me back up what I just said. I don't want to play both sides of the fence here. If you've been a 0-day trader in SPX and that's what's been working for you and you're doing really, really well, well, then don't stop. Anything I say shouldn't change anything that you do. But you could think about it. If you're a great trader in SPX, you're probably a good trader everywhere else because it's all the same math.
I agree. And I think, I don't know, everybody wants to find like the one perfect thing. And for me, that's just not how I do this. Like I need to do different trades, scalping, futures, directional assumptions, non-directional. Like that's my kind of prerogative. To your point, if you're an SPX 0-day trader and that's like your bread and butter, I think that's great. It's just, yep. I think it's hard, it's capital intensive. You have to have capital. You have to withstand, big losses. I think that's the case for anybody that's just doing one thing. It's very binary. When you have 20 or 30 positions on, I know where my P&L swing is going to be every day.
Yes.
So some things are going to be working, some are not. Some are going to be bigger than the others. And overall, I know exactly like my day-to-day P&L volatility because I have, neutral, bullish, and bearish trades. If you're just a put spread seller and the market's down 1%, it's going to be a big number. Like, sure. And if the market's up 1%, it's going to be a big number too.
Yeah. Yep.
There's not a lot of variation there. So I would say that as well.
Next one, please. Was that the last one? No.
No, we got one more.
What are the pros and cons of scaling into a position? And if you scale in, do you also scale out?
Yeah, so we do this all day long with the scalping. I mean, I think it's important to have a size that you're comfortable with. Like, let's say you're comfortable with 10 contracts, right? And you can go to 20, let's say, is your max. Starting with 3 or 4 is probably the right thing to do because, after doing this for many, many years, I'm pretty sure my hit rate when I think it's free money is still about a 50-50 shot, especially with scalping. And this is where I'm going with this is that, you don't have to go full boat on the right on entry. I mean, that number of contracts is going to be different between person, but I think it's a good practice to scale in. I think it's also a good practice to scale out. If you get, a little bit too big too, you got to scale out a little bit. So you got to be a little flexible here.
Yeah. Yeah, I agree with you. I would say it's more futures than options related. Yeah. They don't usually scale in and out of option trades. Usually we put it on at one time. If I'm doing an iron condor, 1, 5, 10 contracts, I usually do all 10.
Yeah.
Trading futures and I'm a 3 contract micro E-mini S&P trader. I might do 1 or 2 and do another one if they go lower if I'm buying, sell another one if they go higher. And it's more scaling out than scaling in. A lot of times on the show, you'll say I'm keeping a runner. You know what I mean? That kind of thing where you'll do just some of it. I think when it comes all down to it, like you said, it's probably 50-50.
Yeah.
Good job out of you. I think that was the last one, correct?
Yes, last one.
Good job out of you. Good job out of the team. We're going to take a quick 90-second break. I should do a public service announcement. TLT has a dividend today. It's about 40-ish cents or so. If you're trading TLT options, just to let you know, any of those that are in the money, even if you have a completely in the money call spread, long or short, you might want to look at that so you don't get hit with the dividend. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got your mall this week in stocks,
that's right.
baby.
You bet your sweet boopy we do. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Spin.
We're live.
We are live. You know what that means. We got my man Jamal in the house. Jamal, how are you, my friend?
Oh, fantastic. We're so excited. We're already discussing some of the things that's surrounding this market. But before we get to that, how's it going, guys? How's the weekend? The end of February. We're here.
Good. I think I caught my dad really really at a good time there because there's been a lot of things that have gone down on the hot mics. You're usually a pretty volatile one there, Dad. So I think
you caught me at a good time. I wasn't saying anything really.
He was just getting started. He was just getting started.
You never know what's going to come out of that mouth, so you got to be careful there.
Just keeping it.
You know what? I got to bring it up real quick. The gold medal game, that was fantastic, right? Over the past weekend, that was fantastic.
Amazing.
USA.
We need more of that.
That's about the only thing I watched in the Olympics. I didn't watch any of it. I don't know about you guys, but I didn't really watch much of any of the Olympics.
Curling was on every single day.
I saw some of that. Yeah, it was
curling.
On.
See, you did watch it. Curling was on just about every moment that you turned it on. You didn't watch any hockey, even if you're not a hockey fan. You didn't watch any hockey.
I just watched the gold medal game. That's pretty much it. I am a hockey fan. I like hockey. I don't know. I didn't make time to watch those games outside of the gold medal game. You know what I mean? Like I wasn't like, oh, I got to go check this game out against Finland. If they played Finland. I don't even know if they did. Things like that. Like I just didn't
recommend one thing to the Olympic Committee if they're listening. And if there's anybody that's on the Olympic Committee that watches Tasty Live, I'm sure there is. But please. Mm-hmm. Sunday morning, 7 a.m. game for the gold was brilliant. Anybody who wanted to watch had nothing to do at 7 a.m. on a Sunday. You could watch it, enjoy it, and you had the whole rest of the day after that. You were up You were showered and ready to go. You faced Sunday with some vigor, whether you won.
Yeah, but you can't drink 12 beers though before the game.
Bloody Mary, son. Come on.
There's a way. There's always a way.
To the market environment, just like right now, you're not going to buy premium. You might look to sell premium.
It's noon somewhere.
Adapt.
Do you think people would watch?
Great time.
Do you think people would watch a curling league, like a curling league on TV or something like that?
I got a buddy that's in a bocce league.
I was about to say, let me just be honest, okay? Do you think people would watch a women's curling league regularly? I mean, do you think people would watch that? Like kind of like beach volleyball or something.
I had my granddaughter in my arms who's 2 months old and she was sleeping. So I watched like an hour and a half of it intentively too. I mean, I couldn't get to the remote. And I was home alone. So I wasn't going to move her because she was sleeping. And I wasn't going to risk it because I don't know if she's up, if I could take care of her as well as when she's sleeping. So I found it to be pretty interesting, to be honest with you. Very slow moving.
It is.
But very interesting. The hammer.
Yeah, it is.
The hammer, the last one. That's the money.
Mm-hmm.
It's funny you mentioned bocce ball. Actually, people have made that reference a lot recently about how similar it is. I didn't realize that, but
I grew up watching bocce with the guys in Bensonhurst, the old men in Bensonhurst playing on. Do you know the bocce court is made out of seashhells? Did you know that?
I've never been near a bocce court in my life. Actually, they don't really.
Yeah.
I never grew up in any neighborhoods where they had them.
Yeah.
They imported their seashells from the neighborhood, the old neighborhood of Italy.
Yeah.
Crushed shells.
Wow.
Yeah, well, you learn a little something about everything here.
Yeah,
what do you got for us talking about
do.
this week?
Now, this week has been wild, man. It's the month here is ending basically on a note that I think we've seen for the last, not only this week, honestly, to be several weeks. Essentially, we have tech stocks down. This is actually going to be the worst return for the NASDAQ since March of last year. And then guess what? I mean, financials are actually weak along with it. Make sense of that. But financials and tech have been probably some of the weakest sectors. Nikki and I were on last call on Monday when I was like, this is ridiculous. And I actually sold put spreads in a bunch of different financial names. It actually worked out really well this week. I haven't taken any off, but it worked out well. I mean, American Express, Citi, those names were down big on Monday. And that's kind of been the ebb and flow we've seen. One day we come in, tech stocks and financials are kind of down, and those consumer staple stocks, which are, by the way, are doing well for the month, those have been up. The next day we come in and it's all reversed. Until yesterday. Yeah. Yesterday was one of the few days where we had some of those consumer staple names down a little bit, and then we had tech down on the NVIDIA earnings, which was the big thing of the week.
Yeah, it seems like every day there's a new sector that gets just smoked. I mean, we've had obviously the service, the software as a service stocks have just been killed. You had the cyber stocks, you had the financials that got caught up in the, will the AI agents be using Visa and MasterCard rails, or will they just be using, stable coins and crypto, which gave crypto a little bit of a bid, and then crypto got whacked again. And you got, it's been a little bit of a wild west here with just, sectors just getting smoked every single day, a different one. It's been some two-sided action, though, to your point. Like AXP, we took off a call diagonal yesterday. We kind of bought the dip on the news. The stock was up $8 or $9 yesterday, and we took that money and ran. We did the same thing with AVGO. Like AVGO, we sold puts at like 10 a.m. yesterday into kind of the sell-off that you were seeing in NVIDIA and the rest of the chip names, and that had a nice little bounce back by the end of the day. So there's certainly been opportunity to trade from both sides for all of these kind of news headlines that have just nuked the tape.
Sorry, go ahead, Tom.
I'm sorry to interrupt you, Jamal. I think what you're really outlining here is a 20+% volatility across the market, and it's a nimble. Those who want to accumulate stock either from the long side or the short side or reduce delta might be looking at this as an opportunity because volatility is high to do something. Covered call if you're bullish. Naked put if you're putting on a new position. Some of these stocks are getting killed because volatility is high. But for those who are trading it daily, it's been a boom for the 0 days. You've been keeping yourself tight, nimble, and rolling and adjusting your delta. It's been a boom. And also, I think it's been a boom for just scalping, like you talked about.
Yeah, big picture is what you guys are getting at is the channel that we've been in for the S&P 500, 6,800 to 7,000, right? And honestly, we haven't touched 7,000 and the SPX anyway in about 2 weeks. The future is a little sooner than that, and it's been that channel,
right, Jamal? Don't you think?
That's usually how it goes, right, Tone? I mean, that's usually how it goes in the market. Eventually, we trade in these type of ranges, and in one way or another, we break out, whether we break out or break down. In a lot of the news, I think we feel like it's centered around the idea of breaking down because, again, it's been the things that are that are the most heavily weighted in the S&P 500 are the ones that are weak, right? The tech names. You mentioned it, Nikki, the software stuff. Those have been some of the weaker names. Now you add financials to it. The reason why we haven't broken down, though, is like I said, we have utilities that have been up on the month. There's going to be XLU is going to be up 9% on this month. Energy has been strong, materials have been strong, and consumer staples have been strong. And so that's the only reason why we haven't broken down is because those have been up. So like it's not been a sell everything. It's just been one day we're going to sell this stuff. The other day we're going to buy this stuff, but we're not going to sell the other stuff as hard. The big story, though, the big story, I think, or the story that's starting to become larger and larger is how AI is disrupting everything. Like you mentioned, Nick, it's been a thing. And I think two stories sort of are representative of that. This morning, I saw something about Anthropic and how they're sort of at odds with the Department of Defense over the data that they're releasing, or I should say lack thereof, to the Department of Defense. And then you got Block. I think this is a huge story. I mean, they had earnings. They're up on earnings. We've seen this before when a company slashes people and they go up, but no, slashes people, cuts jobs, excuse me. But
they're alive. The people are still alive.
They're alive.
Yeah, they're alive. There's no murder here.
They cut over 50% of their staff. And again, this is Jack Dorsey. This is somebody, the guy who created Twitter and created Block. This is not a guy who is stranger to the tech field, but that's a big story. I mean, cutting half of their people in favor of AI. So, and again, that's a company that is a kind of a competitor with PayPal, right? And so it's really interesting to see that. And that's the thing that everybody's fearful of when it comes to AI. And that's a lot of what we've been seeing going on in this market.
Yeah, I feel two ways about it. I think there's probably some bloat there, but I wonder if we're getting because we're a little ahead of the curve. I feel like the cost of AI is kind of hard to quantify, and I think a lot of it is being like kind of subsidized by these big tech firms and really the companies that haven't IPO'd yet. It's not like they're printing all that much money from these products. Like I feel like right now it's almost like when Uber first came out and rides were $5. And it was so cheap. You could take an Uber anywhere you wanted. It was $5-10. And now Ubers are like $30. Like you go to the airport and it's $70. And it's, they kind of get you in with the cheap costs. They subsidize the cost of all the infrastructure and the product and all this stuff. And then, once you're stuck, once it becomes a verb, the real cost comes out. And I think that's going to be an interesting turnaround to this whole story is like, okay, you lay off all these people and you replace them with AI because AI is, $10 ahead. And a year from now, when AI is $100 ahead, is it cheaper to now bring those people back? Is it you get a little bit less?
You're starting to sound like a boomer, son.
What do you mean?
Well, I mean, the rides were $5 now; they're $70. It's starting to sound like a boomer. I'm starting to like it.
That's the truth, though, right? I mean, like these.
So is the truth. Boomers speak the truth.
Yeah. Oh my God.
You guys have been hanging together a lot, I can tell.
I'm rubbing off on him. He's rubbing off on me too, but I'm rubbing off.
I know.
I'm just, I'm speaking on my thoughts. I mean, these are just my thoughts, but the initial headline is pretty scary.
No, it's true. And the thing about it, I mean, when you bring it into real terms, look, at the end of the day, everything's going to eventually be fine. And this is how it is when you have a disruptor, right? Great analogy when you talk about that. I remember when I was taking cabs from downtown, it was like $30. And then Uber did come in and they cut that price and it's all changed. Of course, eventually it rises back up anyway. And that's kind of how it goes too.
Yeah, now you're looking at the cab prices when you're looking at Uber. You pull up Uber, you see what Uber's charging, you see what Lyft is charging, you can go to see what the cab is charging, the wait and save. I mean, come on, everybody's, that's what happens.
Yeah, it's funny. I went to dinner with a friend of mine a month ago who lives in the city, and they had this app to find cabs to take you to places if you live in the city. You know what I mean? Like, it's cheaper than just using the Uber. I was like, really? That's the thing. I didn't know that.
Yeah. So it's an interesting aspect, but I think, I don't know, the Pareto principle plays out in everything, and it basically says, it's 80-20 for everything, right? So when you think about like work, 20% of the people are doing 80% of the work. And I think that's across the board on everything. You could put that into anything. So
You could. It's true. To round out the week, look, PPI came in hotter than expected. I don't even know what the hell that means anymore. I seriously don't. I don't know what it means if inflation comes in hotter. I don't know what it's supposed to do to the market. I don't know what it's supposed to do to oil and gold. I don't know, man. It doesn't. We've been talking about inflation for 5 years now, almost. I mean, it's a little bit ridiculous. That said, gold and silver are up for the second week in a row. We kind of thought gold and silver were going to start to catch get their sea legs again, and they kind of have. Oil also up this week for the second week in a row. So make something out of that. The commodities are making moves. Bonds and VIX are up as well. VIX is up at 21 right now with the market being where it is. And the 10-year, keep an eye on that. 10 years under 4% for the first time in a while. I'm not sure how long, but I know we haven't seen 10-year under 4% in quite some time. So again, that's what I mean when you talk about PPI. About 2 years ago, if PPI came out hot, we'd see 10-year up. And we're seeing it down now, which means the market is like, give me cuts. Yeah.
But we're going to take a quick 90-second break so we can catch the opening bell, Jamal. Good job out of you. I do want to leave you with one thought. If you've been watching the rest of the show, you can certainly watch the opening now. Jamal, if you're not going to watch all the preliminary rounds to get into the gold medal, the important games that get the team to the gold medal, you're not allowed to watch the gold medal game anymore. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. That's from my man, Joe Mama.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you just bought some E-mini S&Ps at 68.54 and a quarter. That's about as low as they've been. They've gotten down to around 51. The opening bell is set here in less than about 30 seconds. NASDAQ is your leader in the clubhouse to the downside. I guess they're all down a little over 1%. Russell is about 1.5%, so maybe the Russell is the leader of the downside. Volatility kicking up, flirting with 21, just traded over 21 a second ago. Oil, a big mover, 3% move. Gold, a 1% move. Silver, a 5.5% move. That gold-silver ratio hasn't moved. Actually, maybe a couple.
No, it's moved big just now because gold.
Just now, I was going to say maybe a couple of dollars your way just now.
a couple dollars, moved to 0.5%.
Yeah, about
yeah, it's $500. I don't know.
$500.
Call that a couple dollars? I mean, my God, you're shortchanging me every single freaking
as
day.
I was talking. It's like a Saturday night for me.
Every single day, you short me.
What do you?
So I just closed the gold-silver ratio.
Beautiful, very good. Very good. I am so sorry. I moved just as I was talking. I know markets move, son.
I get it. I get it, man.
Yes, you do. So you closed out of your gold, silver, and you bought your E-mini S&Ps, which you've been hoping to get. Hopefully, it'll be a good trade for you. They're about 5 handles higher at this time. You closed 100% of your gold silver because we just did it one time on that 1x2 on the overall trade. Let's see what's going on across the market here. As you would imagine, there's a lot of red on the screen. SanDisk down 17. I mean, on a percentage basis, that's 1%. Sounds big. Let me get back to SanDisk. There you go. It's about a 3% move right now. I'm sorry, down 20, almost 20. Man, things are moving all over the place. Meta down 11. Microsoft down 10. AVGO down 10, Carvana down 10, CRM down 8 or 9, Crowd has earnings coming on the 3rd, down 7, Workday, which just had earnings, down around 8 or so, Tesla down around 7. That's always one of the bigger traders or trading stocks for us. Oracle is down 6 and change. Let's see what's being a little bit of a bucker here, if there are any. Dell up $20. There you go, 141 and change. Netflix up $7, got as high as 94. Its low is right where it is right now, 91 and change. Volatility obviously up. A lot of the oil-related stocks, USO up $2 and change. XOM, Oxy up $1. PayPal up small, but man, it's broad-based as volatility continues to make highs. What are you doing here?
So Netflix, we are long shares at like 82. We actually, and we've talked about this before with other trades, and I did the same thing in Unity, but in Netflix, just to talk about this a little bit, we had the, let's see what puts I had. So we had, or did we take the stock? Wait. So I had the 95 strike puts, and I bought them back and I closed out of the puts and bought the stock. So I basically fast forward to assignment is what we did, because the stock was $13 in the money.
Yep. The option was $13 in the money.
Yep. $13 in the money. So if you look at those 95 strike puts in March, they have about $2.50 of extrinsic value to them. Into this move. And I know that this is a rare occurrence of sorts because this is not every day that you have a binary event like this.
This was a gift.
This was a gift. But those puts, if you had the puts versus the stock, which was 100 delta, a week ago, you miss out on the $2.50.
Yes.
Because that's extrinsic value you would have to buy back.
Yes.
So it ended up being a decent adjustment, but I did the same thing that I did in PayPal. I'm not taking the position off yet, but I put on some put ratio spreads into this move just in case we got a little over our skis here.
In case you got a little overzealous.
Yeah, but I sold the calls, so I have the 90 strike calls there. So I'm basically flat delta here with this sort of move.
Definitely makes sense to be a little bit short. Even the S&Ps rallied about 10 handles off of their lows, which you just scooped. Good job.
My overall Netflix position is 50 long deltas, and that's 200 shares of stock. I have like kind of a longer duration call that was part of a poor man's cover call. I have the short at the money calls, and then I have the put diagonal. So I'm short vol, slightly long delta, very long theta. Like it's a good position to be on.
Very long theta, you mean positive theta decay?
Positive theta.
Yeah. Totally get you there. Let's see what's moved here as we've just starting the market here. Even the S&Ps are trading at 62. Nikki just bought them down at around 54 or so. Just give you an idea of what's happened since the opening. Nasdaq's small little bit off its lows. Volatility 2075 has moved about a quarter off of its highs. Let's keep an eye on that. Russell continues to be the weakest of the group on a percentage basis, and the Dow down 500, Russell down 37. Do you think you need to have a little bit of gold, silver contraction, or even oil contraction here? What do you think about an oil trade here with the IV rank being 85? If you remember, before the show started, we were talking about
Sorry.
That's okay.
Go on.
Oh, you got lucky. You sold your 75 calls in. Oh no, you're still working. I'm sorry.
No, I closed those the silver calls.
No, silver calls you just closed. Yes.
Yeah. So the silver the silver puts, I sold those puts yesterday. They came in about $1.
Very nice. What do you think about an oil trade here or an SPX trade?
I'm doing the same thing in gold too. We did the oil trade yesterday.
Here you are making a liar out of me. You're scalping options.
Well,
we usually scalp futures, and here you are scalping options day after day. But when you get a 4 or 5% move, you have that.
What else are you going to do? Yeah.
Yeah.
You got to take the money and go.
Mm-hmm.
I don't know. Do you do a SPX trade? I feel like we're going to have a wide range today.
Even the S&P's expected move is around 46 on the 0 days. What about if we get a move to new lows, just selling a put spread?
Sure, I like that.
Okay, all right. Let's see what happens. Maybe we go down like 60 or 80. We're down 60 now, from 60 to down 80. Maybe we'll put on just a put spread. We'll play it a little bit directional. See what happens.
Yeah, if you want to put it in, do you want to put it in now?
Yeah, we wait.
Okay.
We wait.
My Dell position, so I have that crab trade. It's basically a scratch right now. I actually need a little bit lower from here. 140 it's trading at. 142, I should say.
Too far, too fast, right?
Too fast, yeah.
Upward delta, that's part of the give and take of having the right outlook on where the stock goes, and not just doing an outright stock, which uses a lot more buying power by doing the crab trade. You're buying something in the money, further out of the money, and you're selling two options closer to the money, and then buying one further out of the money. So you got kind of like a long spread, short spread, and it's gone too far, too fast. You didn't have a 17% move overnight?
No, twice the expected move was not in the cards for my position, but it's basically a scratch. And if we sit here for 2 weeks, it's going to be perfect.
That is correct.
I mean, I could sell a put against it, but I'd rather do that into a little bit of a pullback. So I'm just gonna sit with that trade for now.
Yeah, I think you're in a good place. Although nobody knows what a good place looks like, right?
Yeah, that's true. I'm gonna scalp these Oracle calls too.
Why not?
I mean, Oracle is such a dog, and it's probably getting caught up in the fact that Larry Ellison is going to spend half his money on Warner Brothers.
Yeah, Oracle down $6.40, 143 and change. It's almost like when the market knows you have to raise capital somewhere, they sure make it hard for you to raise your capital, don't they?
Yeah. I just closed out of SMR too. We did like a covered call into earnings after the close. The stock was down. I legged out of the call and just sold the stock here. It's a tiny win, a participation trophy basically with my man Mikey Butler, who is the what?
A participation award, nothing better.
Yeah, that's what it was.
Mm-hmm.
I mean, this was nothing to write home about.
Well, good job out of you already. I mean, you've made a dozen trades or so, scalped gold, silver, which was nice.
Well, but this goes to the question we got for confirm and send. It's like this market has been choppy, and you're getting big moves in either direction. You know, the calls that you sell in Oracle that were at 260 and they're at $1.60 today. We did that yesterday. What more are you like? You know, are you going to keep that on? Sure. Yeah. If the stock goes down another $10, it might hedge you $20. But if the stock goes up $10 from here, you're gonna miss out on $100. Like the risk reward with these big moves especially when you have capped amount of value that you can capture from these positions. You sell a call, you can only make $2 on it, and it's marked at $1. So you got to take the money and run.
Visa.
Yeah, so that was another one that didn't have a bounce as much as American Express, but took about $150 out of that.
Beautiful. It's called trading, son. You're just trading. When you get 20% vol, you can do this. I think what a lot of people fall in love with when you get this kind of volatility is they fall in love with the position that looks so good, yesterday or looks so good today that they want to maximize their return. When you got volatility like this, let's miss the over 7,000 big run up, and let's miss the big move down under 6,850 on the E-mini S&Ps, and let's trade everything in between here. I mean, that's always been kind of my style of trading, and it's served me well. So I think it's serving you well also.
Yeah, I think you don't get many periods of time where you have a VIX at 20.
That's like you're exactly right.
And this is, it gets a little dicey at times, and there's positions get bigger than you want them to get. But
just because volatility is so elevated, right? I mean, you sold vol from yesterday into today. Even if you didn't have much delta to it, it still got a lot of teeth to it. You saw that yesterday too, when volatility expanded on the way down, and we caught a bid, and then everything collapses.
Yeah. So you gotta, if stuff is there for you, you gotta take advantage.
Very good, sir. We're going to take a quick 90.
I'm going to sell out the puts in AVGO again, but I'm going to move them a little bit.
What are you going to do in AVGO? I'll put up on the screen.
I think I'm thinking like the 270 puts. 20 delta in April.
To April?
Yeah.
And you're going 270, but you're going closer to that, the money. You did the 250s last time, right?
Yeah, yeah.
So you're taking a little bit more delta risk. So that's your way of kind of when you have more conviction, doing the same.
I wouldn't say that. I would just say playing the volatility in the price.
Well, you got to have more conviction because it's more delta. And I get it. It's only a delta of 6, but that 6 can become 26 pretty quickly, right? I mean, the difference between your 50 strike and your 70 strike is 6. But that difference can come big very quickly, right?
Yes.
Even the S&P's back near their lows, down 67 or so.
Oh, I wanted to wait, but do we take 20 cents on the BP put we sold with TP?
Yeah, I think you should. I think that's a home run. Would you have a possible 70 cents to make?
70 cents. I think he was looking for 30. So I'm going to put it in for 50-cent debit to buy that bad boy back. And then I owe him lunch.
I remember when TP used to be a big bond trader. I mean, he was unbelievable, but not anymore, son. Not anymore. Now he's making 20 cents.
Yeah. And that CoreWeave position, we talked about it this morning too. Stock down $15. The put ratio that we did is marked at like 57 cents. So it's moved, 15, 20 cents. Just nothing to do there. Getting a little bit of do I close my Dell position for a small profit? Or I think you can hold.
I think you can hold that. Even S&P down 71 right now, 68.48 on that front. Just letting you know. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got Fast Market, big day.
Ooh, it is going to be a big day. We're going to take a quick 90-second break and come back. We got more Tasty Live after this.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kaizen. University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. I don't know if you were even somebody as quick as you, son, was going to be able to catch that scalp I did on the close there. I sold this $20 wide spread for $1.85, and a minute and 10 seconds later, bought it back for $2.10. It's now mid-price of $170, $180.
Unbelievable.
Not my fastest scalp ever, but right up there, son. I thought
that's got to be. That's got to be. I mean, on an SPX option position, that's got to be about as fast as it can go.
Yeah, that's got to be about as fast as you can go. It was, and even the NSPs only moved 10 handles.
Yeah,
I mean, it wasn't like they rallied 30, 40 handles or something like that. Volatility did spike and then come back down. It spiked over 21. It's sitting at 21.05. It was 21.20 when I made the trade. Matter of fact, even the S&Ps are just about right where I sold them, and that spread is trading around 220, 240. It's all over the place today. So keep it tight, ladies and gentlemen. Keep it tight.
I have to give you How Does Daddy Do It? Because that was just, it was special.
Some would say I was gifted. I probably wouldn't be one of them, but yes.
I wish the viewers were there for that moment. It was special to see.
Well, I mean, listen, I looked at it as, we're making 75 cents on our spreads usually within an hour or so. If you got it in one minute, why not, right? Put
Yes.
it out there, see if you get any fish.
Yes, for sure. I love it.
All right, my friend, let's take a look at the market since we are just talking about the market, and we've got fast market coming at you right now. But give me 1 second before we do that. Even the S&Ps are down 67. They just traded down to 41. NASDAQ down 200 and change. Russell's the weakest of the group, continues to be the weakest, down 2%, and the Dow down 700 and change. Volatility, that's what's going to be hurting all your positions, up to 21.05, up $1.30 to $7. Gold and silver ratio is hanging tight. What are you doing in Intel?
So Intel, there's some. You're seeing Google buck the trend. Intel is basically unchanged here. It's a very weird, choppy market here. But Intel, we sold puts at the 45 strike on the 23rd of January. That we then, into the down move, added the 45-50 call ratio spreads to it. So we had a naked put with the call ratio. So synthetically, you're short the strangle. We did the whole package, so I did the ratios at basically zero. I did them at a 1 cent debit. The puts at $2.85. I closed the whole package at $1.81. So I took $100 out of the position each contract.
Very nice.
So just a little, I don't know, tightening up positions, stuff that's working.
That's
the name of the game.
That's a beautiful thing. That's what you're supposed to do.
Yeah. I think I might get.
Good job out of you. Good job out of everyone else. Let's take a look at our next segment, which is Fast Market. Oh, you're so late.
Yeah, it was bad. I'm looking at, got Fast Market here. I'm doing things.
I hear you.
I'm doing it.
It's definitely a talent trying to trade and do the show and catch every tick.
Mm-hmm.
So it does take a certain focus. So good job out of you.
Thank you. Mm-hmm. Appreciate it.
No, all good.
All right, should we do it? SPX selling an Iron Condor after 8:45. The PMI prints. He must be in East Coast there. Have a great weekend and see you guys in March. Matt in Atlanta, Georgia.
He is right. We just did an SPX trade. An Iron Condor could be something you could do too. We just sold a put spread in there. SPX expected move for those who are playing at home, 42 now from around 47. So it's come in a little bit.
I think if you get a little bit of a downside move, you put the SPX spread back on. Okay. And maybe do it a little tighter this time, tighter and closer at the money.
Okay. We'll take a look.
Yeah. Thank you, Matt.
Thank you.
We're also long E-minis here, basically a scratch up 2 points. Something. 68.50. Long live the 68.50.
Long live the 68.50. Did trade down to 68.41.
Yes. So we're going to pass on this one for now.
Yep.
Next one, please. Uh, 10-year. All right. So sticky inflation, heavy treasury issuance, a Fed staying higher for longer, and tariff pressures could all push yields higher from here. Well, you got bonds moving the exact opposite way. So if you think yields are going higher, do they still have the 10-year product? 10-year.
This is what Jamal was talking about yields, thinking they were going to go the opposite way. This gentleman in Salt Lake City, Zach, is thinking the same thing. I mean, you can think whatever you want. You got to trade what's in front of you. Now, you might look at that as an opportunity. I don't know if I play that game.
You don't like this? You think yields are coming down?
I don't think yields are coming down, but I don't. I guess you could. What do you want to do? Sell a call spread?
Well, the 10Y is the yield product for the 10-year.
Yeah, so, it doesn't have a lot of volume, but you could try.
It doesn't really trade, and we've traded these before. I mean, if you really wanted to play this game, I think this is a really cheap, capital efficient way to do this. You can do this a handful of times here. Use about $80 or $90 in buying power. And just to give you context, like today's move is a $36 move on one contract. It moves dollar per tick. So it is relatively cheap to do this. I think we give it a try for a handful of contracts here. What do you think?
Mm-hmm. Sure. Go ahead. Put it in at your price. You know what I mean? You don't have to chase this.
Yeah, I put it at 83.
Yep. Perfect.
And so if you get bonds moving up another tiny bit, we'll get filled on that. So we're going to put this in. We'll see if we get filled.
Perfect. Good job out of you.
Nothing was worse than trading the 210 inverted yield curve like 2 or 3 years ago when it was all the rage, when everybody was like, oh, it's only been the longest period it's been inverted has been 12 days or some tiny speck of time. This is a free money trade, and I held that for like 8 months, and it didn't go my favor at any point.
Sadly.
Yes. All right, NVIDIA. Snapping up some NVIDIA shares. AI still looks strong by the rumor. Maybe trade in August, March, 200 calls. Okay, so you're looking at like a calendar spread here. I'm pretty locked and loaded. You did an Iron Condor in NVIDIA, which I think is looking...
It was lower this morning earlier by about $1 or so. Now it's down $4. It's moved off. Down to 180. 180 in NVIDIA is about as low as it's been since February 17th, right before it's made its low February 5th, which is closer to 175.
Yeah, I have. I was buying the dip yesterday. That obviously didn't work with the stock down $4 and change here. I'm actually just going to leg out of these calls that I sold against the long calls out in April. So I just closed them out for 60 cents again, kind of just trading these options here. So I am net long NVIDIA. I'm with you in a different way. If we get a 200 print, I owe you a lunch, Dan.
Oh, you owe him a beer for sure.
Yeah, if we get 200, that would be a great day for me. So I'm with you, but I'm not going to add to the position because I'm already locked and loaded here. But I like it. I think it's, I bought the dip in AVGO, so I guess that's kind of, similar trade.
Okay, you're there.
Next one, please. Affirm took a shot with the 45-50 call spread in April after earnings, a 50-50 bet.
What do you think about that?
Tyler, NYC, the 45-50 call spread in April after earnings.
It is down $3, making new lows. Hasn't had an uptick in what seems like forever. Ivy rank is 24, so I think they're playing it the right way. You can't really sell premium in there. Sad with the way volatility is expanding. You can't sell volatility in this product.
So they're just looking at just a straight call spread here.
Yeah, 50-50 shot. That's what he's looking at.
Oh, there's my 10-year.
Yeah, at your price. That's the key, right?
Yeah, those markets there's not a lot of liquidity and the markets are a couple pennies wide. So I would, to your point, just put your price in and let it sit.
Because you're going to have the same problem getting filled on the out too.
Yep. All right, so you want to do the 40-55 call spread. Trades at about half the width, a little bit less. I'm going to move this to be more of a 50-50 shot.
Okay.
And I'm going to do the 40-50.
Okay.
And this should trade. Let's see what we get. Oh,
it's going to trade at 570 is where I'm going to tell you it's going to trade.
It's going to trade at 570 there. So I'm in 50-50 shot.
Volatility making a new low, 2150 here.
Cool. So we're in. Next one, please. XLE probably chops unless crude really explodes. Until then, selling premium in this high IV name. So we have laddered strangles here. Remember we did these last week?
Yeah, I do.
We did these at 252. They basically haven't moved. You putting that SPX back in? What are you doing there?
I'm trying. I can't. I'm trying at my price, not getting filled yet. I'm just doing the put side of it. I moved it up a little bit further, as you suggested, and made it tighter spread, only $10 wide.
All right.
If I don't get filled right here, I'll cancel it.
I'm with you on this trade already, so I'm going to pass. I'm not going to add to it, but oh, there you go. You chasing it.
I canceled it.
That was a cancel. Oh, okay. All right. I'm going to pass on this one, but thank you, Brandon in Los Angeles. Appreciate you. We have it on, so it's not really a pass, but we have it on.
Good job out of you. Next one, please. Costco. Looking at a bullish poor man's covered call. I remember Jamal talking about Costco as one of those stocks that has rallied, and it has. It's a bucker up $8. I hope they put this on yesterday to benefit it. I don't know if I can chase Costco here at $995, up $8, looking for a poor man's covered call, which is completely bullish. What do you think?
What do you think about doing just an iron condor here?
You could do that. Ivy rank is 36. It's pretty good. It does have earnings coming early March, but you certainly could.
Yeah. How about a short leaning iron condor?
Oh, lean into yeah, sure. Why not?
Because it's been a pretty strong stock here recently with the rest of the market kind of bucking, it's bucking the trend.
Yeah, you certainly could. Certainly could. Into an $8 move, which is about 1%, just about.
Yeah. So what do you think? I'm looking at like selling the 20-ish delta, but I'm going to go $25 wide on the upside.
Okay.
And then maybe 15 on the downside.
Okay.
So I was thinking on the downside, it'd be the 920, 905. And then on the upside, it'd be the 1075, 1100.
Okay.
The market, the bid A's are.
Yeah, not good. I was going to tell you.
So the bid ask spread here is $1 at 11. Is that like $2 at 11.25?
Right.
I think you got to pass on this.
I agree with you.
Sorry, Scott.
I agree with you.
I was trying to play into it. I wanted the new position. I feel like I've passed on a lot of these. So I wanted to be there in solidarity with you, but it's just not liquid enough.
Yep, I totally agree.
All right, so we're going to pass on that one. Go to the next one. I feel wow,
a half an hour into the day, and we haven't had much movement on a big movement day. I guess the Russells had some movement, continuing going lower.
Yeah. AA IVR looks solid with earnings in April, selling the 55 put at support and the 80 call. 50-day monthly cycle. Strangles make sense. Aaron in Richmond. Alcoa has had a wild ride to the upside here. I don't know if I could. I think I might do these markets stink too? They're not great.
Alcoa down $1.60. I mean, it's had a move up back in November to the beginning of this year, where it's been going sideways like the market so far, right?
Mm-hmm. I'm going to do a call ratio spread.
Okay.
I don't know if I can, market has not looked great, and a lot of these stocks, like the Costco position.
Yeah.
I don't know if they're going to go down, but they're near highs, and the market has been not strong. So I feel like leaning with a little bit more neutral / not the same sort of downside risk is more advantageous here. So I did call ratio spread $5 wide, the 70-75 at 95 cents.
Beautiful. 95-cent credit 1/2.
1/2
on that call spread. That's correct. Call ratio spread.
Volatility coming in a little bit.
Volatility is coming in a little bit.
Are we saved?
Rallying a little bit.
Oil coming down a bit too.
Yep.
Kind of a good sign.
So far, yeah. So far, so good. Russell being the weakest of the group. Haven't gone anywhere though. Volatility 20.95.
We didn't get filled on our BP put.
No, and I didn't get filled on my SPX put either.
Missed it.
It's okay. Got other long delta. I got other long delta I can benefit from.
That's true. I'm gonna should I scalp out of some of this MES, or just I'm gonna put it in an order at I'm gonna put it in an order at 75. It'll be 20 handles. I'll take one off at 20 handles and leave the other as a runner.
Oh, a runner. Got it.
Yes, for you.
All right. I like it.
All right, so we're in, Aaron in Richmond. Thank you for the trade idea.
Beautiful. /6J, my man.
Oh, no.
The yen, they want you back. The yen's unchanged after catching a small little bid this morning. It's had a fall from grace on February 17th, where it made recent new highs off of being lows. I mean, it is about as low as it's been, maybe a couple of ticks off of its lows. What do you think here?
So we did the Aussie yen FX trade yesterday, much to my chagrin, because I do not enjoy, nor do I profit from any of my yen trading. And so I think I'm going to keep that on and not add to it here. So I'm long the yen against the Aussie dollar. That's my position at this point. I'm short the Aussie dollar in various ways, and that has been quite painful.
Okay, so you're going to abstain. You're going to stay true to yourself.
Yeah.
Okay. Beautiful.
Next one, please. We've passed on a lot of trades today. I feel bad.
Yep.
Snow, adding a neutral strangle in snow today. 55% IV, IVR. Post earnings is a gift. Resistance is at the upside gap, support at 55. All right.
Oof. What do you think about this?
Post earnings trade. What do you think about? Do you like so we're looking at the 55. I don't know if I'm going to be as aggressive as you. What do you think about the 45, 200?
Ooh, let's look at snow here. SNOW, down $3, back to 170, off its lows, about $10 lower than this, $5 or $10 lower than this. Good IV rank of 56. It's got
895.
I like it.
Delta neutral, so 20-ish delta. I guess a slightly short delta skewed because you have upside skew here.
I like it. I like it a lot.
Yeah, some short premium there. I like that.
Yeah, I like that too. And good job out of our friend from Milwaukee, which is just a suburb of Chicago, Justin.
Last one here. Oh, God, no. DocuSign. What a dog this stock is. I actually sold the calls yesterday. This stock is...
DocuSign down $1.16. You sold calls yesterday. I know it's only part of it in trying to reduce delta, part of the trade, but a good... This is one of those trades we had it for confirm and send. You know, one of those things where you say, you can say it better than me.
Awful. Just awful. So Pat is looking
good
at...
IV rank of 90. Let's give Pat some credit here. Good IV rank of 90. It's down $1 and change. Hopefully he waited for today. He wants to do a strangle 40.55. The put would be $5 away from the at the money strike. So you're right there. And the out of the money would be 55. You have a similar position on, maybe a little bit worse than
much
Pat.
Worse.
Much worse than Pat. So you're certainly pulling for him.
Yeah. I'm short. Where's my put at here? I am short the March. It's basically stock, 55 puts. Yep. So I have a cover call here. I hate it. I hope this stock has a buyout rumor or something where it's at 50 in the next 2 days, 2 weeks.
Okay.
So I'm gonna pass on this one, but I appreciate the support here, Pat. Thank you.
You appreciate him playing?
Yes.
All right, that's fair. That's fair.
All right, I think that's the last one.
I think that is the last one. Let's see what we got here. Yeah, you got a lot of.
I got a lot of positions on though. I'm locked and loaded, and I'm scalping, and I'm all over the place.
You got almost 20 handles on your E-mini S&Ps, right? Did you buy them at 54? They're trading 71. So
I know. I got an order in to buy them back at 75.
Sell them out at 75. You mean?
Sell them out at 75. Are we going to get it here? We're going to get it. We're going to get it.
74 and a half.
Come on.
You got your 74 and a half where you bought them. That's the high tick. You got to listen to your father next time.
Oh my God. Okay. So I'll put them in at 74 here. I'll move them a tick. We just missed it.
Yeah. Even the S&Ps are down 47.
Oh, we're going to get it. We're going to get it. Come on. There it is. Come on. Did we get it?
Where are you in at?
74. Oh no. I had an extra zero in there.
Oh, I was going to say, you should have gotten filled. We're 75.
No, I was trying to sell them at 68,000. That's why I didn't get filled.
Oh.
I had 68,750. So there was an extra zero in there.
I was going to say, something wasn't right.
Yeah. So, all right. So I took half off.
Very nice. Very nice. 50%?
Yeah. Should I take the whole thing off? Did I take the whole thing off? Here.
No, you took off 50%.
Here, there's the rest. There's the rest.
77 and a quarter on the rest of it.
No need to applaud.
No need to applaud. Applaud you or the market?
Both. The market. Thank you. Thank you to the market gods.
Yeah, I would expect a little bit more action to be two-sided. 44 is what we're down on the E-mini S&Ps. Let's just take a quick look at what's going on here. We're down 44. Volatility hanging in there at 2080. We did talk about that. The volatility was not going to contract. Really hasn't. NASDAQ down 118. That's taking back half of its loss. The Russell, which was down over 2%, is only down 1.75%. Russell very weak compared to the NASDAQ right now. The opposite of what you were doing the other day. Remember when you were selling Dow and Russell because they were the strongest of the group and buying NASDAQ and even the S&Ps?
Mm-hmm.
That trade was a good one. It worked for you intraday, which you took it off, and it's worked now. I have a hard time buying the Dow and Russell and selling the NASDAQ Russell. I would not like to do it the opposite way around. It's the same way with the gold silver trade, which is back, by the way, to 56.80 or so, back to where you kind of bought it after trading a little bit higher. I have a hard time selling it in this small move. I would be looking to put it back on, but I don't know if I'm looking to put it back on right here. Let's talk about gold and silver. Yeah. Gold is up 1%, silver up 6%, 6 and change.
Unbelievable.
About 40 cents off of its highs.
Yeah. I just put an order in to take $100 out of that AVGO put. We'll see if we get filled on that. Getting a little bit of
making a liar out of me again.
Getting a little bit of a bounce in some of those names. Some of the like kind of memory stocks, Western Digital, Micron, SanDisk, they were all pretty significantly lower this morning. Like Micron traded down.
AVGO traded down at 310. It's 318. It's up $8 off its low. Still down $3.
Yeah, even I think Nvidia is catching a little bit of a bid too. It's up about $2.
They've cut everything like the NASDAQ has cut their losses by half.
Yeah.
Apple was down $4. It's down, a little over $4. It's down a little over $2 right now. Everything's cut its losses by about half or so. Google was trading 304. It's up small at just about 308. So everything's kind of oscillating all about. We'll see if we can hold these bids here going into the weekend.
Oh, look at this NASDAQ. I scalped out of some of the, and this isn't a scalp. I shouldn't say that. I closed out of the calls that I had on for a call ratio in SoFi. I'm long stock and short.
I wouldn't say SoFi is a NASDAQ trade. Is that where?
No. That was just the ding.
Gotcha.
I'm just outlining the ding that I just had.
Gotcha. What were you saying about the NASDAQ?
NASDAQ catching a bid. It's only down 90.
Yeah, which is really a third of a percentage point, is where it was all night for most of the night last night when the E-mini S&Ps were down around 30 handles. They're down about 41 right now. But you can see here, back near that lows again and rallying back off. Amazing market, son. Amazing market.
It's been incredible.
Oil up $1.07.
Oh, there's my AVGO.
That's a great trade. I mean, you don't get
10%. So I sold that at 920 and just bought it at 820. You do not get 10% of the max profit in less than an hour in a market unless you have a little bit of two-sided action, but really this volatility. Like it
is all about volatility, son. You saw that in the 0 day, how quickly that spread moved in a minute. I mean, that's the way 0 days do everything. They accentuate volatility expansion and they accentuate volatility contraction. They accentuate volatility market movement.
Yeah.
So it really is the kind of you want to learn how a strategy moves. You go into 0 day.
The thing is with with volatility this high on a $7 down move in something like an AVGO, that option moves $2. Let's say. If volatility in the market was at an 18 and AVGO goes down $7, that put moves 50 cents.
Yeah.
Or
exactly.
25 cents. And that's why you're getting these sort of opportunities where, the stock rallied $3 or $4. It's still down on the day.
Right.
But because volatility is so high, the down move is so much more juiced in terms of premium because of the fear that's just in the market right now, that you don't even need the $7, $10 up move to be profitable on the trade. You need the $2 move. And that's just it's just wonderful. It's a beautiful thing.
Very good, my friend. Let's take a quick 90-second break. We'll come back. We got a market measure. We'll see if this market holds holds this rally down 1.75% on the Russell, down 1.25% on the Dow, only down less than 0.5% on the Nasdaq, down just over 0.5% on the E-mini S&Ps. Got different divergence here. We'll see what's going on. I think there's some stocks abound that should be interesting to people, especially with volatility at up a full 0.5%. Maybe it's just as simple as going into SPY or SPX. We'll be back in 90 seconds.
Yeah, we should look at that when we get back.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live as the market here, in just the 90 seconds or so that we were gone, E-mini S&Ps are back to 66, 67. That's about 10 handles lower than where you sold them to scalp them. What are you looking at here?
So I did a wide iron condor. I did that.
In SPX, did a few days ago.
Yeah, on the 23rd. So I did that at 1335, and it just came in. I just closed at 1065, so it's 200 and something.
That's a great trade. You did that as a what was that? Kind of a wide synthetic strangle.
Yeah.
In SPX, right?
Yeah. So here's what I'm thinking, and we just kind of talked about it on the break.
Can you put up your screen? Do you have that? Can you just show that, because it'll show the price of where SPX was when you put it on?
Oh yeah. So here,
I think it'll be beneficial for everybody. But I wanted to say the market's moved about 10 handles since we took that break. So again, be nimble out there, everybody. Volatility still hanging in there, 2085.
So on the order change, if you right click, you can go to the view market snapshot. So when we put that trade on the 23rd. We were trading at like 68.20-ish.
Which is only 30 handles away from where we are right now.
Yeah.
On SPX, which has moved 56 handles lower today.
And this was a 21-day trade. So the 21 days to go till expiration. So it's not like it's not a 45-day trade. There is a little bit faster movement here, but the market's really only moved, 20 or 30 handles from that point in time. And when we look at
when did you put it on?
On the 23rd.
On the 23rd, so that's 4 days ago. Just to give you an idea, 4 days ago, SPX expected move now for 4 days, just looking at, is about 92 handles. So you actually were well inside at this time, inside that expected move. And that's why one of the reasons why this worked.
Yes, exactly. So when we look at the IV, so this is another aspect of it, right? So you just mentioned, currently the expected move is like 90 points. We've moved much less than that over 4 trading days, which is actually, Monday? Monday we did that.
Yeah.
So Monday this week. So you also had a volatility contraction. So 21.4% implied volatility. This expiration, the implied volatility is at about 20. So it doesn't sound like a lot. But it's from a percentage standpoint, it's about a 5% move in volatility. Right. So not only did you get kind of nothing, quote unquote, nothing happened because we netted out, 30-point move from my open to close. We've had a lot in between that. And this trade has been, it wasn't a winner the entire time. I mean, I had probably a 20 or 30, 40 cent loser at one point. But really what happened was volatility was high. Realized volatility over those 4 days was well inside that. And even though we have still high implied volatility now, it's come in a little bit, which has also helped.
Mm-hmm. Agreed.
Okay, so now I want to do I actually did this yesterday too. I think a better name for this would be like a skew trade rather than a Super Bowl or a stupid, as the prior administration would call it. But if you sell a put spread, so you have volatility really high, and we talked about this with AVGO, how these moves down, the option premium in the puts really, really explodes. And so if you sell a put spread to buy a call spread or sell a put to buy a call, there's a little asymmetry to it, in my opinion, just given the volatility that we have.
It's not an opinion. It is what it is. I mean, especially if you're $10 wide, relatively tight on a spread.
Yeah. So I'm going to do kind of similar to what I did yesterday. Sell a wide put spread to buy a call spread in this March expiration. So I'm selling a 50-point wide put spread down at 6,500. So we're talking about, 300 and some odd points out of the money.
And you're doing this in SPX. You're down here. We haven't been there or anywhere close to that since November.
Yes. So I'm going to sell that.
You're doing this for 21 days.
21 days to go till expiration. So I'm selling that put spread. I want to take advantage of this volatility. And then I'm buying the 7,025, 7,040, so it's 15-point wide call spread. So I'm doing this at a 10 cent, or I think I got
debit.
filled. Did I get filled 10 cents?
10 cent debit. Let's just say you did.
Just say it's a scratch. It's even. So, at expiration.
You lose $10 if we stay right where we've been for the next 21 days, right inside this very tight range.
Yes, it does use buying power. So this is a capital efficient or a capital intensive trade. You're using about $4,000 or $5,000 in buying power.
$4,000, yeah. Mm-hmm.
But if you get a 30 or 40 handle bump from here to the upside, this probably moves $3 or $4.
Yes, outside the expected range. You got around, call it a 30% probability of success. I mean, on this trade, if you did it for a small credit, you would have had an 80% probability of success. So let's just call it a 50-50 shot here, because that's really what you are. Your 720 on SPX is about 80 handles higher. And for this expiration, because you got to put it in perspective, for this expiration, which is only 21 days, you've got about a 200 point expected move. So you're inside the expected move. You're just to the upside with risk to the downside.
The thing that will help this trade is that you don't necessarily need the move to 7,000. No. So a move from here to, let's say, 6,900 on SPX, coupled with a couple point vol contraction, you're selling that out of the money premium that's also going to move in your favor. So that call spread is probably going to hold its value, if not increase. Plus that put spread, the skew, is going to come in, and you're going to hit both of those in that sort of move.
Yeah, you'll make a little bit on the put spread on skew, not too much, but it is $4,000 or $5,000 worth of risk, like you said. I mean, you do have risk to the downside, but if you have some conviction to the upside, I like it a lot better than somebody putting $4,000 or $5,000 at risk for a futures trade, which could bounce around as it has right now. Yeah. 30 handles.
Yeah, but it's probably not going to move all that much into a 50-point down move.
No, but on a 50-point up move, you might catch a little bit of a bid.
Yes.
Mm-hmm. Yep.
All right. Cool. We're running late. I'm talking.
We ain't running late. We only got Quentin coming in here. This is our time to shine, son. I mean, when nothing's going on, then there's nothing. I mean, you made almost 30 trades today. We've made scalping trades today. We put on opening trades today. We've closed trades that we put on from yesterday. I mean, you're doing everything that we're supposed to do. This is how you earn your keep. Come on.
I'm trying.
Right.
So this is a really cool segment. I'm actually pretty excited about this one. It's a really cool angle, and it's something that is pretty unique. I don't think I've seen anything that covers this, but we're going to be talking, and this is sponsored by the SIBO. Does a SPX respond to IPOs? Mm-hmm. So we have a ton of IPOs coming up later this year, some huge ones. Mm-hmm. Let's put some context around that. That's what we're going to do here. So let's do it.
Let's do it.
So an IPO is just an initial public offering. It's when a private company first sells shares to the public. A lot of these companies that are coming, that'll be IPOing this year, are very, very mature businesses with very, very lofty valuations. In the past, IPOs were kind of, middle of the road stocks. They weren't at their near their peak. A lot of these stocks are very mature companies, so that is definitely something that's different. So while IPO dates are typically announced less than a week in advance, several major companies are rumored to be planning debuts soon. We don't have the exact dates, but we're pretty confident that there's going to be a handful of big name stocks coming to market this year. So can the excitement and capital flows around a single stock IPO actually move a massive index like the SPX? So are these going to move the SPX? And these stocks, just to be clear, are not initially being added to the S&P 500. It's not like OpenAI is going to IPO and then immediately be put into the S&P 500. It very much will be, because of the size of a company like that, and even an Anthropic and Stripe and all those are probably going to at some point, but they're not going to be added right in the short term. So we're kind of going to quantify, is this a market moving event, even though these aren't in the index themselves? Like, does everything else catch a bid? Does everything else sell off? That's really what we're getting into. So we're going to dive into the data and see if there's anything a zero-day SPX trader should be aware of when a blockbuster IPO hits the market. That's really the question we're gonna try and quantify here.
Mm-hmm.
So the study that we're looking at, we're using data across 34 major IPOs from 1995 to 2025. And so this won't include, we are going to look at some 0DT data, but 0DT data is only a couple years old. So this data isn't going to have that sort of, we're looking at the moves in the market, not necessarily the 0-day trading of the market. But to give you some context now with all the 0DT trading that's going on here. So we're going to analyze the SPX performance and intraday range just before, on, and just after these events. So we're looking at the day before, the day of, and the day after, and comparing that to the baseline SPX behavior. How does it average, an average day in the market compared to these days? We're splitting the results into baskets based on the era of the IPO. So we're looking at .com IPOs versus 08 IPOs. We're going to look at the more recent IPOs. So we're going to have different baskets here. And then for the most recent ones, which are ARM and Reddit, ALAB, and Line, We're also going to analyze the intraday SPX behavior at 10-minute granularity. So these are ones that have IPO'd in the 0DT SPX era. And just to put some more context here, I don't know if these are as close or are close enough to a ChatGPT to really take a total conclusion from it, but it is the best we can do.
Okay.
So just looking at the SPX baseline, this is going back to 1995. So all time, you have a 0.04% move on a day-to-day basis. We call this positive drift. So the mean daily return, 0.04%. When you look at the mean intraday range, about 1.27%. And then the overnight gap is basically flat, slightly bullish here, slightly bullish lean. That is positive drift for you. The last 10 years, it's actually been slightly less volatile because you kind of take out the 2000 bubble, the 08. And so you have a little bit tighter range despite what has been some volatility that we felt in the last 5 years. The last 5 years as well are also a little bit lesser than the historical average in terms of our range there, but have been skewed more bullish. So just to give you some context there, that's our SPX baseline.
Very good.
So overall on IPO patterns, this is what we're looking at here. The day before, and this is just like overall, this is all of them into one basket.
Sure.
The day before, it leans slightly bullish. You can see this as a 0.12%. That's our mean day before move in these IPOs. The day after, it tends to be a little bit bearish. You have a negative 0.17% average mean move to the downside. So you actually have a buy the rumor, sell the news in real time for these IPO stocks. The day of the IPO. The day after, you basically see the market flat. So there's 0.01% downside move. I consider that basically nothing. And a week after, you tend to see a tiny bit of weakness across the board here. You can see basically the SPX climbs into the hype. There's a bearish drift after the event. And then, you kind of have a flat move for a little bit, a digestion, and then kind of a little bit of the air comes out of it a week after or so. And this is the whole basket themselves. So this is a pretty interesting example of buying the rumor and selling the news in the market as a whole.
Yep.
And so the overnight gaps, do you like that? There you go. Got a couple. So that's a cool one. But so the overnight gaps where SPX showed the most consistent abnormal moves were around IPOs. Overnight moves leading into major IPOs averaged 0.05%, 0.054%, which is nearly 5 times the overall average of overnight moves, which is basically zero, right? The overnight moves, the mean is very close to zero. It's 0.01%. So the point being that there is a little bit of a hype going into an IPO.
Yeah, for sure. For sure.
The overnight move following an IPO actually had some downside. It's the, sell the news event. Buy the rumor, sell the news in real time. That's really what has happened here. And these usually, the usual overnight moves were not accompanied by any increase in volatility. So there wasn't like a volatility context to put into this study.
Okay.
Are you having fun with this one?
Yeah, it's a deep one for me. I mean, I would have said from the very beginning that IPOs have little to no response.
Well, you're actually wrong.
Okay. All right. Well,
it's kind of been
I hope I'm not statistically wrong by 2% or something like that, but I hope I'm wrong.
Well, it has been a buy the rumor, sell the news type event, and the direction isn't really the key, but there has been a little bit of extra volatility with an IPO day. And so this next slide here, we bucket these into .com era, the post-bubble, and then the more recent, like the social names. We're talking about like, Tesla, Facebook, Twitter, Baba. These have kind of been more like the social era, social media is how we're putting this here. And you can see here, so the mean daily return, you're having some big moves here for all these across the board, even into the more recent ones. Almost a 1.3% downside move is our daily mean move. So it has been volatile, much more volatile recently than it was, in some of the past.
Mm-hmm.
Now we're bucketing these ones. So this is like gig economy stocks, pandemic stocks, post-pandemic, and then the more recent, the ARM, Reddit, A-Lab, Line. You can see across the board, IPO sessions have been volatile compared to the average SPX day. They've had big moves in both directions. It's very much been a buy the rumor, sell the news type event across the board, which is pretty interesting.
It is. And
so just giving you a couple intraday analysis with this. So with 10-minute granularity, and this is only from March of 2023 to now, that's when we've had 0-day SPX options, we can examine how recent IPOs traded intraday, specifically with ARM, Reddit, A-Lab. I don't really know this Line stock, but it's another one that's kind of in our bucket here. Mm-hmm. On these days, the SPX average 0.16% rally in the first hour of the trading day, and a relatively striking up move. So when we talk about an average day in the SPX being 0.04%, it's 4 or 5 times the move just in the morning. The last hour, however, gave it all back, or most of it back, averaging a negative 0.16% return. So the key is that you've had volatility on IPO days relative to non-IPO days, which is something to take away here. With slightly tighter than typical total intraday range, our usual 0DT short premium trades are appealing, but be wary of the large moves around the open and close. So you're seeing a lot of the action happen in the open and the close with the 0-day.
All right. There's a takeaway there, so I'm good. And you're going to kind of reiterate it right here.
Yeah, so this is just to give you an idea of like the top 3 major IPOs for SPX. And these are the moves in terms of the up moves that we've had. The worst 3 major IPOs on the downside there, Tesla, eBay, and then Pets.com. Was it Pets.com? Petco?
I believe so. I mean, but look at these. I mean, you're talking about 25 years ago on some of these.
Yes.
I mean,
dude, this is just a little trivia for you.
All right. Trivia is good. I don't. We got whatever.
Well, the other stats that we had throughout this session kind of talk about, or throughout this segment, talk about IPOs
this
being.
Session is what we're going to go to when we're done trading with our. We go to a session together.
The overall takeaway is that you typically see. And let's get to the takeaways. You might expect major IPOs to inject volatility in the market, but the data says otherwise. Across 34 major IPOs, intraday ranges were similar or slightly tighter, but there may be directional SPX plays available, especially if considering trading on the overnight moves to be positive before and negative after. So, you fading the move is kind of what's at play here. You have the buy the rumor, sell the news. With only 4 major IPOs in our more fine-grained data set, so our 0-day data set, we should be cautious about jumping to conclusions because we haven't really been able to do this 0-day trading in other IPOs. There's only a handful here. So IPOs can be an incredibly exciting time for individual stock traders, but for a 0-day SPX trader, you are likely best served by treating it as a normal day. If you're going to just trade the 0-day. If you want to trade this as an event, you buy the rumor, sell the news.
Sometimes we like to trade the market as buy the rumor, sell the news too. Just overall, not even IPOs. Even the S&P down 44, back to where you sold them from your better buy than sale, I believe, at lows on the S&Ps. Now we're kind of back in the middle of the range here, a higher end of the range. Even the S&Ps down 41. NASDAQ doing its thing here, only down 1/3 percentage point, 93. The Russell is the big mover to the downside, a little over 1.5%. It was over 2% at one time. Dow down 560. It was over 1.5%. It's about 1.125 right now. Volatility 2063, up 80 cents. That's a big 4.5% move off of its highs, those of 2120, which you would expect with even the S&Ps and everything else rallying. I don't know. I don't take any take from that. I think right now we're in a holding pattern right here. If you take a look at some of the stocks that have kind of helped us, you got Dell up 20 and change, Netflix up 7. It's been a relatively tight range of $4 compared to what's been going on all over the board today. And then you've got a bunch of oil-related stocks, a little bit of Palantir in there too, a little bit of Mara up $1 and change.
We closed that too early. That was a TP trade too.
Man, nobody can find a 60-cent put and a $9 stock like TP. Let's see what the rest of the market. It's obviously to the downside here. You still got some big market movers. Microsoft down 6 and change. IBM down 5. That's hurting the Dow a little bit. Goldman Sachs down 41 here, trading 888. It used to be 900. And let's go to our Apple Watch here. Apple down $4 and change. Apple traded down to 68. It's back down there again, up to 72. We're going to take a quick 90-second break and come back. I don't think we're finished going lower, son. I think we're going to bounce around here for a little while. But we'll take a quick 90-second break. We'll come back. We'll find out what Quentin has on his mind right after this.
Beautiful.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, well, before we talk about him, we could talk about you putting back on your gold-silver trade, trading back down around 56.25, 56.30. It's moved about $500 lower than where you put it on the first time, about $1,000 lower than where you sold it.
Yeah, it's the lows of the session, and to your point on the break, which nobody heard, but I'm going to repeat it so that everybody can get this nugget of wisdom from the man himself. But you're talking about how the ratio, gold hasn't moved. I mean, gold's been sitting here at like 2250, and it's really silver is the reason for the gold silver ratio moving. So you're selling silver at highs and buying gold like basically where it's been the whole time. It's really
all day, unless gold is perfectly priced and silver was extremely undervalued. This would look like a good trade, right?
Yes.
But listen, you never know. And you're doing 2 gold future buys, 2 gold contracts versus 1 SLV. And just to give you a little bit of an idea about that, if I look at /MGC, all of your prices are right here. Like, nothing has really moved with you. This is all about the silver contract moving back and forth.
Oh, look at this nice little rally.
Even the S&P down 36.
Give me more. Let's see what that SPX position is. Because SPX has moved what, like 20 handles from when we put it on?
Yeah, you're talking
15?
about that directional trade you put on for a 10-cent debit is trading around a 90-cent debit right now. So you got
90-cent credit. So it's up like credit. 80, 90 bucks into a 10-point move, 15-point move, maybe.
Yeah, you can.
I mean, oh no, I'm sitting on it. I'm not. No. We don't take nickels here on this show anymore, Dad.
I'm gonna let you go. I got somebody waiting in the wings. That's right, Tasty Trade World Headquarters. That's right, my man Q. How are you, brother?
Fellas, how's it going?
Doing good, sir. Thank you so much.
Rocking and rolling, baby.
How's the trade desk today? I always ask you the same thing. I got to imagine with volatility expanding a little bit and market going down, Russell was down 2% at one point, down 1.5% right now. Even the S&Ps were down a full 1%. Market's got to be a little bit busier for you guys on the trade desk.
Yeah. Trade desk is quite a bit busier today, for sure.
Mm. How do you feel as a younger person, now that I'm an older person, about high volatility, VIX at 20, this sort of market? How do you feel about this?
Yeah, I would say, like, when it comes to premium selling, this is really where a lot of the opportunity is. You don't necessarily want to be afraid, and you want to keep your size in check for sure, because a lot of the time when volatility expands, it keeps expanding, and then it violently comes right back down, right? So you want to keep your size in check. But right now is where, like, because with the way the margin system is, you can get a lot of bang for your buck on naked positions right now. Like, there's strangles out there. Like, I was looking at some positions. There's strangles out there where you can collect like $5 on a $2,000 margin requirement because of the way
that's big time.
Yeah,
right?
that's
when
huge.
you think of that return on capital potential, it's a big number.
Yeah, and so this is a lot of those times where, like, because the margin's still going to be the same in a Reg T account. Portfolio margin, things can change, but in a Reg T account, margin doesn't really change that much on naked positions. And so because volatility is a lot higher, you can get a lot more bang for your buck when selling these naked positions, and you can get like a defined risk return on your capital for a naked position. So that's definitely something to keep in mind right now.
See, we're not scared like you old guys.
I know what you thought he was going to close out his SPX.
In the young guy range.
You thought he was going to close out his SPX. You think he has paper hands, Tony? Is that what you're telling me?
See?
No. I mean, it would have been. Let's just assume he get filled at mid price was a big if, but he could put it back on right now for 50-cent profit on the whole thing after he sold it for an 80-cent profit.
It's all right.
Well,
Well,
what am I supposed to teach him?
Oof.
Yeah, well, that's always tight, because I closed out a position today, and I was like, man, if I just waited a little bit longer, could have took an extra $1 out of it. But I mean, you can't think like that, you can't.
You can't.
No, because you're down $1.50 today. You know what I mean? Like the markets move, things change. When you got 20% implied volatility like we do now, and it's consistent, and it doesn't look like it's going anywhere.
No,
you got to trade it. That's the way I look at it.
Yeah, and I would say this is
big
where it's
oil questions. I know there was some. Go ahead.
Yeah, just really quick. I think this is really important topic to touch on. This is where the number of occurrences really plays in, because obviously you can't time the market every time, and so as you keep those number of occurrences higher, the probabilities will just play out.
Sure,
for sure.
Look at him being the voice of reason, Nick.
I know, seriously. Quick little PSA. SOX S, SOXS. It's a leveraged, 3 times leveraged semiconductor ETN. Has a split in the middle of next week.
Could it be a reverse split?
A reverse split. I think it's 20-1, right, Q? Do you remember the number?
Yes, that is correct. Linda from the back office, she told me to talk about this the other day, and shame on me. I did not. Linda's probably one of the most important people at this company, and I let her down. So that is my bad. But yes, we've got a split going on in SOXS 20-1.
And it's on Wednesday, right?
Ooh, I forget the actual date, but it should be pretty easy to find on the internet. Those things aren't hidden. Yeah.
Yeah, you can Google search that. It'll be on the OCC website as well. But it's a 20-for-1 split. I know people trade this as like a stock position with $1, share price. You can't really do options there, but just keep that in mind. Things are going to change with those options.
Yeah,
options will go to non-standard if you do have options, so it gets funky. And we'll talk about it more next week.
Yeah, this is not the first time that this has split. I don't think it's gonna.
No, it splits. It probably splits every, like all these anything that has 3x has to split because it goes to 0.
I mean, there's a gold miner ETF that's going to. There's a few of these. There's a MU Bear one, a Tesla Bear one. I mean, there are a lot of these. They have to get leverage. They have to do something to get leverage. They've got to buy leverage. It just doesn't happen out of thin air. So what they're doing is they're usually, buying a future at one price and then having to buy it at a higher price moving forward. So they have to use more money to do it, which makes the price go down. Even when you get the movement or not. Remember, a 3 times leverage doesn't mean it has to. If something's up $1, this is going to be up $3. It's just an average. It's not like that. And I think these are very hard to trade. And they've got good open interest across the board here. But I really would run from these types of products myself.
Yeah.
Yeah, this is something
I don't trade them. You can do what you want.
Yeah, this is something I always like to caution investors about as well, because people will want to hold TQQQ example for a really long time. But due to the volatility decay, you're not going to get 3 times leverage over a long period of time. You get 3 times leverage for a day or a week, and then the volatility decay really comes into play, and you're not actually getting the same bang for your buck.
Yeah. Cool.
Very good. All right, let's get to your list, my friend.
All right, we've got top 20 symbols going through the system and their IVR. Let me get the list pulled up here. At number 1, we've got Tesla with a 1, Microsoft 33, Amazon 28, NVIDIA 20, SLV 75, Micron 77, GLD 61, iBit 52, Netflix 34, Google 20, TQQQ 30, TLT 9, AMD 51, Palantir 20, Meta 17, DDOG 58, Spotify 27, SNDK 64, Oracle 94, and SoFi 25.
Beautiful.
What do you think of that list, son?
A lot of the same suspects on that list. I'm still surprised Tesla continues to be the top of the list. I mean, I guess, is it moving today? I haven't even looked at it today.
Tesla
$4 move. It's nothing.
Yeah. I mean,
what are people seeing? What are they seeing there?
Well, Tesla traded down to 400. It traded up to 407, so it's only down $4 now. But I mean, I don't know. I mean, it has a I don't even know if it has a high correlation to the market it used to, but it's a mover. I mean, you what'd you do in Microsoft?
Not Tesla. I sold another put in Microsoft. 375.
Oof. Don't fall in love, son. This is a stock I like also, but don't fall in love here.
Oh, it's okay. I'm within my size parameters. I went out to April.
Okay.
So I got the 400 that's in March. I just sold to April.
It's almost like putting on laddered puts at horrible prices.
No, at better prices. Stocks at lows.
Depends on how you look at it. Yeah.
It's never been that price in the last year.
Close.
Yeah.
Even the S&P down 50, NASDAQ down 140, Russell down 48, the Dow down 600, volatility up 84 cents to 2060. We've sold off by about 10 or 12 handles. We've rallied by about 30-ish handles. We've been in a fairly tight range here so far for the E-mini S&Ps, all things being relative, been in a tight range since we opened. E-mini S&Ps expected move for the rest of the day is $30. I was going to do one other thing and I completely forgot. Your gold-silver ratio spread is trading right there, maybe a little bit lower than where we put it on. As silver has caught itself a bid here, you'll notice it's up about 7 1/3%. And gold hasn't moved at all. It's up around 1%. So it really has been a very heavy silver-sided trade. We're going to take a quick 90-second break. I'm going to thank you, Q, for coming in here. I'm going to thank everybody for watching the show all week long and into perpetuity. Appreciate it. We'll take a quick 90-second break. We'll come back. We got Liz and Jenny next. Sound good to you guys?
Sounds great.
Thank you, Q. Peace. Good job.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
welcome to a very special edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette next to me is Jenny Andrews, and this is her very last show in her 40s. Her birthday is Tuesday. She's taking off Monday and Tuesday. Well deserved, because you've worked very, 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 very hard this year to celebrate your birthday with your family. But it's been an honor to celebrate this decade of shows that we have done together.
Oh my gosh! Thank you, Liz. I was thinking. I was leaving forever. I was going off air with that send-off. I will be back on Wednesday, 1 decade older.
And we will be celebrating on Wednesday as well, because guess what happens when you get old and you're on the tail end? Every day is a celebration. Right?
Every day is a celebration. Every day. I mean, I land late Tuesday night, do the show Wednesday, and already have plans as soon as we get off the train Wednesday. The party just continues. The party, this 50-year birthday celebration is going to continue all year. Every time one of us comes.
I like it.
So, you know what party isn't happening right now?
What party? Talk to me.
Let's go into the market. Let's go into the platform. This CoreWeave party, no bueno. Nobody likes it. Nobody liked the CoreWeave earnings.
Nope. No, they did not. So when I was looking at it today, what do we have? I think we have the 82 put, correct? Can we take a look at it?
Yeah, yes, the 85 put.
Oh, that hurt. Okay, so can we take a look at the chart in CoreWeave? I want to see what it did today, because it didn't look this bad earlier.
No,
so,
I know. It's gotten worse as the morning's gone on.
It has. It really has. CoreWeave still has a 70 rank. Let's you know what? Let's put a positive spin on your last 40th decade show. It still has a 70 rank. We're left with a put. Let's roll that put out in time and get it the heck out of the way.
Okay, so, and I want to, just because this is something we've been talking about lately, Bob on Fire has been doing long-term trades, and sometimes lately we've been looking at more longer-term trades. And just to compare, so people are aware, we've got the 85 put in the 0 day down about $289, and my put is a long-term Jan put, and it's down maybe $200. So it's not that much difference, other than the strike is the big difference, right?
Yes, strike is the big difference. You're going to be a lot farther.
But as far as the P&L, it's not that different.
No, it's not.
So I was actually surprised that my Jan put was down as much as it was.
A little bit less, but yes.
A little bit less. My put's the 60 put. We've got the 85, mine's a 60, and I was surprised it was down. It's down $200 or so, being 60 put, but out in Jan. So that means we're $17 closer to the strike. Boost in vol for sure with this down move.
Let's roll that thing out in time.
Okay, and
so I do think, and I mean, once again, we're a kind of advanced options traders, but I do think if you know what you're going to do when the wheels fall off, it's a lot easier to be like, hey, this doesn't, what I like about CoreWeave is we're getting back $1,600 and we're going to move our strike. I get that. But it didn't hold up as much. I'm only saying Circle is the one that holds up a lot. CoreWeave always had a decent return on capital. So we're going to close this and roll it out in time.
Okay, so we collected $2. Now, one of our old friends who was a super trader, she would say, if something was really going wrong, get it the heck out of the way. And I want to start that thought process of when we're rolling something that's gone wrong, let's look. Like if I roll this to April, whoa.
That's not that. I don't think that's the heck out of the way, though. I don't think 49 days is the heck out of the way.
No, 49 days is not the heck out of the way, but I wanted to make sure we were getting a credit and moving it out of the money. And
my God, you got $5 and $5
Yeah, yes. Get out your party hats. Get out your party hats. I've got my birthday. I would put it on, but I think it'll disappear. I can't believe I did not think we'd get out of the money strike and $5 credit. I'm
not gonna lie to you. If that's not price discovery when two people are actually shocked when they see things, I don't know what is.
I thought we'd have to go out another month to get it out of the money and taking a decent credit.
That's a good chunk. And so press that button, Jenny Andrews. Now you can go down. Hold on. You can go down to like the 75 if you want to.
Yeah, if we took in $2 and we want to just take in another $3, we can go. That's what I was thinking. 75, we're $5 out of the money. We're taking another $3. So if we took in 200 and now we're taking in 300 and we're gonna have the 75 put, our break even 70.
And we're taking. I know this is gonna sound weird, but we're getting back $516 in buying power.
Mm-hmm. Okay, so I'm going to push this. I'm going to send this if you're okay with this.
My name is Liz Deerking, and you get my seal of approval.
Okay, I will say this was the easiest managing of an in the money losing short put with the stock down almost 20% that I've ever seen.
I second that. I mean, I did not expect that.
Not at all. Not at all. And now, since we're in here and I'm not in my account and I have to, we have a meeting after this show.
Oh, we're not rolled. You didn't get filled yet, did you?
I'm not rolled yet, but I'm
okay,
just
because I look for the owner.
With this kind of premium in April. Okay, now we're filled. With that kind of premium in April, I'm just curious what did I say? I had the 60 put. So if I had the 60 put and it's down $200, yeah, because I collected, I think, $1,100. So it's down a couple $100 and I want to move it up because that April premium just looked too good to be true. And I need $14. No, I couldn't go to April.
You can't. I don't think you can start far and go near. I don't think you can start far.
Yeah. I could move it. I mean, I'd have to go from the 60 to the 80, but I'd be going to the June.
I know, but like you're going from the 60 to the 80.
And I'd collect two extra dollars, and I originally collected $1,100, so I'd be collecting $1,100, $1,200, $1,300. It's not terrible.
It's not terrible, but I prefer the other way around. Like, you know what I'm saying? I prefer the opposite.
I just there's a lot of premium in CoreWeave, which it's last year it was CoreWeave was one of my best performers last year. All I did was sell puts. I don't know if it was consistent. I don't think I constantly had to put on, but whenever it looked good, like lots of premium, decent buying power, it was one of my biggest winners last year.
Yeah.
So I don't know. Maybe I will. I might move my put back in time.
Back in time, like Michael J. Fox.
Back to the future.
Do it.
All right. So that's CoreWeave. We just rolled from Feb to April. Easiest roll I've ever seen in my life. And I've been doing this a long time.
And can you just close AMC? I mean, we bought it. Just close it.
Come on, Liz. You don't want to take 100 shares of AMC at $100?
No, thanks.
No,
thanks. I don't want to.
Let's just take 100 shares of AMC and see what happens.
All right. You can do it. Fine.
Okay, so this is a good way for people to learn options. If you have something in the money or out in the money and you don't mind it, like if I never had a long call before in the money and I didn't know it would happen, here, I have a long call in the money. If I leave this,
this is your lowest level of commitment of taking assignment on a call that you will ever get.
So Monday, we'll come in on Monday and we'll have 100 shares of AMC at $1. That's our strike price. So we'll have 100 shares of AMC at $1. It'll look like we're up $15 of AMC, still trading $115. I just kind of think that way I don't mind. I don't know. I'm leaving mine. I'm just taking them.
You're going to be gone. I'll close it on Monday. Go for it.
Okay. Now, what else?
IBIT. We have to look at the red in the money IBIT.
Oh, that's the Jade. We throw Jade lizards around our synthetic stock, and that's what we've got going on here.
This one is a win.
Yeah, we're short the 37.5 put. It's 37.34. So it's, let's see, 70, 136.
Yeah, it's a winner. I mean, just pop out the side, see what we got, and see what we're closing it for. Just pop out the side, see what we got, and see what we're closing it for. It's way easier.
For $78. We made $78.
Okay, so just so everybody else can see, can you pop out the side, see what we got for it? Yes, and then we'll put on another one. So we got 97 cents for it, and what are we closing it for?
30 cents.
Perfect. So this is a winning trade. We're closing it. We're going to put another one on next week.
$68.
Yeah.
Well, at least it's a winning trade.
Yeah. I mean, this has been good. We're getting premium in IBIT. It's doing something to chip away at our cost basis.
I'm canceling this order because we only need to buy back the puts. Like it said, no
I know,
bid.
but that was a good example to show like how you can see what price it's closing for.
So this has no bid, and there's nothing going on at the 40 and a half, 41 and a half.
There's nothing going on down there.
Oh, there's nothing going on at this 33. So
no, you'll hold up a lot of capital, but it'll be for whatever.
No.
Oh, no, you're getting rid. Yeah, you're getting your shorts. Just close it.
Yeah, we're buying back our short. That's it, 30 cents.
Let's put on a new one.
Okay, so we still have, here's our
zebra
zero extrinsic back ratio, synthetic long stock in the 21 day. We'll do another weekly Jade Lizard.
Yeah, so we go backwards with it. So start with the call spread so we can see what we're getting for it.
And I just want to say, we're not going to be able to do it here in the 7 day. Like looking at that at the money put, it's only 86 cents. It's never going to work. So
because you need to get $1 for one put. So go in time a little bit.
So I'm going to go to the 14 day. I'm going to go out 2 weeks. And I can see here, I can get the 36 put for close to $1.
Okay.
All right. Liz, do you want to walk us through the mechanics?
Jade Lizard is easy. This is kind of a backwards one because IBIT uses quite a bit of capital, or more than we want to hold up for our premium selling. So she's
selling. Does it now? Let me see. With only $35, it doesn't anymore.
It's 50%. It's holding up. It's holding up almost 50% instead of 20%.
But we have $1,200 to spend. We've been throwing away that 24 cents every week. I think with IBIT in the 30 range, we don't need to buy. When IBIT was 60 and this was using 2,500, but we don't need to buy that put anymore.
And it'll be the first thing we can look at because we know how to do it with cheaper if we need to. So yeah, just do a regular Jade Lizard. Go with the 35 put.
So if I sell that 40-41 call spread, it's only 20 cents.
No, that's okay. Go with the 20 cents and find 80 cents on a put. It doesn't matter.
Okay.
Well, there you go. Then because I think you're going to do then the 35 and a half.
Yeah. So if I sell the 39 and a half, 40 and a half call spread for $24 and get $80 on the 35 and a half, we have $1.04.
Great. Ship it.
So the whole concept of this weekly Jade Lizard against our long stock is, if we can make $100, I wondered maybe we could do it in the 7 days since we don't need to buy something.
If you don't need to buy something, you for sure can.
Yeah. It's 36 and a half put for 70 cents. And the 39.40. Close enough.
I think it's close enough. I'm happy as clam with that.
All right. 90 cents. 90 cents. Dollar wide call spread and a naked put Jade Lizard in to try to make another $100 next week.
I like it.
Okay. That's IBIT. Any more? This is what we'll do on Fridays. Look for these red in the monies.
I mean, we have to, just because you have to take action or you'll take ownership. I'm really trying to get that symbol or that quote to take grow some teeth. You have to take action or you'll take ownership.
I thought we had a bullish position in Microsoft. Why are we making money when it's down?
No, Jenny, we've got that is
a crab.
It's a crab.
It's a crab.
It's a crab. We're losing money on our long, the April 390, but we're making money on the
21 day.
21 day. You can close that whole thing for 110.
Yeah, let's see if we can. So we paid.
And we'll live to fight another day in Microsoft.
Sure. We paid $880 for this. It's trading $990. If we can take $100 out of this.
Yeah, do it.
Sure. $995. No, I mean these markets
not that wide of markets. I mean,
no,
you can go $990. I don't care.
Yeah. Yeah. $990.
That's great.
Fine. We weren't in it that long, and we had a lot, $880 was a lot to pay for that crab. So to make $110, and we were in it for only 3 days.
Yeah, that's not bad at all.
No.
Okay, no more in the money signs. I'm trying.
QBTS had earnings. Look at that, dog.
Oh, we put that in yesterday.
Yeah.
We're in the 21 day. Do you want to take it out to the April?
Sure.
This isn't going to be nearly as woo.
No. This is gonna be what we're used to seeing. All right, let's roll this 19 put in QBTS out.
Do you want to take it farther out in time?
Let's look. So if I want to roll it and keep it out of the money,
we could go to 18. That's not bad.
That's not terrible. We can go to the 18, take in 15 cents. That's not terrible. I'm just going to show if I moved it to.
Well, you would move it to a different. Yeah, and then you're going to roll it down. That's not bad.
17 and taking $1.
That's not bad. I like both.
Yeah, I like both. We could keep it in the April. 18 is right where it's trading. That's fine.
Yeah, let's give it a fighting chance.
15-cent credit. And what did we collect yesterday? $1.15. And SMR had earnings. Let's look at that because we sold puts in there too. I think that's down too.
What the heck? I mean, but I will tell you, spoons are only down 37. That's a rally in the alley. Because
there's a rally in the alley. Get your stocks.
I thought it was going to be more of a bloodbath today.
It's not terrible. It's not terrible. Spoons down 36. I did not do any 0-day SPX today. Did you?
I did. And I'm going to tell you something else that I've been doing. And I don't know if I'm proud of it or if it's a shameful trade that I'm going to tell you about right now. But I am digging out of a hole in SPX because I made some stupid moves in it. But I'm finally in the green in there. But I have also joined the team NASDAQ, NDX. So I'm doubling down and I'm doing an NDX too. Instead of doing multiples of the SPX trade, I'm peppering the infield because sometimes they move at different rates.
Yeah, no, you're not, now I think you're talking to TP. You're talking to TP.
I talked to him for an hour yesterday and he's rubbing off on me.
So TP does the NDX, which we love the SPX. It's cash settled. NDX, you got to get out of it. It's not cash settled.
No, you don't. No.
Oh, no, those are cash settled too?
Yeah, they're just not as liquid.
Oh, so you're not trading the NQ options. You're trading the NDX.
NDX, baby, the big dog.
Ask TP because I have a feeling he trades the N. Does he trade the NQ option?
No. Just go to NDX. I'll show you what I'm doing. He does NDX, I believe, and this is what his point is. So NDX has a 27 rank, and SPX will probably have like a 22. It's the same concept as SPX. It's just not as liquid.
Right. It's not. The markets are. You can see the markets are wider. It's not quite as liquid.
Mm-hmm.
What'd you sell today? Like how far out?
You know what? All I did was
like how far out? How wide?
And these are, so one strike is $10 wide, even if it's 5, I think. So I went all the way to the expected move. I just do a $10 wide. So, I mean, it was earlier today, but I got, no. You got to go narrower than that because you got to do one strike apart. There you go. Yeah.
Okay. Yeah. So I kind of like it doing some SPX, doing some NDX. I wish I would have gotten it today. I was just busy packing.
Yeah. Oh, yeah, for your birthday trip.
Mm-hmm.
I would be packing too.
Right. We had to drive Lily to school, so she didn't have a car at school. It was a busy morning.
Yep. Got to get rid of the dogs. Busy morning.
Okay. Trying to make backup plans because it's raining tomorrow.
Oh.
And let's take a look at the daily move. So this morning, SPX, we opened at 68.56, and so we're $12 higher than where we opened.
Yeah. Mm-hmm. But we did go it was lower, right? We went all the way to 68.31. Yeah, I mean, it was significantly lower.
And we were as high as 68.75. So we've been moving.
Yeah.
We have been moving. Okay, SMR, they had earnings. QBTS is rolled. SMR had earnings. We went further out in time to give ourselves room, and it's still out of the money, and it's up a little bit. So I think we just leave that. We can put in a 50% GTC.
Yeah, we leave that. So take a look at this, though. This is what I love about options. You're just putting in a GTC. We sold this. Now, granted, it was in the 51-day. SMR is down 2%, which is not down that much, but we're still out money.
So if SMR is down, what did Oklo do on SMR's earnings?
I don't know. I didn't see it.
Ooh, down 8%. Ooh, boo. Ooh. But I feel like it was up that yesterday. Yeah. Like, see, yesterday it popped up and now it's back down.
I know. It's okay. Okay. Jenny, I'm just talking to you and to the viewers. We have the market measures recap from Kai, which we have to go through. Mm-hmm. We are taking live tweets, put the hashtag LIZJNY, and we will go to those as well. But we want to make sure we're cleaning up the account first.
Yes, we hear our tweets. I wanted to what happened?
You should have let me. You know what though, Jenny? Okay, so I apologize. I should be running this show today because you've got a lot of birthday wishes, and so I'll guide so you're not like, oh, and they say happy birthday again to me. I will read them.
No. I was concerned at what Mikey was saying, where he says saddest day of the dive trip.
Oh no, because he's got to leave.
Yeah.
I get it. I'm picking up what you're putting down, Mikey.
Saddest day, last day. We leave tomorrow. Well, I'm glad they had a wonderful time. And I love that he shares some of his pictures. They're always amazing.
Oh, they're amazing. Like I said, I mean, I aspire to be like all of our viewers. I want to be like Mikey Underwater, the Polish Warrior. I want to be Jack Tucker. I want to be, and Bob on Fire. I want to be a blend of those three people.
You
and
want to know
pixels? I want to be able to stay up till midnight every night.
You know who I want to be? Annie from Colorado, because Annie from Colorado, she wrote happy birthday to me on the Women of Tasty Trade Facebook page and wrote like 50 is nothing at 70. She listens to like all the things she's doing. She does more in a day, Liz, than we do in a month.
She's like a Marine. We do more before 6 a.m. than most people do all day. Yeah, I agree. Annie from Colorado is awesome.
I know. She was going on some like crazy hike yesterday. I don't even know it was a bike trip because I think she was wearing some kind of spike shoes, like hiking somewhere and then going out for drinks after.
Good for her. That's what I don't want to ever give up. I'd like the drinks after. I'm doing something similar today. I'm walking around the neighborhood and then going for drinks afterwards.
Sounds like a perfect Friday. Okay, so let's see. Fabio. Oh, thanks, Fabio.
Oh, you know what? I'd be remiss if I didn't do this. I'm pretty sure he's not watching, but today is my father-in-law's 76th birthday. So happy birthday, Larry.
Happy birthday, Larry. Larry is amazing. Larry didn't know options at all. And I don't know how many years ago it was that you started teaching him options. And
I'm not going to lie to you. He's a self-taught human. So he watched the shows, watched the videos, watched everything and did it himself. We just talk about it, like what he's doing and what I'm doing.
And Larry's killing it. I can't tell you how many years Larry has outperformed the two of us.
He's doing a great job. So we celebrate with him tonight. But yes, and I know two of my favorite people have birthdays very close, Jenny and Larry. There you go.
And I love Larry. And You know what, Liz? He's a Pisces like me. We're both, I think he is. I think February's still Pisces.
I have no idea. I don't know his sign.
And we're both pretty like calm, cool, and collected and enjoy life and relax.
Say more about yourself. And project it onto Larry.
As I was rattling off that list, I was just laughing, in my head, thinking, okay, so who shares this birthday weekend? Larry, myself, and Tom Sosnoff.
Tom Sosnoff.
Yes.
Cool.
And he's not like, if I had to think of who am I not like, it would be him.
Correct.
And we're both Pisces. So much for the zodiac.
That is pretty funny. Okay, so here we go. Eric Blue Wackadoo, done for the day out of the manuals for 465 after fees. Good job. Letting the bot ride a bit longer. Oh, by the open. But I might close it soon to keep with the always take the quick win rule. Time to go rally race around the field. Yeah, there you go. Come on.
Yeah, Blue Wackadoo. He trades and then goes and enjoys the rest of the day.
I know. I want to be blue. I'm going to put blue Wackadoo in my mix. I want to be him too.
Yeah. And Uncle B too. Oh, thanks, Uncle B too.
Uncle B too. My favorite was when we ran into Uncle B too, that last trip we were at, because he had a thing on that just said, I forget what it said. I don't know. And I was like, are you? He's like, I am. And I was like, it was. So we had a moment where I was like, "Are you?" I didn't say Uncle B2, and he knew that I knew what we both meant.
I know. That's awesome. All right. Thank you very much. Thank you. Oh, and thank you, Jew Lady. Welcome to the 50 Club.
I know. Jew Lady was so close.
Amazing. She looks
Jew
amazing.
Lady, she does look amazing, but she was so close to winning the SPX.
Oh, right. The end of year.
And yeah. Tony was butchering her name. I was screaming it into the.
Well, I will say we used to butcher her name until she talked to us and was like, "Girl, sure. this is how you say my name."
Yeah.
Okay, so thank you very much, everybody. Lurkin Lou, question on MO. I sold CVD covered
calls.
I sold covered calls, 65 strike, 20 delta. 320 expiry for 37 cents. My cost was 64. Option currently at 525 stacks. Okay, so should I have rolled? Now, if you have,
I have the strikes pulled up if you want to look at it.
So when you have a covered call, it's best to roll when the stock's starting to go through that call.
When it starts to touch your call, right? So he sold the 65 covered call. It's the 320 expiry. So was that?
So he has the stock and he's got the 65 call here. Now he sold it for, very little. But again, I get it. If you're getting this is kind of how I've got my in-laws account going and I can tell you what I do when this happens to them. But if you have that, if you
I'm
sold
going to
that-
guess, can you take a look at the chart? I'm going to guess it didn't pop up. So I would roll it when it, did pop.
Yeah.
It did pop, but you can see it, when it was at 65.
So, but I like, let's say he's got this and he's getting the dividend, because I'm sure this dividend is decent.
Yeah.
So he's getting what do we have here? 6% dividend. And then he figured, I'll get a little extra money, like give a boost to my dividend. So he only got like 65 cents or something from that call. Super frustrating. I've been there. Now it's worth $5 and you think, I wish I didn't sell that call because I could have made more money.
But you can't look back. This is a forward thinking game. What are you going to do now?
So you could say, I still want to keep the stock. I don't want to sell my stock. I'm going to
out of the way.
Yeah, you might have to go further. If I go all the way to June, 5/15.
Yeah.
I can go to the 65 in June, collect $1.30 credit, and no, I still have my stock. I'm still getting those dividends. And between now and June, I'll make another $200 on this option. Can
you bring it up to 67.5?
No, you'd be paying.
Yeah.
I don't like to pay.
I don't like to pay either. I just didn't. I was just like looking at the prices of them because it looks like it was about $1.70 lower.
But if you wanted it more at the money, then you can.
No, I mean, that's fine. That's good.
You can move to the July even then. You got.
I mean, that's something I would do. You're moving it out and up.
Yeah, you'd have to go all the way to September but then you're still you figure you've got the stock, you're getting the dividend, and you're getting the extrinsic value in that option. If it gets too far away from you, at some point, you just kind of make the decision to say, well, I'm going to close the stock. And I went through a similar experience with Clorox, and I ended up closing the stock because it blew through so far. I couldn't keep up with.
So let's talk about this. And I know it's hard. It's a bitter pill to swallow. But like I said, this is a forward-looking, not a backward-looking game. This is a high-class problem. You put on a bullish trade, you made money, you got the dividend, and now you got to close it and look for something else. Like, you know what I'm saying?
Yeah, right. Again, you can keep that. You can keep moving that call out and moving it further if you don't want to sell the stock. You can. It's not impossible. It's not an impossible thing to keep going. I remember, I can't remember which viewer it was. Maybe David Poon or someone who had like the 205 calls in Apple, and Apple was trading $100 over it. Now when it comes time, what you do have to be aware of.
Do you think David Poon and Punished Pixels know each other?
Yeah, I think it might be the same person.
I
don't know. Okay, so what you do have to be aware of, if it says dividend March 25th, and you don't want to lose your stock, this is what you have to be careful of. Dividend is $1.06. Then I would for sure roll mine out further, because what were we looking at rolling it to? June?
Yeah.
So if I have this June 65 call, I'm safe. I'm not going to get assigned on that when it goes ex-dividend, because this put is worth $1 more than the dividend.
You have to make sure the extrinsic value of your call, so you assess the corresponding put, has more extrinsic value than the price of the dividend. Meaning, like if you were in a lower strike, if you're looking at, I forget what the dividend was. If you're at the $60, yeah, if the 60 strike, you're gonna get assigned.
So if you only rolled this out to like April, and you rolled it to the 65 in April, well, when ex-dividend date comes, if this corresponding put's less than the amount of the dividend, then you're going to get assigned, and you're going to come in and your stock's going to be gone. It's going to get called away from you at your strike. So if you don't want to have your stock called away from you, then I'd move it far enough away where there's enough extrinsic value that's more than the dividend.
Yeah.
Mm-hmm.
Agreed. I like it. Okay, so, Jenny. It is now 10:32. There's a couple birthday wishes coming in. You got to see Blue Wackadoos. It's pretty funny. And I'm sorry I'm not running it. I should be running it for you so I can be like, and another birthday wish for Jenny, because now I'm making you do it yourself. This is
so funny. And I played the SNL, like I'm 50 years old. I played it last night for my daughter because she never.
Did you like it? Because I can kick and I can stretch.
Thank you, Blue Wackadoo. Whoops.
We got Fabio coming in. Happy birthday. Did we already do that? Okay. And then we've got Ajit coming in with all business. Let's retweet his stuff. He's got Adobe. He's got the expected move, earning cycle, gives you all the information. He's got an Adobe short strangle, the 223.10, collecting $8. That's going to be a little bit of heavy capital for us, but Ajit knows his stuff and it's good to look at.
You can see it here. You've got a wide win range to keep that. What cycle is he in?
It looked as if he was in the
here, 417.
417. Yeah, 417.
49 BTE. I'm gonna retweet this. Repost. Yeah. Ajit knows his stuff, right? And he's so great idea, great trade idea, Ajit. We just can't afford it in this account.
Yeah, I know, but that's why I said we got to retweet it for others to see it. Yeah. And then the beautiful Fauzia comes in, wishing our lovely Jenny Andrews the happiest of birthday celebrations. You go, girl.
Oh, thanks, Fauzia. And we haven't talked about this in a while. For those who are newer to Tasty, Fauzia runs a Facebook group, Women of Tasty Trade, on Facebook. It's an excellent resource.
It is not. I mean, I would just like to state for the record that this is her. She's the owner and operator of this, and she's a wonderful wealth of knowledge. That is, I'm not saying it's not through Tasty Trade, but this is a legit Tasty. She's facilitated this. She's done a real good job making sure you are a woman, which I liked.
It's a wonderful resource, and the ladies post on there trade ideas, questions about trays, and other things too. So it's a lot of fun. I love keeping up with it. And if you want to see more of Fazia, and thank you, Lurkin, he says great insight and explanation. If you want to see more of Fazia, you can find her down here on the follow page.
Yep.
You can follow. Where is she?
Right there, under arrow. There you go.
You can click on her and follow her trades. So today, she sold staggered puts in CRV. Good job waiting on CRV.
Yeah, good job. Hold. Yes, she did a good job. No, she's very clear of the concept, and we are lucky enough to call her a friend. So yeah.
Yeah, she did. So you could see everything she's doing. And I like to look at the symbols, see what she's up to. She's got a lot of KTOS in here. I don't even know what that is, Liz. Do you?
I don't know what that is either.
Kratos Defense. I don't know how she heard of it. She's in it. Maybe we get in it.
So it's 6 million shares have traded. It's an $85 stock. You got a 70 rank. Is earnings coming out? Or do they have earnings? No earnings on the horizon.
Let's go back and see what she's been doing. So that's a close roll.
One of them was bought risk off. So I see that says she's rolled at risk off, custom roll modification, bought modification. So she's probably digging herself out of something.
But let's take a look. I'm curious.
No, I will tell you, Fazia's got a larger account than the show account, so she puts on a lot of trades that have a little bit more capital behind them.
Look at this. We might have found something new.
So it doesn't seem to be one of those.
Not worried about capital here. $700 to make $300. That's not bad. Hey, Fazia, she finds some of these gems.
Yeah, she does. All right, I don't mind jumping in.
Again, I don't know what this is. We've never traded it before, but when I see we could use $700 to make 320, our break even is 67 right here.
You know what's interesting, Jenny? And I think that you and I failed to talk about this a lot. You know, we do a live show. We've been doing it for a long time. And you said, I don't know what this is. I don't know what it is either, but I know that if it's liquid enough, now there is only 2 stars in liquidity, but if it's a liquid trade and you're looking at it from a clear, almost an analytical eye, meaning, you got a high pop, low capital requirement, and you know what's going to happen in the worst case scenario, I don't need to know all the intricacies of what a company does. I actually think that can be analysis paralysis for a trader sometimes.
Right. Yeah. So, I opened this up just to look at some things. Again, 2-star in liquidity, but the markets looked decent.
That's what I'm saying. If it comes to us, great. With a naked short put, it can come to you if it comes down a little bit. 3 at 340, 320.
All right. You're going to watch my 320 offer pop up.
Get hit right away.
Here I am, 320. Come on and hit me.
All right, let's leave that. Let's leave that in there because I want to make sure we get to the market measures recap because I didn't see it yet today.
Okay. I'm just checking, going top down, making sure Fazi's not coming in saying like,
don't do it.
Don't try it.
I'll keep it. She'll text us if that's the case. I'm going to.
Okay. All right. A market measure weekly summary. This is what the boys have been doing in their market measures all week. And we are getting the summary just in case we miss some big news.
Yeah, and so I like that Kai put this together for us because we wanted to know, we just want the highlights. We want to see what has happened. If you want a deeper dive into this, the market measures titles will be on there, and you can go back and take it to the tape and rewatch all how the sausage is made.
I'm really happy Kai put this together for us because I'm pretty sure Kai's on vacation.
Yeah, I think you're right.
Yeah, I wasn't sure. I wasn't 100% sure when I wrote
Hardest working man in show business.
I know. When I wrote him back, I didn't want to say like, oh, I hope you're having fun on vacation.
Well, you know who else is a birthday? Who's just like Ty? Kai.
Kai. Yeah, Kai. Trying to think. There are some other there are a lot of birthdays this time of year.
Yeah, agreed.
There are. We have a lot of friends who have birthdays this time of year.
Yeah, we do.
Okay, yeah, right. Back in, we digress. Back into a weekly summary of the market measures.
Okay.
All right. How does volatility change over time for strangles and straddles?
I'm on the edge of my seat. Let's see. Okay, straddle generates higher volatility than strangle. So straddle is at the money. Strangle is when you separate them. Higher volatility than strangle because of its larger delta and gamma. Any small movement in the underlying price would cause a bigger P&L change for a straddle. We discovered that P&L volatility gradually rises as we approach expiration, but this increase slows down nearer to the expiration date.
Excellent. Amazing. Why do you think the numbers are tilted down at the bottom?
That's exactly where my eye line went to, and I don't know why.
And it would make sense if this were tilted too, but then this stands straight up.
What does?
This last number.
No, mine's still tilted.
No, the last bar. The very last bar. See, it goes 1, 2, 3, 4, 5, 6, 7. The 7. Oh, yeah. The 7. I was thinking it was like, I don't, you're right. It is still tilted.
It's still tilted. I was like, it's still tilted.
What do I take away from this slide? Why did they tilt the numbers on the bottom? Next. All right. As we move to higher delta strategies, volatility accelerates more quickly. By expiration, the volatility of a 30 delta strangle is double that of the 16 delta strangle.
Yeah. Okay. Yeah. As we move higher, that makes sense, right?
Yeah. As we move to higher delta, volatility accelerates more quickly. Sure. So if you're going to sell 30 delta instead of the 16 delta, you've got, you're going to take more heat. You're going to take more heat.
Yeah, you will take a little bit more heat. Okay. With a straddle, volatility spikes significantly each week, nearing 80% expiration. A situation traders should stay away from.
With a straddle, nearing 80%. Okay, so basically, when you're getting close to expiration, don't sell a straddle.
I agree with that.
Yeah, makes sense.
Yeah.
Numbers are still tilted on the bottom, but...
But it makes sense. All right, let's go to the next slide. Takeaway. Aggressive strategies like straddles often show higher P&L volatility and sharper increases in volatility as expiration approaches.
All right, to keep volatility within a manageable range, traders should plan to exit positions ahead of expiration. For strategies with larger delta values, such as straddles, traders should consider exiting their positions even earlier.
So let's talk about this from a Liz and Jenny takeaway perspective, because we joke around saying that we have to lower our bar as we get older. But what I do think is as you get nearer to the at the monies, meaning a straddle, I want less of a percentage, so this kind of edifies what we do anyway. If you've got anything that starts with the straddle, so think like big lizard, iron fly, straddle of those natures, anything that starts with that, our bar is much lower than it would be if it was a strangle.
Right. If we're selling this strangle, we can wait for 50% of our credit. If we're selling a straddle or a big lizard, we're always looking for 15% of our credit.
Yeah.
So we're talking about closing trades for a profit. It's a much, much, much lower percentage on a straddle or a big lizard than a strangle where your strikes are higher. Because, I'm just going to pull this up as an example.
Yeah.
And I'm not going to worry about time frame right now. I'm just going to pull up I just want to show.
As you're pulling it up, I think you can look at it from a different perspective too, like the common sense slide. If you're taking in a larger credit, which a straddle is, a significantly larger credit, your percentage can be significantly lower. Versus when you're selling a strangle for $1, when you need a higher percentage of profit.
So I don't want to say. I mean, these numbers are the numbers and they're right, but I wanted to compare P50. So like at this straddle here, my P50's in the 40s, right?
Okay.
I've got a straddle 21 days. If you go, my P50's in the 40s.
Yes.
Versus if I sell the 30 delta.
You know what's crazy? You got to go apples to apples, Jenny. Can we get the break evens the same?
Well, I was just showing like here, now my P50 doubles. Like my chance of keeping 50% of my credit doubles when I sell the 30 delta strangle versus the 50 delta straddle. So if my P50 is so low on the straddle, there's no way I'm looking for 50%. I'm looking for 10% or 20%.
Yeah, I mean, and honestly, like I said, we look at it from a different angle. I love that they do the research because people want to see the volatility behind it. But I said, if I'm taking in $2,200 in order to keep that because it's got to stay within this range, I am taking the lesser of a percentage.
And let's talk about that. If we're taking in $2,200 and keep 15%, so we're keeping, $220, $310, $330. We're keeping $330 if we take 15% out of this versus if we sell that 30 delta strangle and we keep 50%, we're making $500. It's not that much, $330 or $500.
I agree.
You get out of the straddle much faster.
Way faster. Way faster.
Okay, so that was the first market measure that they went over in the recap. The next one is on strategy performance in different market sentiments.
Okay, I'm very excited.
What do you feel the market sentiment is right now?
I think it's choppy. I mean, I know that's what I'm saying. I think it's choppy. I think the vol is keeping its wings up. I think we're getting two-way action. I think we're seeing a little bit of chop. And I think we're seeing some bigger movers, some outlier movers in individual names. And in my opinion, it could go, like we said, it could go up and they can go down on random stuff. We looked at XYZ. Well, we're going to look at XYZ during the show today too. But XYZ was up almost 20% today.
Right.
And with the market down huge. And so the general market was down huge.
You had CoreWeave down 20% today.
Yeah.
So I heard it was Goldman Sachs. It was like Goldman Sachs, a couple stocks taken down the market, right?
Well, yeah. I mean, you're getting movers in both directions, but I mean, I'd say it's choppy. That's if you ask me what I think the market is doing right now, I can't say we're in a bull market. I can't say we're in a bear market because it's almost a tale of two cities. Now, because we're down today, we were down yesterday, but look at that. It looks to me, that's Goldman Sachs.
Well, yeah, I was pulling up. So Goldman Sachs down 6%, American Express, AXP down 6%. There are a lot of these that were down big that were pulling on.
Yeah.
Okay. Back to the market measures. Various market sentiments influence the strategy's performance and profit potential uniquely.
And so for this reason, the study dives into strategies, adjustments within diverse market sentiments, focusing on both the strangle and the iron condor approaches. Okay, so we're looking at both of those.
Yeah. In other words, yes?
No, I was going to say, just breaking that down, iron condors are very hard to do when you have high implied volatility because it's more expensive to define your risk. They are easier to do when implied volatility is low.
Is that what it says?
No, I said that.
Oh. Yeah.
Because when implied volatility is high, it's very hard to define your risk because it's expensive to define your risk.
Right. But we're not selling iron condors when volatility is low.
No, we aren't. Correct. So it's kind of a double-edged sword.
In other words, how does the behavior of daily P&L and associated risk, the CVAR, within both strategies change under diverse market sentiments? Now, I don't know, but I feel like this is a Jacob study.
I don't know either, but let's keep going. Whoa. Okay.
The following table illustrates the behavior of both strategies in bullish sentiment.
I don't know what I'm looking at.
Let's try to take strangle performance across bullish sentiment periods, iron condor performance across bullish sentiment periods. I don't know.
I mean, I'm not gonna lie to you, Jenny. I can't read what's underneath those things, so I don't know what those bars mean.
You know what I was gonna say? I don't know that we're in a bullish sentiment period right now.
I know, I agree, but it's out there. It's in there. People can dive deep into this. I mean, that's something that I visually, my disability does not allow me to read those tiny little things.
Oh, I got to go back. Hang on.
Yeah, let's get the takeaways.
Okay, and this is this page right here, Liz, this is why we tell Kai, hey, Kai, just give us the takeaways of the market.
Yeah, we want the takeaways.
We want the takeaways. We want like any important revelations. So here are the takeaways.
Okay, on average, within bullish market sentiment, there's a 60% reduction in the standard deviation of daily price movements compared with bearish markets. Okay.
Okay, all right. With both strategies, they show the same likelihood of making a profit. However, during bearish market sentiment, there's a 37% decrease compared to the bullish scenario.
Okay. And both strategies exhibit the potential for profit, although COVID-related losses stand out as an exception, highlighting challenges in bearish sentiment. However, the iron condor carries risk compared to
reduced risk
strangle approach. Sorry, I couldn't strangle was covered.
Yeah. So now, if you want to actually see this market measures, you can in the archives. You can find it.
Just go to tastylive.com, look up the market measures tab, and you can go through and say strategy, performance, and different market sentiments. And you can take a deep dive and watch the boys break it down.
And you'll find it, right? So you might want a deeper dive into this one if this is something that interested you.
Yes. Jenny, I am keeping an eye on time because this is the last show in your 40s. We only have about 5 minutes left. We have to end on time today.
Okay, and we haven't put on didn't put any trades on, any new trades.
There's lots of things that I pushed out. So go to what we did today because
it was all management, really, wasn't it?
Okay, except for KTOS, and there's lots of volume in it supposedly. The feed was saying that.
Okay. All right, CRWV we rolled. IBIT we closed and put on a new Jade Lizard. Microsoft we closed. QBTS we rolled. KTOS is our new trade. Thank you very much, Fazia.
And let's put on a new trade in XYZ. And then that's it for your 40s.
All right. XYZ.
I know how much you like this product. You love XYZ.
Hey, it was saving my account today. And it's only up $7 now. Dang it, XYZ. I don't know what to do. I just have stock in here, but I'm just going to.
Congratulations on your wealth.
No. Now it's only. I haven't done anything to it yet, and it's only up $7. It was up much more.
It was up 20%.
It was up. Yeah. The high was 66. Now we're trading 61.
Okay, but that's okay. We're looking at it now. So not backward looking, forward looking. It's up 12% today. Let's pop. This has a decent return on capital too.
Okay, April 52 put dollar using $1,500. No thanks.
No. That isn't the return on capital I was expecting.
No, because that's the. Okay, then the 55 put $1.60. It's not amazing here.
It isn't amazing here.
No, it's not.
No,
okay. What was amazing, so you can find this on YouTube later, in our market movers piece that's coming out, that will be out on YouTube.
What looked really good to us was the longer term options.
I know. Call me Bob on Fire. Call me Bob on Fire. I like the going out a little bit further in time.
So if you're in December, you can sell the 50 put for $1,300 and you get $5. I like that better.
Yeah, I like this return on capital. We're getting $520 using $1,300. Now I know it's a December trade, but it's a good return on capital. I do like the longer term. When something's up like this and I want to sell puts in something that's already up so much, I like going a little further out in time.
I don't mind going further out in time. It's not bad. Well, I think when it works, it works. When it doesn't, it doesn't. Because sometimes the risk reward scenario, you'll go out this far and you're not where you want to be with the strike price or something like that, and it's holding up too much capital. So I think there has to be some kind of give and take with this, meaning the return on capital has to be worth the amount of money that you're putting out because it is a longer duration trade. And I don't know. Like I said, sometimes they work, sometimes they don't. I've opened up plenty where I was like, I don't want that.
Right. It doesn't always set up. But here, where we looked at April and said, okay, the 52 puts $1.
Well, it's holding up less capital.
To go to the 50 put, because you're a strike lower. So the 50 puts $1, the 55 puts $1,500. When I could go to December and get the 50 put for $5 and use $1,300. But if you add like what do we have left?
You have so many months left. You have March, April, May, June, July, August, September, October, November. You have 8 months left.
But let's say you're getting $1 and taking 50%. So, and you don't have March. So you've got April, May, June, July, August, September, October, November, December. 9 times, $900. Cut that in half, managing at 50%. You're going to walk away with $450. Here you're getting $520.
Without the management.
Without. put your hands on your head, kick your feet up, and relax.
Now, that being said, I do for the Gen Pop. Now, I'm using Gen Pop because we're addicts and I don't mind over trading because I'm in my account all day, every day. But for the Gen Pop, I think this is a really good way to look at things. And I would much rather somebody start in with something like this than going out and buying it for $61.
Yeah.
Still FYI.
So I'm going to send this. I sent that. I kind of... that made a little more sense to me than the April.
It didn't. I didn't expect, and I didn't look at the April earlier, but I didn't expect that.
Now, what am I going to do? I can't believe the stock's only up 7 now. Curses. At this point, I'm just going to say, I'm selling the right at the money call against my stock.
Jenny, I've been working with you for, hold on now, about 15 years, known you for a very, very long time, way longer than this. I've never heard someone say curses. In all of my years.
It was the first thing that came to my mind when I thought about what.
So, this is what happens when you turn 50. You're going to use words like that.
Yeah. Wait until next week. Wait until next week, Liz. We are out of time. Did we get to all the tweets?
We did. I've been keeping an eye on it.
Okay. We got to everybody's tweets. We're good for the day. Did we get filled on XYZ?
Yes, we did, and it's already pushed out. Jenny, I do have some closing remarks because we have about 30 seconds. I want to say that I've had a wonderful time with you in your 40s, and I look forward to having a wonderful time with you in your 50s because you are one of the best traders I know, one of the best people I know, and I'm lucky to call you my friend.
Oh, thank you very much, Liz. Thank you very much. I'm not going anywhere. I'll be back on Wednesday.
I'll be back on Wednesday. And we're going to slow clap around. I'm just kidding. All right, Jenny, you enjoy
I'm
your...
going to come back and they're going to say, like, sorry, Jenny, TP's in your seat.
So you enjoy your birthday weekend. Everybody out there, I will see you on Monday and Tuesday with the infamous Tom Preston. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Have a wonderful time with TP next week. I'll be back on Wednesday.
Have a great
trip.
Thank
you, Liz.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day, it's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit.
I gotta play it cool, you gotta look right. I gotta keep it smooth, you gonna want it right. They gonna bring it down, I gotta feel good. You wanna see my moves, let's party all night. We gonna build it up, and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. It is a fantastic Friday. The sun is shining in Chicago. The markets are down a little bit, which is good for traders. And that's all I really have to say. Jamal, how you doing on this Friday?
A sunny Friday, the end of the month. It seems as though we might be coming out of this winter thing a little bit earlier than Punxsutawney Phil predicted. Feels like it, but it's always nice to see sunniness in Chicago late February, early March. We're getting there, man. What's the next thing to look forward to? I mean, we got St. Patrick's Day not too far from now. Of course, before that, we got sports coming up. It's about to get wild in NCAA. I think this might be the last week for regular games before we get to tournament. Yeah, man, I'm hyped up. I'm going to Milwaukee for not the whole weekend, just tonight. Hang with my daughter tonight and through tomorrow. Hang with my daughter, hang out, go to dinner, chill, catch up with a buddy of mine. I'm looking forward to the weekend.
Love Milwaukee. Love the Fiserv Forum area. It's a fun time.
Yeah.
But yeah.
You ever been to that Deer District?
Probably. I've been to a game and I've hung around like that whole area. So
right.
I'm sure I was there. I just didn't know what it was called. just drinking beers with the boys, you know.
You would know if it was during a game, it popped off big time, but during their championship run, and like that whole area right outside the stadium, it was like craziness. I mean, it was wild.
I love it. Yeah, lots to look forward to. Spring forward is next Sunday. So we'll get an extra hour of sunlight. That's when things get real fun around these parts.
It's true.
But yeah, kind of an interesting day in these markets here. E-minis and NASDAQ down just a little bit, nothing crazy. Bitcoin and ETH, though, leading the way. ETH down 4.7%, Bitcoin down almost 3%. And then, of course, some others in there. You've got live cattle down almost 2%. E-minis, NASDAQ.
Stop the press, live cattle. Oh, my God.
Yeah.
Save the beef.
Those damn screwworms trying to mess with us. But yeah, silver and gold moving the opposite direction. Silver up a whopping 7%. I feel like this one is either moving the upside or moving the downside almost every day. But we'll take the rally in silver given our positions here. And would love to see that continue higher, even higher. Crude up 2%. Natty gas all up 1.5%. Gold only up 1%. But yeah, kind of an inside day all around, but a lot more futures products moving to the upside than downside in a meaningful way here. What say you about silver? Do you have any position management, or are you just holding as is?
Holding as is, just the SLV. Holding as is, 70, 100 strangle. I thought about rolling down to 75. Rolling up, excuse me. But I don't think it's worth it. We're good for now. Maybe if we get to, like, I don't know, 87 to 90, which again, your 87 is starting to, I'm sure you're like, wow, it's been a while. I needed this.
Yeah. Feels good. Feels good.
If we get there, I might actually roll my 70 strike put to the 75, but doing nothing right now.
Yeah, this rally is really nice for this position. We're only down $200 now, but that doesn't tell the whole story. I mean, we're in a really good spot now going into April because we're basically right at the money, but I've got $1,500 of premium collected. So break even in April will be 15 points lower than we are now, under 70, which is possible. This thing's been volatile, but glad to see it come back up towards the short put strike, which was certainly the tested strike during this whole period. And yeah, I already rolled down to the 100 strike call. So just chilling there. And we'll see what happens over the next couple of weeks. But SPX, let's talk about SPX real quick.
Before you move on to that, just curious, when's the last time you ever had a strangle that you did not worry about as much as this one? I mean, it's amazing. I'm telling you, this is one of the best trades I've ever been a part of. Knock on wood. It's just awesome. To have a strangle, even though it's moving, it's still seemingly contained. It's like it.
Definitely IBIT. IBIT was another one. IBIT and the micros. The micros have been great because we've been in this 200 point range the whole year. So we're already well ahead of our expectation for the end of the year. Like even if the markets go crazy, we've already collected so much premium that we have really wide break evens beyond our strikes. So anytime that happens over like a month or two, like you're set up for a really good situation for the rest of the year because you're just going to keep on collecting premium. You'll keep on making adjustments, and the markets have been choppy, but if we calm down and we just move higher with low vol, like we'll be fine. And if we sell off, we can still make adjustments and continue to pick up that premium in those vol spikes. But yeah, IBIT last year, that strangle, I felt good, like similar situation. If we look at this history here, all these positions started with a strangle at 50.65 and it just didn't move almost, for the first 3-4 months of the year. So I was just picking up tons of premium. Eventually in the summer, I had $1,200 in premium on a $60 product. So it was really like this thing can go up or down 50% and I'll still be okay. And that's been the case here, like even into this sell-off here. We're all the way down at 37, but this is still a profitable position all in because I had picked up, we're looking at the wrong thing. I had picked up $3,200 in premium. Yeah, $3,100 in premium against my short put that I was eventually assigned on. So my break even to the downside's at 35 and we're at 37 and I can just continue to sell premium against it with a short call. So this is another one, like even into this massive sell-off in IBIT, I'm still fine. Like this is still a profitable position and any rally benefits this portfolio greatly. But yeah, it is a nice feeling when you have a strangle that's awesome. Relatively stress-free.
Yeah, relatively contained. And yeah, for those who watched the show and know about yesterday, you can see that Mike and I both got filled on the year-long strangle we rolled out to April 30th expiration. Him and MES, me and MNQ.
Yeah, so you're now at the 25,500, 27,250. So you moved it up 250 points, which is required really if you're rolling up into a new contract and you see that contract is a higher price. So yeah, simple adjustment, but good day to do it yesterday when we had that sell off, a nice vol pop.
Yeah. It's probably a good time to talk about the SPX trade. Some people ask me about it. For those who watch the show regularly, you probably vaguely remember it was on Wednesday. It was Glenn's day, if you will. Glenn was in the studio with us. And at the time we were talking NVIDIA coming up on earnings, and I was like, I'm going to put a super bear trade on. And so I sold the 69.50, 69.60 call spread to buy the 6,900, 68.85. So I did $15 wide to the downside on the put spread that I got long in SPX. The whole idea was, well, essentially, I got luck. I call it luck, but I did plan it. It's just luckily that it happened. But I planned on the idea of even if NVIDIA's earnings were decent, the market would somehow react negatively, and that's exactly what happened. And so we had the move throughout the day. We were below 68.85 at one point, might have been around 68.70 or so. It was hovering around that short put strike of the long put spread. And so I eventually cleaned up and got rid of the call spread since that was risk to the upside, closed that for 80 cents. I then put on a call spread with the same strikes as the put spread, 6,900, 68.85. I put that call spread on the February 26th expiration, so yesterday's expiration, right? I literally put a bid out for that after we finished the show for $2.50. Luckily got hit. I went to lunch. I actually kind of forgot about it. And I end up opening the portfolio after lunch again and seeing okay, not only did we get filled, but the market did run up, which was my fear. And but luckily I hedged that fear and was able to close it out for $1,100 gain. So I think it was $13 and change. Close that out for $13.50. So close it out for $1,100 gain, which is nice. And then still was able to just keep this put spread on, right? Because at this point I essentially had that put spread on for free, really for free now. And we came in this morning, market's down, worked out in my favor. And I ended up just selling it a little while ago for $11.10. So worked out really well.
So you literally just smashed this whole trade. This ended up being this somewhat small defined risk trade, and you just legged out of it perfectly. but managed your risk and like eliminated risk, like you said. Masterful.
I mean, I took advantage of the range that we've been in, honestly, is what it boiled down to. We've been in this range, right? 6,800 to 7,000. We just talked about it many times. We haven't touched 7,000 in SPX in probably better part of 2 weeks. And so it's actually been tighter in SPX. And I was just able to sort of manipulate the range for sure.
I love it. Very nice job out of you. And yeah, the SPX positions have been kind to us. I still have a ton of stuff here, but this one's interesting. So this is the one I got into yesterday. The 69.50 calendar spread, short Monday, long Tuesday. So just trying to capture this weekend premium and inventory some premium for Tuesday in case we get a rally here. You can see we're selling off down 40 points, but this thing isn't really moving too much. And that's because we're getting a ton of value out of the short option for Monday. And this is going to come into play even more. So it's down right now, but it's actually in a really good spot because if we rally 50 points on Monday or around that, this short option is still going to go to zero because we're going to be at 6,900. We're going to be 50 points out of the money. This option that's currently trading for $300 is going to be worth $0 at the end of the day on Monday. But if we get a 50-point rally, this option that has another day is going to increase maybe $200, $300, $400. So if we just get a reversal of this move next Monday or on Monday or anywhere close to it, this trade will likely be a $100 winner or more. And the more we rally, the bigger the winner will be. So we will see. And if that doesn't happen, we'll have to see what I can do here. But it'll likely just be either holding onto this long option or turning it into a vertical spread and, hoping for a big rally on Tuesday. But we'll cross that bridge when we come to it. And
I like that trade so much. I think yesterday I kind of did a similar one as you. I did next Friday to Monday, March 9th, and I did the 7,000 strike. So further up, obviously, but that's one of the reasons why I had to go further out too. I like the trade. It's a good idea. I mean, I really do. And then I also today, while we were down lower, actually the first thing I did before I took off the put spread was put on a super bull this time around. And I did that in the March 9th cycle. I just, I don't know. I kind of always, I've been saying this yesterday. I thought we were probably in the month down. Again, we got a couple of hours here yet to go, but this month really hasn't been that kind to the market. And it's just seemingly kind of weak here along with these earnings, the way things played out. So I'm just looking on the other side of March to see if we're going to eventually start to bounce some here, and just went out to next Monday to add a super bear along with obviously the calendar spread. We'll see if maybe, by the end of next Friday, we get the jobs report. Maybe things start to shift to the positive side. I think I did it 8:31. I did it right at the open. That one right there, 8:31 a.m.
Yep.
Yeah, I did it right on the open. I was like, let me just get bulled up for next Monday, for a couple of Mondays from now.
Yeah, 10-point wide. I got to get rid of all my stuff here. This is crazy. 10-point wide put spread to finance 15-point wide call spread here. Collected 50 cents. So this is what we talk about all the time. Like, this is a really efficient trade in an SPX product because SPX is a $6,800 product. All these options are really expensive. So with that said, if you sell a 10-point wide put spread by itself, it's kind of a slow grind trade. Like, even if SPX rallies, you have to wait until the closer to expiration to get that value out of this put spread because these options are just have such a high raw value. But the second that you convert it to a dynamic trade where you're selling the put spread and then using that premium to buy a $1,500 wide max profit call spread, now you basically shift your ability to make money on the upside greatly. So you can see here, like this neutral zone where you would have picked up $200 and change. Now, all of a sudden, if you get a rally to 7,000, you're looking at a $500 winner instead of a $150 winner. So
heck yeah.
Love these setups. And again, if you route it for a small credit, there's still high probability trades because this neutral zone where you would have made money anyways is still going to result in profitability. So we've been deploying these a ton in SPX.
At will.
At will. Say. Yeah, they're defined risk. So, I mean, they're small risk, high reward, and it's an efficient way to trade a high price product for sure.
And again, still using kind of like that range. So I did the downside 68.50. I mean, did it for a reason. It's kind of still that general same area where we've seen bounces off of.
Yep. Yeah, I haven't done too much. If we just look at today's range, I haven't done anything at all.
I did a few things besides the SPX. What did I do? Oh, I closed out core weave. I closed out. I had the double calendar in there. Calls, puts, worked out. So I closed the put side down and decided to sell a couple of puts as well. Might have done that a little early. I sold the puts first. That 970. That's actually 2 strikes. And then I closed out those put spreads from earnings, and that's pretty much it. And then NVIDIA, I did decide to see if there's going to be a little bounce here. Went further out, did a 25-point wide diagonal for 1050. And this is kind of the lower end of the range over the last 6 months if you look at it, around 180. So
yeah,
went out a little bit further, put that on.
Love it.
Yeah, it's a little active today.
Yeah, love to see it. It's just one of those days where some things are coming in. Speaking of this Costco calendar, I'm going to keep this on. I like the way it's moving, though. We put this on a week ago. The 1100 strike calendar, long April, short March. This is another way you can participate in something like Costco that's higher priced. A Super Bowl or Super Bear is also an efficient way to do it. But this calendar spread takes advantage of the earnings announcement that's coming up shortly here. So just wanted to throw that on. I'm not going to close it. It's up 75 cents right now, but I like the fact that we're getting closer to the strikes because once these earnings come out next week, we're going to see a big vol crush in March. April will hold on to value because it's got so much more time associated with it. And yeah, we'll see what happens after that. But
yeah,
I'm going to close out of this corn position. We're seeing a nice rally in corn. This is a $100 winner now on a 380 debit. So I'm just going to get out of this, take some profit where we can. Okay.
Whoa.
That's new.
I've never seen that.
That's new. Yeah, we'll see if we can get out of that. But yeah, let us know if you've got any trade ideas. We are streaming live on the Tasty Live network. If you've got questions, let us know. But yeah, I've got the referral program pinned to the top of the YouTube chat. If you want to click on that, you can see all the information there. If you bring in a friend, they deposit $2K or more into a new account, you both get $100. So check that out. I'm going to restart my platform real quick. I realize I haven't done that yet today. So just give me a second here. But what do you have your eye on? Anything moving?
CoreWeave was the one big mover, I think. Actually did that for Traded or Faded. See that later today when it pops up on the YouTube chat, but not the chat, probably on the actual YouTube, Tasty Live YouTube. Check that out. Outside of that, again, gold and silver is just they've just a miraculous and fantastic week that they've had. Gold, silver, and crude oil actually all up on the week, which is really interesting when you look at those commodities. The other thing, 10-year yields. I know we don't talk 10-year yields a whole lot. We usually look at it in the form of bonds, but 10-year yields below 4%. We haven't seen that in quite some time. Actually, I think going back to maybe, I just looked, I think it was October of last year was the last time it was this low. So there's a lot going on in that regard as well. Looking at seeing how bonds are reacting to, I don't know if this inflation report even mattered that much. I mean, normally if we had got an inflation report that showed that inflation was coming back, bonds would have been, yields, I should say, would have been positive. They would have went higher, and that didn't happen here. So the market is essentially screaming for a rate cut to happen at some point, which we might get on the other side of a new Fed guy.
Yeah. Lots to talk about when it comes to that. Are you able to pull up your platform real quick? I'm having some issues with my internet here. But yeah, speaking of the new Fed person probabilities, I'm just looking at the Fed Watch tool here. 96% chance that in March, which is coming up a little bit, we get the same rate, so staying at 35375. April, 80% chance we stand pat at the same rate. And then June, we've talked about this before, but it seems like there's an increasing probability that we do not get a cut in June. We were looking at an overwhelming probability that we would get a 25 basis point cut, but now that's dropped to 42% relative to 50% if we stay at the same rate. So July is now the probabilistic outcome for a 25 basis point cut. So we'll see. Same stories last few years.
Man.
Yeah.
Ever since the first week of February, it's just been straight lift off. And the last time we were here was basically around Thanksgiving. And before that, October. But wow, I mean, it's just been straight lift off. I do have a put spread in ZB. I'm starting to feel like I'm on the wrong side of this trade. I actually rolled it out to April to get a little bit more time, but man, these things look strong right now.
Yeah, it's been wild. But yeah, that's what happens. It's the name of the game when you get these shifts in probabilities, and the market will always tell us what the market thinks first. And you're seeing it in real time what the market thinks with these big rips higher.
Yeah, I mean, look at that 10-year yield. I mean, wow, like smoked below 4%.
Yeah, it's crazy.
First time since November. No, actually not November. Sorry. Yeah, I guess there was a time in November, but I was really looking at this October time period. So yeah, craziness.
Crazy.
Where else do you want to go?
Yeah, let's pop over to the YouTube chat. Let's see what the people have for us. I took $500 out of that Netflix 10-point spread this morning. Thanks. Yeah, that was a good one. Love to see it. Caught that bounce quickly. All right, 0-day SPX, that's 15 points wide. That's, I guess, an iron condor. Short options at 69.05 and 69.20. Total premium.
69.05, 69.20.
Yep. And then
short 69.05.
Yep.
Okay.
And then 69.20. So I assume it's like a narrow butterfly. Total premium.
Wait,
yes.
What's the strikes? We're short. The meat is 6,900 short that?
Yeah, 69.05 short, and then 69.20 short, and then defined risk wings 15 points wide from there. So, unless I'm reading this wrong, which is possible, but currently marked with a small profit. The math is not mathing here. Yeah, you might. It sounds like they have an in the money butterfly that's marking as this profit. Maybe one of those.
Weird.
Maybe one of those legs is wonky.
Oh, put butterfly. Okay.
I think so. Yeah.
Put butterfly 69.05. I'm sorry. Tell me one more time.
69.05, 69.20. I'm actually going to just skip this. It doesn't make sense. If you can give us more information, cool. We can look at it again. But yeah, if you're seeing a marked profit where you don't think you should, it might be one of the wings is crazy. Think about placing a zebra in Netflix and would appreciate your thoughts. Let's check it out. The May 85.95 2x1. So an 85.95 call zebra for $18.50.
$18. I usually go a little tighter, honestly, on mine. I usually do something along those lines. Like I would probably. I mean, why do the 95? I like doing them like this. Of course, I mean, you get a little bit more longer delta if you're doing the 95, but totally your call. Paying more. But,
yeah, I'm in your boat. I think taking on, like traditionally, we want to remove all extrinsic value. But at the same time, if you're taking on like $100 of extrinsic value, it's pretty negligible. And if it saves you $400 or $500 from your debit cost, it's still going to be a profitable trade if you get the rally. So I definitely like that. And yeah, this story with zebras is just that the longer term you go, the more expensive they're going to be. The shorter term you go, the cheaper they're going to be. So I think there's also something to be said of even going like month to month or week to week to just, you'll still get the same profit potential if you get the rally, but your risk is really limited. Like if this market just falls out of bed and Netflix goes from 93 to 60, you're going to lose way more on this one than you would if you had like a week to week on. So that's something to consider too. But yeah, all in all, if this is the expiration you want to go to, because there's so much time associated with those long options, as you can see on this risk graph, even if you get a sell-off, it's not going to be anywhere near your max loss until you get closer to expiration. So I think it's good. It's all right.
Yeah, either way, it's good. I mean, I will say to them that like you do actually have if you widen out, I think your extrinsic changes, to some degree, right? If you go further in, like I said, you're actually paying a little bit more as far as extrinsic versus like if you widen it out. Obviously, you're moving that goalpost there, but it really just boils down to how much you want to pay and how much you want to risk as far as downside moves, like Mike was talking about.
Indeed. We've got a Iron Condor and Spy. Short options, 42 days to go. Short options are 650 and 710. And it's 20 points wide. Haven't gone anywhere since November.
And 710? Wow. Okay.
Yeah.
And middle is what?
Just 20 points wide from those shorts, 650, 710.
Okay.
But yeah, you got plenty of room. Nothing to really do with this thing. I mean, you're right at the expected move on the downside and slightly inside-ish on the upside. But yeah, nothing wrong with it. And you're just like right there. So if you want to keep holding on, you got 42 days left. Plenty can happen in that time frame for sure.
A whole lot. And again, this is pretty good because you're also taking advantage of the range that we've been in. We'll see if it's still doing this in 42 days or even another 20 days, but interesting.
Mm-hmm. Would you attempt a super bear in crude oil if you're bearish?
Oh, geez. I would. I would attempt a super bear in anything that I'm bearish in. It's just a matter of finding the right strikes and how you can make it work for you.
Yeah.
And the expiration. I don't know. The fun thing about SPX is like I have thoughts, right, about what expirations to choose as we were getting into, like you say, okay, well, things have been kind of bearish the month of February. And again, if we get down to certain levels, I'll usually jump in and do that. I don't know if I'm bearish at 66. Again, it's just a matter of preference. But if you are, okay, it's just a matter of what expirations you choose, I suppose. I don't know. What expiration would you look at here? Near term, obviously, the nearer term we go, the better chance of lining up strikes sometimes. But it's just a matter of how things move.
Yeah, I think if you're doing a super bear, I like the idea of it in CL because it's a high price product and you're able to do the same thing that we're talking about in SPX where you can get some dynamic delta in your favor. I don't think there's anything wrong with going to the 18-day, which is the closest contract, the J. And like Jamal said, the nice thing about the 18-day is that if you do get that sell-off, you're going to realize the profitability in your long put spread much more easily than if you have a longer term trade, because a longer term trade, it's going to hold on to extrinsic value. So what that means is if the spread moves in the money, it's going to trade for about half of the max value, even if it's pretty significantly in the money. Where an 18-day cycle, if it goes in the money, you're going to get closer to 50, 60, 70% of max profit because there's not as much time with that contract. There's not as much extrinsic value. So, and in this situation, like he's looking at a couple of trades where you might pay a little bit of a debit. I don't mind that either. It's going to be a lower probability trade, technically speaking. But if you're just trying to take like $100, $200 out of this thing, you'll get that if you get a 2% sell-off or 3% sell-off in CL. So
it's hard to find to line up though about getting a credit
without doing like a half strike wide. You'd probably have to go like super narrow.
And the risk reward, I'm not loving that neither. That's the only thing. It's a little bit different.
Yeah. So in this case, if you can't set it up in a way that you like, then you probably just go to the 45-day longer term cycle. You'll have more ability to set something up there where you can collect a small credit in the middle.
Yeah. Might be feasible.
Yeah.
250. I'm trying to do it with areas that oil has been trading within or smashing through.
Smash.
The same thing. Yeah, up to them to find it, but totally down with doing a super bear for sure.
Yeah.
Well,
What else we got? FCX short.
FCX. Shorting of the copper. Short put, short call.
It just says short, but so I guess we can do whatever we want with that. Short bearish, I assume. $67 product, so you can pretty much do whatever you want. Trading at highs. So yeah, it's got to be bearish, I would assume.
Short call is not a bad idea. 37 implied vol in the 37 IVR, which probably is mostly including the earnings cycle, which is the next. But this is a 53 vol. I don't mind selling that. Of course, you got to be worried about potential real runs again in these metals. That's the one thing. But I don't blame you for trying it. I mean, yeah, there's been a run the last 2 weeks. The metals have been positive. Maybe next week it's not so much.
Yeah. And I think with this one too, like you can see that earnings flag is likely going to be near the end of April. So if you wanted to stay defined risk, you could even go like long May, short April, and that'll give you long option in May that will not decay as much if they have earnings coming up in that cycle, which it looks like they will. And then you could sell an April option against it, get that full decay, and kind of straddle that earnings announcement in an intelligent way. And that kind of setup won't be that costly either because it's a $67 product at a 50% IV. So I like that too for defined risk option.
I don't even mind the strangle too much, honestly.
Yeah.
I'm not going to put it on though. I got too many things on, but.
Would you rather use XSP or SPY for a year-long trade? Great question. So XSP is a 1256 contract. So just from that alone, if you were to compare the profitability in SPY with short-term trading compared to XSP, you save like 10% or just over 10% on taxable income. So XSP is probably where I'd go just for that reason. And also, if there ever is a situation where you are holding a strike to expiration and it's like straddling between going in the money and out of the money, XSP is a cash settled product. So you don't have the same risk of acquiring short shares or long shares in that case, especially if like you can't afford to hold the shares because you don't have enough buying power, which shouldn't be the case if you're doing this anyways. But either way, something to consider. But yeah, XSP is liquid enough. You might just run into some wonky markets from here to there, but SPY is penny wide. You have a lot more expirations to choose from that are liquid. So trade-offs here, trade-offs there, but cash settled XSP is never a bad choice, I would say.
For sure. Yeah, cash settled is where I would probably lean. Once upon a time, I will say XSP, the markets weren't that great, but they're really good now. So it's a lot easier to put that type of trade on.
Indeed. 100 strike call calendar in SLV again. Ooh. Long May, short April. Kind of love to see it.
I am short April already, but I love the idea. $2 and change. Wow, that's nice.
Yeah. I think
I like it.
Yeah, we placed that a while ago and we closed it. But yeah, it is a very efficient way to play for increasing price and increasing implied volatility. And we've seen that that's how this thing will behave if it's a really big rally to the upside.
I like it. I'm doing
and
it.
it's cheap. Yeah, $200 is cheap for this kind of trade. And when I say cheap, I'm really just looking at what is the raw value of the option in May that I would buy by itself, $900, and then you sell an option against it and it's down to $260. So you're basically cutting your cost of your long option by 75%, which means you have a really wide range to be successful with that kind of setup.
Yeah, no doubt.
Let's see. If I want to sell 7-day strangles on ES futures, I heard it's best to put it on Wednesdays to capture weekend theta decay. Your thoughts? I don't really buy into that because there's plenty of things that will crush the weekend implied volatility early. So like, let's say you put it on Wednesday, markets chop around, nothing's on the horizon, there's no fear of something happening over the weekend, then maybe you get the vol crush on the weekend. However, let's say you put it on Wednesday, markets are chopping around, and on Friday, Trump tweets something that's crazy, that could move the markets. And now all of a sudden, there's an infusion of implied volatility for the weekend, and that plan that you had no longer exists, and now you have to hold it through the weekend. So I don't think it's a 100% guarantee that happens every time. And today's an example of a market selling off, but if this market continues to sell off, your weekend theta is not going to be taken out because you're going to just have heightened implied volatility for the weekend. So I think really, regardless of weekend decay, I would just stick with whatever plan you have. And the real key is just consistency and having enough occurrences to measure a high probability setup over time.
Yeah, the idea of weekend decay is, I don't know, it's almost kind of an antiquated ideology at this point. I mean, it used to be that I just feel like, efficient market theory makes it such that the idea of weekend decay it's already priced in on just about everything you have anyway.
Yeah. Yep.
Did they say strangles in ES futures, by the way? Like actual ES? Wow.
Yeah.
Big dog.
Mm-hmm.
Big dog.
Big dog. But yeah, I don't mind it. It's just I wouldn't place that trade because you're counting on capturing weekend theta decay. Theta is really I don't pay attention to theta at all because it is what it is. Like sometimes it'll come out early, sometimes it won't. But really, the meat of your profitability in a 7-day strangle is going to come from your delta and whether those options stay out of the money and how you adjust them if they don't.
As a quick sidebar, I just don't understand what's going on, to be honest with you, with markets. I'm going to point this out. Look at the big difference here today with Russell 2000 and Dow being down versus NASDAQ and S&P, right? And usually that's likely related to bonds, I'm sure of it, right? But once upon a time, when bonds would go down, these two would react very positively. Now that bonds are down, and I'm talking just in terms of yields, these two are down. It just doesn't make any sense to me, bro. I don't understand it. Market is repricing something for sure.
Yeah, I think this market is very interesting. We're seeing a bunch of stuff fly around. But yeah, in due time, we will see what the market wants to do in terms of moving in one direction or another. Because we can't chop around here forever. At least I don't think.
Yeah.
Currently scalping micro NASDAQ using a single contract at a time. Would I have multiple long contracts entered at different prices and I sell fewer contracts than my total? Does the platform use first in, first out? From a taxation standpoint, great question. I would reach out to the trade desk to see what the accounting practice is in terms of which contract would be closed. Good question. But I assume it would be FIFO.
I think so too.
Yeah. Any way to salvage a 75.95 OCLO short put spread in March? Set up at a 20 delta and rolled once.
75.95. You're the master at these.
Yeah, 75.95. I mean, there's not much to do because it's so far in the money. I would say you still have some time, but I've done this before where like you force a credit by making it wider, which doesn't really help you in this case because it's so far in the money. But I would just hold on to this. Like there's not much to lose on this trade, and you have a lot more to gain. And any rally in here is going to make the spread look a lot better. And if we do end up getting closer to 75, you'll have more flexibility in terms of rolling out in time, making it like 1 or 2 points wider to force a credit, something like that. But as it stands, it's fully in the money. You've got $100 in change left to lose, and you've got $1,800 to make if you get a rally. So the risk reward from now on is certainly in your favor. And again, if you get any kind of rally in there closer to 70 or higher, that $200 left to lose is going to turn into a lot better number, meaning you're going to get a lot of value back. So for now, 21 days and into the sell-off, I think it's a hold. Unless you want to close it for less than max loss.
What am I doing? Had it backwards. But yeah, this one's, yeah. I don't know. Yeah, I agree with you. I don't really think there's much you can do.
Yeah.
This thing.
Why would you choose XSP over a 2-lot micro E-mini futures? You don't have to. We're using the micro E-mini futures, and the futures give you a lot more buying power reduction relative to risk. But the caveat with that is you still have to size it correctly to where you can hold the position. If the E-minis sell off 40%, 45%, like that's your worst case scenario in my mind, you have to be able to withstand that variance. Whether that's through just like holding the naked put in the money or hedging with downside long puts that you can buy. But just got to be careful when you have more leverage because of the lack of buying power requirement. You got to be careful that you're not oversizing, because it becomes a lot harder to hedge after there's a big sell-off in the market if it happens. What else we got? We got about 10 minutes left in this show. I'm going to take a look at the calendar for next week. What do we got? We've got PMI on Wednesday.
Oh, goody.
We've got jobs number on Thursday. You've got a
Wait, it's on Thursday?
The jobless claims on Thursday.
Oh, gotcha. Oh, yeah.
Yeah, employment report on Friday. So got some stuff next week, but nothing too crazy. Nothing too crazy.
Expected moves here 14, 16, 17, and yeah, 18, 19. So yeah, it increases each day.
Yeah. Currency markets, anything trading there for you?
Bro, I was just looking at this Aussie back towards the highs, 71s. Interesting. Dollar is not making a major move. As a matter of fact, dollar is slightly down. It's not like it's making a big move, but and these aren't neither. I just didn't realize this thing had gotten back to 71. I thought it had dropped below 70. So just weird to see the markets down and the dollar not like up big, right? I mean, that's kind of been a trend for certainly the better part of this month.
Yeah. It's
118 euro.
It's been quite the journey for me and my dollar. But eventually we'll be okay. Because I'm positioned to where I can just hold this thing for literally forever. And that's what I plan to do.
There you go.
Not a question, but who do you have for the Arnold Invitational Golf next week? Well, my guy, Jake Knapp, is ball striking right now. So I would say if you're looking for a long shot, it's got to be Jake Knapp, Kurt Kitayama. Those are like bombers that can still do stuff around the green and putt. Kirk Kitayama, not so much, but I really like Jake Knapp for the API, the players, the Masters. I think he's getting close. And if it's not one of those guys, I think Chris Gotterup is another one that I have my eye on.
There it is, folks. Place your bets for the weekend.
Yeah. Never got a fill in CMR. Probably for the best. ... Sometimes it is that way.
CRM? They mean CRM, probably?
Yeah, probably CRM. Yeah, sometimes we place a trade and we're instantly filled, and then we say, oh, God, don't want that. Sometimes you don't get filled, and the market moves the opposite direction of where you want it to go, and you thank the trading gods. But yeah, CRM down a little bit today.
Yeah, Intuit. Did it have earnings? It had earnings yesterday? I can't even remember. It escapes my mind. Thought it did. Yeah, no, maybe
I'm not sure.
I don't know. I know it had earnings recently. Whatever.
Apparently Tony calls a long put plus a short call spread a stupid. I like it. Yeah. That's what we used to call the Super Bowl, the stupid. It can be perceived in one or two ways, but at least if you're routing it for credit, it can't technically be a stupid because it's a high probability trade. So there you have it.
It stems from floor trading talk for sure. The idea of putting two option trades that are similar delta or the exact same type of delta, same direction.
Yeah.
Right? Selling a put, buying a call. They always call it stupid because they never did stuff like that. They always hedged just about everything back in the day.
Yeah. It's butterfly after butterfly after butterfly.
And if somebody did do that, you're like, oh my God, that guy knows something.
Why is that guy taking all that risk?
Yeah, which is usually, they did probably know something at those times back in the day sometimes.
Sold a 227.85 put for today.
In
that's a great question, Brian. Let us know. In what?
227. Wait, what did they say? A 227?
85 strike put. I don't know.
Oh, February 27, 80 strike.
Yeah, February 27.
Let's try and guess. Let's try and guess the name. I don't know. It's something trading $85. It's not one of the major names, that's for sure. I don't even know. I used to be halfway decent at this. I don't even know what's trading for $85 right now that I pay attention to.
Yeah.
Is it SLV?
It might be.
Could be that.
That could be. Brian, CoreWeave. It's CoreWeave.
Oh, it's CoreWeave. Okay. All right.
Yeah.
I like that. Yeah, I obviously sold puts in there too. So I like it. Sold in April.
CoreWeave question is, should I roll the 85 put? What say you?
What expiration?
227. For today.
You said. Oh.
For today, yeah.
Oh, geez. 85 put. I mean, yeah, roll it. Yeah. I would. I mean, the stock has moved around quite a bit. I think it's suffering from obviously her earnings hangover in that particular space, along with NVIDIA. NVIDIA has very interesting ties to this thing. I mean, they basically have this symbiotic relationship. So it could bounce back. I would roll. Definitely.
Yeah. And really, like, you can do whatever you want, but if you're selling a put, you should be willing to take this kind of heat. If you're not willing to take this kind of heat, then you just do a put spread. Because that makes it easier for you and you lose less on the way down. But the nice thing about CoreWeave is you still have plenty of implied volatility there, and you don't have to really roll it that far out. Like, you could roll it a week out, you could roll it 2 weeks out. An in the money put is simply a covered call risk profile. So you'll pick up some credit regardless of where you roll, but still plenty of extrinsic value to capture, even in the 7-day, $200 of extrinsic value. So yeah, I think if you're willing to keep the risk on, rolling it, picking up more premium, reducing your cost basis is going to be helpful if the market reverses.
Yep. All
right, couple rapid fires here. Great candidates for strangles today. CRM, AXP, micro crude. Let's look at Netflix first. Great candidate for strangle, Netflix. Yeah, it's finally catching a bid. So if you think you'll chop around this range, I like it. And it's a low price product.
That is pretty good, actually.
Yeah. Micro crude. We're looking at, we actually have iron condors in the big crude contract. I think we're at 60 and 79 for our short options. Yep. So definitely like that idea if you want to go undefined risk. And then Salesforce and American Express. Salesforce, higher price product.
Do like the strangle microcrude, by the way. Salesforce, yeah, what does that look like? Vol is still elevated. I do like this idea. I think I was looking at this early in the week, but I was like, no, I'm going to wait until I'm on the other side of earnings. But yeah, this is also a pretty good candidate for sure. And AXP, yeah, I don't even know why that's down so much today, honestly. I haven't looked to see why. I have a short put spread in there. I assume this is pretty expensive, though. Yeah.
Yeah. Yeah, name of the game for strangles is got to be able to afford it, got to collect 20% return on capital at least, which is typical. That just means if you're putting up $1,000 in buying power for the strangle, I want to see at least $200 in credit, which would be a 20% potential return on capital or buying power used. AXP is a little bit light.
It is earnings. It's also
earnings. Yep. There you go. But yeah, AXP is the lowest implied volatility, I think, out of all those. So as you can see, relative to buying power, you're not picking up that much premium, but still fine if that's what you want to do.
This is just not going to come in straight away. That's the only thing, because like we said, of earnings. The Netflix, I guess, too, to some degree.
Mm-hmm.
Although I'd say there's more deal premium in here than anything, which is kind of weird since they're supposed to be the acquirer, but that's the reason why the vol is kind of elevated.
Yeah.
CRM, though, good one. No earnings. You're just going to have to deal with the software potential movements or whatever. And CoreWeave, not CoreWeave, what was the other one? I forgot the first one.
Netflix.
That was the first one? Oh, okay.
I think so.
Yeah.
Netflix, microcrude, EWY.
That was the other one.
That was the other one, microcrude.
Oh, geez, EWY. Oh, yeah, well, let me tell you about this strangle. No, I'm okay with it, though. It's cool. Like, I'm just going to sit on it. But yeah, I mean, this is the hottest stock market in the year, this Korean stock market. I was just looking at something earlier. It is the best performing stock market in the world right now.
That's wild.
Yeah.
Love it. Love to see it, though.
SPY is 38 on the list, by the way.
That's interesting. Not great. Not great. 11:55. We're out of time. Thanks for tuning in. If you've got any other questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Of course, we have plenty more content coming your way, though, on the YouTube channel as well as tastylive.com. So stay tuned. Have a great weekend, everyone. Go touch grass, as they say. Go outside, do some outdoors stuff. And we'll see you same time, same place, 11 a.m. Central tomorrow. And by tomorrow, I mean Monday. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody, and welcome back to Risk and Reward. Today's Friday. We had quite a week in the market, an inside day on the day, so nothing as exciting except some of these other underlines that we'll get into here in a moment. Hope everybody's doing well. And before we do that, Brother Gus, how are we doing today?
Doing good, yeah. Plenty of excitement for me, despite the lack of excitement in the broader market. I got everything moving in the right direction. The things are going up that are supposed to. The things are going down that are supposed to. It's a good feeling. I'm a happy camper today.
Good, yeah. No, there's definitely a lot of volatility. I know we got a gap down in the market. A little bit of a vol expansion, and then that vol came back in a little bit as we rallied back towards its midpoint and kind of just been consolidating for the rest of the day. So a little bit of a lack of volatility. But with that being said, let us know what you're looking at. Let us know what you're trading. We could jump right into the Tasty Trade platform, and we'll get into what we got going on in here. Those metals, I mean, those things are resilient, right? I know we got a little bit of short delta on in there, but they're definitely forcing me to be a little bit more patient. So let us know how you're managing those ones. We did buy some puts before the close, so getting out on the gap down was very helpful towards a portfolio. So now we're able to kind of hedge these metals just a little bit, but nothing too exciting on my end. The semiconductors are still coming in a little bit more, so that's nice. 21 days left till expiration. Maybe we can think about plans on maybe taking this off, redeploying the capital elsewhere. But other than QQQ and the metals, that's kind of how the cookie crumbled this Friday. But let's dive into some of those underlyings you've been looking at today, Gus. I know Netflix is going to be an exciting one.
Yeah, it certainly is, and yeah, the metals they're just doing the thing. It's the same thing, same chart. I mean, action that we were seeing out of the metals along the run up the entire time. The initial run up to the highs, where it's like once every 3 days they start to make a down move, and I'm like, okay, we're out of steam here, and then all of a sudden we're just back at a new high. But yeah, as far as underlyings for me, Netflix is the star of the show today, but it's barely outshining Paramount. They've actually been trading places at the top of my portfolio all day today. But both logging excellent days. We can look at Netflix first. Netflix doing scarily well here. I'm beginning to be alarmed. I didn't really I didn't really want this to happen this fast. This feels almost like an unhealthy recovery back to the highs. I left plenty of time on these contracts thinking that we would just, eventually turn the ship around, eventually start to, take the stairs back up again. But we are very much taking the elevator up on Netflix. Just insanity these past few days. But I'm not going to complain. I'm just it's the alarm bells are starting to go off. So now all of the positions in my ladder are in the money. I have a 79.80, an 84.85, and an 80.90, or 88.90. That is. So yeah, everything just well above the levels where I needed. I should have added a fourth rung to this ladder. It seems I was perhaps a bit too conservative, but who could have predicted this type of reversal? Although we knew it had to come sometime. I mean, that was the whole thesis behind the trade originally. Is just that Netflix is too strong of a company to just sell off forever. What is it going to go to zero? Are we going to go back to 50? Like you're not really expecting that to feasibly happen. So yeah, did a pretty good job of catching the bottom. No regrets about waiting for a confirmed break to the upside to put on the last leg of this ladder. We've already gotten into the money on that, and I have 111 days left. So I perhaps should have been more aggressive and could have gotten an even crazier risk profile. But hindsight's always 20/20. I'm feeling good. Might take off the first leg of this. My 21 DTE 79.80 short put vertical. There's about $20 notional left on those. I have two of them on, and we're up something like $100 on each of them total right now. So feeling like it's probably about time to get those off and just rein some profits in. But I will wait until the end of the day today to do that, just because of how crazy this run has been and the momentum doesn't seem to be going anywhere. So yeah, feeling great about Netflix at this time. I'm sorry that you aren't still along with me, but I know some people in chat are for sure.
Yeah, it's looking like we closed yesterday at 84.85, and then we gapped up to about almost a $10 gap in the market, and then also holding its gains. You can see the bottom of this wick. We tried to pull back a little bit, but Netflix is not playing around. This thing is chugging to the upside. So definitely some volatility in the market. And I mean, even after this run, even after this uptick in Netflix catching a bid, we still have the IV rank sitting around 33, 34 with 112 million shares traded on the day. So this thing's active. This thing has premium, especially with an uptick. But we got some Paramount as well. Yeah.
Yes, and what's going on, Sergio? What's going on, Ranch? Yes, Ranch, that's well put. It is way out. I was not expecting this to happen. I thought, this thing would move like a stock does. I thought that we would, try for some highs, fail, return to the lows, bounce back off, and just slowly kind of churn our way back up. I did not expect just the absolute moonshot that we're getting out of Netflix. Speaking of moonshots, takes us right into Paramount, which I have been long for some time. My longs are naked here, undefined risk, which is a nice feeling in this environment. I have both 322 DTE 10 calls and 20 calls. I have a long-term thesis about Paramount that I've outlined a few times. The Warner Brothers thing aside, I really liked the UFC acquisition. It feels like they are really making aggressive moves in all directions to try to expand their market share, and I like that. I think that's going to pay dividends as this year goes on, and as we get more and more earnings calls, I think we will lock in some higher levels, and that's kind of what we're beginning to see here. Amid this run up, we're testing the 14 level right now. It was at 11 like yesterday. It's been insane, this move that we're getting up 25% today. But yeah, just it's a whole lot of green between these two companies, which in broader strokes seem to be in fierce competition right now, both in the space and with the Warner Brothers acquisition on the table. But both moving right alongside each other right now, reaching some new levels, some local highs, if you will.
No, 100%. I had seen some recent headlines. I think it was Netflix and the Premier League. I think the Premier League was thinking about producing something similar, like a catalog of a Netflix similar catalog, but just for the Premier League games. And just another, add into the streaming conversation. But I think that's really interesting too. I don't know if you'd seen any headlines on terms of that, but I know Paramount, for example, when it came down to the Premier League, I would have the subscription for Paramount because sometimes the Champions League's games were on Paramount, and then I would have Peacock as well because the Premier League games for the regular season was on Peacock. So it was just all of this confusion on figuring out where the game's going to be. So I find it really interesting that we got Paramount ripping to the upside, and we have all these deals going on where we have some people that want to go independent. They don't even want to have their catalog on something like Netflix or this or that. I mean, I don't know if it's going to be successful, but I find it really interesting that all the streaming services are catching a little bit of a bid regardless of the deals going on behind the scenes, you know?
Yeah, that experience you just described has been the unfortunate experience of pretty much any sports fan in 2026. Regardless of what your sport is, you're trying to figure out where to watch it, and some games are here and some games are there. It does become frustrating. I hadn't seen anything about the Premier League looking into Netflix. I think that would obviously be a great move for Netflix. Peacock has done a great job of taking hold on more sports as well. I subscribed to Peacock maybe 7 months ago, just because I wanted to rewatch The Office. I hadn't seen it in a little while.
Okay.
And then I just happened to catch Peacock at like the greatest time, where all of a sudden they added a bunch of NBA games. They're really expanding into the MLB a little bit, and yeah, the Premier League games are mostly there as well.
You're talking as of recent?
Yes.
Okay.
And I think that it would be wise of Netflix to make a move on the Premier League, because sports is the one place where I feel Netflix has kind of been lacking behind a lot of these other streaming services. They landed a few NFL games this last year. They've had a few boxing fights, things like that. I believe that, I'm not entirely sure, but I believe that they have the upcoming Ronda Rousey fight as well, which is an exhibition sort of deal. But they haven't really had taken a stranglehold on any individual league the way that a lot of these streaming services have managed to. So if they could land the Prem, that would be a big deal for them.
Yeah, I'm not exactly sure how that conversation's tailored behind the scenes, but I do know one thing I want to emphasize is the fact that how the Premier League was thinking about stripping a lot of the deals that they have going right now with a lot of these broadcast stations and making their own Netflix type catalog to where they'll have every single game you can watch. If you missed Goal Center, or if you missed 5 of the matches this game, it's going to be like a catalog where you can kind of go back. If you're a Liverpool fan, which is the best team in the Premier League, I think undisputed, right, guys? If you're a Premier League fan, I've seen a couple of Liverpool fans over here with, on the brokerage side with Liverpool jerseys walking around sometimes. But no, with that being said, it'll be interesting to have their own catalog. I know sometimes whenever I go and visit my dad, one thing that he'll do is he'll show me a soccer game, and then we're on YouTube, and then he's showing me like 7 other ones that he wants me to watch real quick. And YouTube is kind of the go-to to like binge watch and catch up on anything that you miss. So it'll be interesting. As a Premier League fan, it'll be exciting. I don't really watch too much out of soccer nowadays, but for the most part, that's where we're at with the streaming services.
Yeah, and I think I like when these sports leagues go a la carte like that and just offer their own package. I feel that that's often the best way to let fans get their games. And there's issues no matter how you slice it, but I do think that like MLB TV is one of the best sports streaming packages that there is out there right now. You get pretty much all of the MLB games. Occasionally there's one on Apple TV or Peacock that you can't stream through MLB TV, but for the most part, the entire regular season lives there. And then it does become weird with MLB TV because you can't watch your local teams. Like you can't watch the team in your local market. Fortunately for me, I'm a Reds fan, and I haven't lived in the Reds local market since I was 11, 12 years old. So for the entirety of my adult life and most of my adolescent life, I've been able to get all the Reds games through MLB TV. But I know that does frustrate people a lot that you can't watch the games in your local market. They want you to use your local TV provider for those. But yeah, it's I think the a la carte thing works. Errol, is your team Arsenal? No, it is Liverpool. There we go.
That was I actually like Arsenal. I never used to like Arsenal too much. I would say that's blasphemy if you would have asked like Manchester United or maybe Manchester City. That would have been a little bit more blasphemy. But Arsenal, I rock with Arsenal. I think they're pretty cool. I like them.
I think Arsenal is the best team in the world right now, in my opinion. That defense, the defense is just too much.
No, I'm just kidding.
Liverpool been lacking just a little bit this year. Still very good, but Arsenal definitely the best defense in the world, and I think they're going to win Champions League this year. If I could do sports talk radio for a second, I find myself rooting for Brentford, but I'm pretty team ambiguous in the Prem League.
I like that, though. For the most part, I would say, obviously, Liverpool is like my team, but ambiguous in the sense of, like, I will watch any match, even if it's, like, the bottom of the card, because I just think the Premier League soccer is the best football you're going to watch in the world. So I even think, like, the bottom teams that are getting relegated or just got in, it's a match. It's always exciting to watch. So with that being said, we got Jared putting out Netflix once again. So we're right on Netflix again, guys. Go ahead, brother.
Oh yeah, flying. Jared, you missed our whole conversation that led us into the Premier League chat there, but yeah, Netflix just moving. So happy with it. But don't need to beat a dead horse on the streaming services. I'm a happy camper. I do have one more thing to look at as we're talking about things mooning. Let's look at something tanking a little bit. Let's go with Firm AFRM, which this is one of my biggest shorts in the account right now. I'm not typically very short things, but as I've said before, these buy now pay later services, I ain't buying it. no pun intended. I just think that it's a bad business model, and I think that these things are going to fall apart at some point. So happy to see Affirm sliding. This is firmly the third biggest winner in my portfolio today. I am short a 35 put at 111 DTE and a 30 put I'm long these puts. I'm using the wrong vernacular here. I have a 35 put 111 DTE and another 30 put at 322 DTE. I think Affirm could really come down over the course of the next year and even in the shorter term to a certain extent. So yeah, happy to see this slide and making some lower lows. We are trying to we are well below the Liberation Day lows at this point and trying to make lows for the last 365 days, which I love to see. I'm happy about it. I wish I was short Klarna instead. I chose the wrong one, but I'm still happy to see Affirm sliding as aggressively as it has been over the last few months.
No, I like it. Still headed in the right direction. Lastly, I know we didn't touch on Netflix, but yeah, the Mayweather and Pacquiao fight, right? That might be on Netflix. I know Ryan was mentioning over here in chat.
Yes, if you want to talk bad investments, I think Floyd Mayweather might have made a few. If he's coming back to risk his 50-0 record to get another bag in this fight, Money Mayweather might not be the most suitable nickname for him anymore at this time. If I'm speculating here, I don't know anything, but that's how this seems to me.
I hear you. And lastly, Laura is an Arsenal fan herself. I didn't recognize I was in enemy territory. I thought the red for Tasty trade was like maybe Liverpool, not Arsenal. I mean, it could have been worse. Manchester United would have been worse. No. With that being said, SPX is your sport. You don't hate soccer, just don't have time. Find more time, like Big Deal said. If you watch Liverpool, you might get hooked. Just try it out. Try it out.
Affirming your affirmations. Get a loan on your Whopper today. I love
Affirming
that.
the affirmations.
Yep. You can finance a McFlurry if you so choose. You can do four easy payments on your McFlurry. But yeah, and I've said before too. I mean, I have mutual friends. Nobody in my close circle, but I do know people in real life who have really put themselves into some terrible positions using these buy now pay later services and just feeling like it's free money or you need that thing right now. I know everybody, the whole Tasty audience is obviously pretty financially savvy people in the upper echelon of financial understanding and what the right and wrong moves are. So it sometimes can feel like, who's using these services, or is anybody really putting themselves in $1,000 of debt on Affirm or Klarna? Yes, they absolutely are. You can do these things without any credit check. They will extend your limits, and it's so strange to me, the whole business model of these things. I cannot help but feel, and this is a baseless claim, that 25-30% of Affirm and Klarna users are probably people who have already maxed out multiple credit cards and are seeking out further lines of debt.
These services are like, call a spade a spade. I mean, these services are predatory, and I mean, they go into the business knowing they're about to reap a massive profit. It's the same thing with the nicotine business, right? Like, it's the same thing of like just preying on, I think, herd behavior, if you know what I mean. And you just know it's 100% going to turn a profit. So to the point that you've been making, I actually can't believe that some of these buy now, pay later services where they don't even accept like a credit score or anything have gotten this far. Because I remember Affirm was a lot more popular, I think, in 2021 when it was IPOing. So I just can't believe they've really took things this far, I think. So
yeah, I mean, it's just what I've said before, that I feel that if Affirm or Klarna defaults, they aren't getting bailed out. The credit card crisis is one thing, and is definitely just that, a crisis. We're talking about well over $1 trillion in credit card debt nationally right now. But if JP Morgan defaults on their credit card debt, you best believe the government is swooping right in there to take care of JP Morgan. Nothing's happening to them. JP Morgan, Bank of America, Wells Fargo, any of these big banks, they're getting bailed out. So they're not like things I think realistically could go bankrupt. But I think if Affirm or Klarna goes bankrupt, the government's going to say, yeah, this was a stupid business model. Good luck, bro.
Yeah, no.
It's not it's a whole different world that we're talking about here with these small loans.
100%. And then with JP Morgan, I mean, that is Bank of America. JP Morgan is the Bank of America.
I love your principled stance on shorting Affirm into oblivion. I pray you win. Thank you, Demi. I appreciate that.
That's how I felt when I started getting on some short delta on in Chegg, fresh out of college. I was shorting this thing into oblivion, boy. That's funny.
That worked out for you in droves, I'm sure. Chegg, I think they're still publicly listed, but they're at like sub $1 at this point.
They took a hit.
Yeah. AI just killed it.
You remember? Yeah. No, it just reminds me of like photo math. I don't know if we all. Okay, anyways.
I'm familiar.
There we go.
Dabbled, yeah.
That was like 7 years ago. That was like 8 when that thing got popular. Anyways,
Yeah,
times have
Symbol
changed.
Lab.
Yeah. That was our Chat GPT, right? So, average card payment is around $750. 2026. Good lord.
Average car payment. Oh yeah. Car payments are a whole other thing.
Is that real? Are those real numbers? I feel like if I go out and I ask the first 20 people that I see and I ask them their car payment, I mean, there's just no way. $750. That's a chunk of change, though.
Yeah, I mean, there's obviously, it's when you talk averages, I'm sure that there's a mean versus median situation.
There's got to
there.
be some outliers. I don't know.
Yeah, I would think the median is probably a little bit lower than that. But I mean, yeah, there are a lot of people who, I mean, and it's the same people that we're talking about here with the maxed out credit cards that then are turning to Affirm and Klarna to, you're pulling up to the car dealership with a 580 credit score. It's like, what do you expect your monthly payment to be? These things will happen. So, yeah, I think that sounds pretty reasonable to me. I don't know anybody paying $750, but I definitely know some people with car payments north of $600.
I've seen some of the TikToks that have gone viral where they'll go around and they'll ask in the car, like, what's your car payment? And it's like a shocking number, right? That wow factor that makes some of those videos really tick. But I got to even ask Jared, like $761, is that just a car payment? We're not including insurance, right? So it's like, then I think of insurance, like, okay, that's about $1,000, give or take. But no, with that being said.
And also term matters a lot. If you're on a shorter term, obviously your payment is going to be higher and you're going to amortize that a lot quicker. So I mean, there's trade-offs to be had there as well.
100%.
It's a whole different thing if you're talking about 84 months at $750 versus a 3 year or 5 year or something like that. It becomes a lot more reasonable.
Yeah, 100%. No, I hear you, Jared. Right. Lower interest rate, probably a longer term, all those kind of things. And then also, like, $750 sounds crazy too, but I do completely understand. Everybody's situation is completely different. Like, everybody's I mean, you do have to take everything with a grain of salt, of course. But it is wild to kind of see those averages come in, like Brandon mentioned. With that being said, let's see what else is some of the larger movers in the market today. Let's see what we got going.
Yeah, we could go high options volume list or tasty fast movers list. All kinds of resources to figure this out.
Dell, I'm not going to start, don't worry, guys. But we got Dell ripping on the day. Gap up and continuation to the upside. Just under a 30 IV rank, 23.5 million shares traded on the day. This thing's moving. I'm not sure what the headlines are. But it does seem like there might have been some sort of catalyst for this to move in the way that it is. That and my mortgage are my only debts, though, too. You see what I'm saying, Jared? So, right.
Yeah,
it's
all
the
about
details.
balance.
Absolutely.
Yeah, another one that's fallen a little bit today is Shake Shack, SHAK. I don't know if anybody caught the short that I threw on this in the follow feed yesterday afternoon. They had a really good earnings report and we're just flying yesterday, so we're basically just giving some of that back.
What was that ticker again? My fault.
SHAK. I think you got it.
Oh, there we go. I told you I broke the Shake Shack curse the other day. I went and grabbed a burger after I had food poisoning for the first time a couple years ago.
You did. I actually just had Shake Shack for the first time, I don't know, since I was 11 or 12 years old this last weekend when my friends were up here. Yeah, we had hit the Shake Shack in the ground floor of the Sears Tower there. You want to talk about a principled short stance, okay? I don't think a $26 burger fries drink can survive. I think that the model worked for Shake Shack when they had exclusivity, and it was like this kind of tourist destination that are only in big cities, and they're sort of hard to find, and it's like a one-off occasional thing, and there's lines out the door all the time. Like, that was when Shake Shack was working, but now they've really begun this aggressive course of expansion. They're popping up all over the place. The lines out the door are more than a thing of the past, and I just don't think that these price points can survive if you want to be a mass market type of company like that. So especially with the giant up move on earnings yesterday, I was giddy to get short on this. I wish that I had caught it on open. I wound up catching it at like 1 p.m. or something like that. But yeah, still pleased to be short Shake Shack and up like 25% on these contracts already.
Yeah, no, 100%. I think you make some really good points there. It seems like that expansion is probably because of the fact that they're charging $50 a burger before everybody else was. I'm just kidding. I don't know. But they got to be sitting on some hefty reserves. But to your point, I never actually even noticed that. You're right. They kind of did that to kind of stand outside of the crowd. I think that was one of the reasons why I was attracted to Shake Shack too. I was like, oh, this is a little bit different. Let me try it. It's not a restaurant, but it's not just like any fast food. Let me go ahead and try this. It was pretty good. and I was locked in. And then I had food poisoning, and that really diminished my appetite for Shake Shack. But great points made all around.
Yeah, and it's good food. Don't get me wrong.
It is good. It was good.
Yeah, but it's just I don't think that
it tastes different though, depending on what the value you had to give for that food. It tastes a little different.
Yes, exactly. It's not $26 for food. I can go sit down and get a meal at a restaurant for that.
See, okay, but when we think about things like Shake Shack, it really begs the question of the convenience of something like Chipotle. You're walking out of Shake Shack, $25. I mean, you get 2 Chipotle bowls.
I won't say anything positive about Chipotle.
So I'm not going to do it.
Don't try to make me say something positive about Chipotle.
That's how we know you messed up. We got Gus hyping up Chipotle. VIX is pumping again. It looks like we're pulling back a little bit here. Volatility definitely starting to cluster a little bit more from what we've seen. Will we actually get a sustained pop in volatility? I mean, I really hope so. I know even earlier this week, since we had an elevated vol near 20, I even noticed I had to be very meticulous about the entries and exits with some of the contracts, because I noticed earlier on this week, even on the paper cuts, I got slipped an extra 5 points, 7 points, not recognizing, we're in an environment where volatility is expanding. So kind of got my eye on it. Volatility is clustering around 20. So if this begins to be the base, I think that these premiums will start to go crazy, but that's if we get a pullback in the market.
What's going on, JT? Good to see you. Hope your phone call went well. Yeah, and the goalposts definitely move a little bit when you talk about sustained VIX,
absolutely,
pop. It's like,
absolutely.
If it hangs over 20 for a week, I feel like that's pretty sustained. This is not a growth asset. It doesn't have to hold for a month or two for me to start to feel confident. Like we are definitely getting close to the point here where I feel like we could start throwing around the word sustained, even though we have channeled a little bit, but we've had recurring pops over 20 over the last week or two.
100%. Yo, how did your M&Q play go today? I just got back. So I didn't take any M&Q today. Go here to the futures. No M&Q today. We can go to the trading view charts here in a little bit. Really nothing exciting. What we're going to see is the fact that the market just traded inside that range, but still a pretty good takeaway, because whenever the market is just trading in the middle of value, it's a pretty good indication to know we should be hands off a little bit so we don't get chopped around and thrown in the blender. So I guess knowing when not to trade is a valuable lesson at the same time. And I think today was a perfect example of that. The only QQQ trades or NASDAQ indice trades that we took was we bought some puts before close. We were trading around the value area high. So I had bought 2. These went up about 50%. So I think they were like 389. Let's see where these were at. I think these were 389 we bought them. Yeah, we bought 2 of them, 389. What time was that at? 1:35 p.m. So a couple hours before the close, and then we took them off the second the market opened up, because I was like, we got the gap down. We started to sell off in the pre-market. I don't want this market to reverse on me. And because it was, there were options that we paid for since we paid a debit for them, didn't want to have to worry about the theta decay. So I wasn't going to play any games when it came down to that. But we were able to do a little bit of a scoopy in terms of having a gap down in the market. But we did take that short off the value area high. So we did do the analysis on NASDAQ, but that's the only excitement or only trade that we've had in the last 24 hours for the most part on QQQ or NASDAQ. But we can go ahead. Oh, no, we're actually out of time here. Next time we'll jump over to the TradingView platform. But QQQ was what it was for the day. I will say I do still believe that purchasing some of the shorter dated contracts probably still gives you some of the best risk to reward if you're looking to get out of them fairly quickly. Because, I mean, if you think about it, $389 per contract, if you buy 2, that's just under $800, right? And then we sold both of them for about $616, so almost a 50% gain. And I mean, we only used, what did we do? I mean, $470, I think we made $470, and we only used like $750, $760, you know what I mean? And I mean, one micro is going to be around $2,500. I think they definitely all have their place for sure, but that return on capital I don't think can be understated on some of the options if used correctly. If you bag hold them, theta's gonna cook you a little bit, but that's all I got on my end. Anything else on yours, Gus?
Yeah, all I got on my end as well. If you made no M&Q trades, I guess it's a good day to not have any time to pop over to TradingView. We've planned
great
that
point.
way.
Great point. Yeah, just trading in that range, really pretty much hands off for the rest of the day. I was pretty shocked. I thought we maybe would have gotten some type of directional move today. Guess not. We'll see what we get for the next week. Volatility sitting near 20 right now. Will we be below 20 by Monday? Will we be above 20 by Monday? I don't know. With that being said, Jared, JT, Darker, Brandon, Reds Media, Grumpy Mike, everybody else, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
We want wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
Not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Friday, February 27th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, private credit concerns go boom in the night while maybe bombs drop in Iran this weekend. President Trump said, with respect to military action in Iran, quote, "Sometimes you got to do it," unquote. So that's where we sit at the start of the show. A war trade is percolating here in the markets against a backdrop of some banking concerns. The regional banks, which have been holding up, down 5.5%, much to the chagrin of my Russell position. But we do have more dispersion trade in this market, Ilya. It is a war trade kind of Friday. Gold, bonds up, oil up, and stocks down.
It is certainly a very interesting kind of day, especially after those PPI numbers came in much hotter than expected, looking especially at the core reading. I mean, 3.6%. We haven't seen wholesale inflation like that since March 2025. Wait, what did we have in March 2025? Oh, yes, we were just going into the rollout of the reciprocal tariffs. And we were front running those. Right. So the situation is looking like, again, the markets are juggling all of the balls all at the same time. If we take a look at just the way the month is ending here, the S&P is going to be down for the month if we close around here. But exclude tech, and it's up 0.3% for the month to a record closing high, barring tech. And then it becomes tempting to say, well, but tech is performing great outside the US, in particular in Asia. They're having the best February ever.
Well, their memory chip makers in South Korea are going bonkers right now. SK Hynix and Samsung, they're just
and then you go, wait a second. So maybe this is just rotation into new AI names out of these AI names. Maybe the US AI names have done all that they're going to do, and these other AI names downwind in the supply chain are outperforming. But then the dollar is up on the month, and you go, well, no, this is not capital leaving the US as such, or we'd see it in the greenback. What is all this? And in the end, it just leads me back to gold, which is up almost 11% on the month, even with that wipeout.
And silver is doing big things today, too, as traders get ready for this another weekend where we wait to see what happens in the Middle East. I wouldn't be shocked, Ilya, if we go another few days, because there's more negotiations due next week where come Monday, we look at a gap open lower in oil should there be nothing that transpires. But oil is certainly a leader to the upside today and defining a large swath of the market's performance. Before we get there, though, it is Friday. So as we typically do on Futures Power Hour, we like to look to the week ahead. And we're through earnings season, Ilya. NVIDIA just reported this week, and that really caps off all the names that we care about. I'm looking forward to FactSet's effectively their end to the quarter report, which is today.
They missed last week's update, which was a little bit weird. They put out a whole statement about it, but they didn't explain why. We have the update today. That one is already out for this weekend. Sort of catches us up to the end of this earnings season. Of course, talks about NVIDIA, talks about everything else. What's interesting in this set of numbers here, and you've pointed this out before, the EPS surprises relative to price action. Price action has been relatively solid. Average misses have only cost the stocks in the S&P 500 1.3% versus 2.8% for a 5-year average. So stocks are getting hurt less bad when they miss. On the positive side, 1.2% gains versus a 5-year average of only 0.9. So they're being rewarded more when they beat on the upside.
When you say rewarded more and they gain, that's the 2 days around the window, the release window for the earnings report.
Yes,
okay, just to clarify.
Yes, that's that surprise window, and the 5-year averages
it's 2 days before and 2 days after.
2 days
so
before,
you're saying 1.2% versus 0.5 or 0.9. Excuse me.
0.9. So you have more than average rewarding of upside earnings surprises, smaller than average pain on negative earning surprises. You have the S&P 500 with 14.2% year-on-year earnings growth, up from 6.2%, 6.3% the prior. And no, I'm sorry, 8.3%. Small print, FactSet, do better. And for tech, it's 33.4%. That's crazy.
It's
and
crazy.
Yet the S&P can't rally, and it's being dragged down by tech. To which I say sentiment. The results are there. There is no reason to look at these numbers and go, something negative is going on. And yet clearly the markets don't care about these numbers.
Well, we don't have numbers next week. 96% of companies in the S&P 500 have reported. There are a few names that will draw people's interest on a very discrete basis. Looking forward into the first week of March, Ilya. Monday, some names related to satellites. So think about momentum, meme stock names, AST, EchoStar. All right. But then Tuesday, CrowdStrike. Wednesday, Broadcom. Broadcom's interesting. Thursday, Costco, Baba. Friday, well, nothing. So you could select maybe one name on the earnings side every day that raises an eyebrow, perhaps potentially worth a trade. But anything that's informative of the macro narrative right now, probably not, or the broader narrative in markets. We've already digested all that information. We've had the Mag 7. We've been through the thick of it. The market, for whatever reason, is digesting other concerns at the margins right now, which I think if you were to look to, say, the VIX 3-month spot spread, as it were, that's basically compressed to flat today after being nearly 3 points wide earlier this week. So it's not just concerns about an AI apocalypse, say, later this year or next year, as white-collar workers lose all their jobs and savings. There's near-term concerns bubbling up in the market, too, which is why we're seeing the front end of the vol curve move out of that beautiful contango and go into a more flat or even backwardated state. So Ilya, next week, there is one thing I'm looking for. I know there's some Chinese data. I know there's some European inflation data.
Indeed.
Are we going to get non-farm payrolls? Do we know this for sure yet? I know that nothing has been announced, but
I don't see anything from the BLS as of yesterday. Why don't we check right now?
I just still haven't seen anything.
We'll see if anything has been announced. Here we have. Let's see. Yeah, I mean, the last update that we have here is talking about BLS being unable to collect October data. I mean, we knew that already. That's old news.
February they delayed the report by a few days because of the government shutdown beginning, which we're still in the midst of that same partial government shutdown. So I only ask because it feels like a market that can't say for sure if it were to come out. And right now it is still scheduled, but it almost feels like with this potential,
it is scheduled.
With this potential lingering at the margin, non-zero shot that they decide to push it off. Do you think the market cares so much about non-farm payrolls next week, or are we preoccupied with other machinations right now? And I want to add the finer point of the last non-farm payrolls report arrived in a month, February here, where we didn't have a Fed meeting next month, even though the odds of a rate cut are minimal right now, according to the CME FedWatch tool. I don't think we should be expecting anything at the March meeting. 5.9%. Okay, we'll call it 6 to round up.
Yeah, but we already knew that. I don't think that's really the controversial conversation.
Okay, so then
Fed policy.
Right, but that's the whole thing. We care about non-farm payrolls and CPI insofar as we think they're going to be fulcrums in which policy.
Yes, but not necessarily for the immediate meeting, right? Like the main question here hasn't been whether the data means something for the March meeting. Nobody in their right mind would expect a move at the March meeting, because when you look at the way that the probabilities have laid out in Fed funds futures, the conversation has never been about March. And it hasn't been about March for the better part of a year.
So then do we take
the question is June?
Down?
Well, so the question is June or July. And
so
recently it's become July.
So much data before then, though. So then what does a March payrolls report mean? I mean, it feels like it could be one of those days where we get the number, the market reacts to it, and then just calms down because there's no broader implication from which to be drawn.
I don't think that's where my head is at on this, because we see how wild the markets have been gyrating around not so much the outlook for the next meeting, again, which isn't an object of speculation and so doesn't really factor into the conversation because it's been benchmarked ages ago. The speculation, nevertheless, is being driven by how much easing the markets want for the year versus how much easing the Fed wants to give them. And there is an increasing divergence there. The markets are pushing in a more dovish direction. They're starting to flirt with better than 50-50 odds of a cut next year in addition to 50 this year. That's 75 through the end of 2027. The probabilities aren't fully there, but if that were to happen, that would be the markets tilting towards 75 over this year and next, and the Fed at 25 basis points less than that, and spread out with one this year, one next year. And that's if December's forecast is still valid, which if you listen to Fed officials, it might be going the other way. It might be no cuts this year and one next year. It might be one cut this year and none next year.
The economy is better and inflation staying stickier. So what do they do in that situation? They don't.
I think that's where non-farm payroll. That's right. I think that's where non-farm payrolls becomes critical. We just heard from Waller this week. Waller, the dissenter, who's been calling for rate cuts since July, saying, you know what, if we get another jobs report like we saw in January, where we got 130K, I don't know about these rate cuts. That's very immediate.
It's funny how you call him the dissenter. It's like there's Pliny the Elder, and now there's going to be Waller the dissenter.
Waller the dissenter. That's right.
Look back 2,000 years to this time. Yeah. Where does this leave the S&P and the NASDAQ? The NASDAQ actually is holding up better than its counterparts today, only off by, we'll call it 0.6%. Curiously, it's not software that's in the blender per se so much today. It is down 1.84%, but more stability than we had at the start of the week. And certainly we got through an interesting week of headlines around predictions of how the market may evolve over the coming months. That aside, though, Ilya, this is not the big pain point today. I think we need to look to the regional banks because the private credit bubblings, something in that realm, they have started to percolate a little bit more. It was the focus of the Tasty Report this morning. So folks that haven't been watching that, I'd encourage you to go check out both of our morning YouTube videos and socials. 3 things to watch today and the Tasty Report, where we expand on a thematic topic that is arguably driving markets right now. And today's was about widening credit spreads, treasury yields sinking to lows, and the shift in December 27 rate cut odds. And we're seeing people like Jamie Dimon say that the activity he's seeing in private credit is awfully reminiscent to him of what he saw in the 2000s leading to the global financial crisis. So with companies like Blue Owl, for example, continuing to suffer, it feels like we're switching, from software to private credit now as the driver in this market. These issues are beginning to be a little bit more than just simply theoretical. And well, we can go to something like the Wisdom Tree private credit ETF, which is sitting at what would be a 52-week closing low down here, Ilya.
Mm-hmm.
So regional banks right now, you would think oil up, energy sector doing well, regional banks should be on better footing. But it is really a story today of the Russell's underperformance, the financials underperformance as these credit concerns are beginning to top up. And I'm not sure we should have the confidence to look through them just yet, even if my vested interest in the Russell sitting long here is very much being challenged as we come to the end of this trading week and ultimately month.
Yeah, I mean, I think you're starting to see those things, as we always talk about from a sentiment perspective, where the market suddenly starts to look under the surface. And that's a sentiment shift. When sentiment is positive, the market has a set of blinders on. It shrugs off bad news. It starts going, AI boom.
Right. Narrative flexibility.
Rate cuts. Fiscal stop. Stop it. What are you worried about? And just ignores things. And then when sentiment shifts, you get a little Citrini imagination. He's not saying this is going to happen. He's saying, here's a thing that I thought about that could happen. And then everybody loses their mind. This is a sentiment change. And it is in these situations that bad things happen. Because when sentiment changes, all of a sudden credit becomes scarce because people start getting skittish about giving other people money. And when that happens, all of a sudden credit-dependent vehicles that didn't maybe have all of their T's crossed and all of their I's dotted start to all of a sudden get a little shaky. All of a sudden, whoa, hold on. Blue Owl is not honoring redemptions? Whoa, hang on. Wait. What's going on with this UK situation over here, this mortgage lender? And so this is how it starts. I mean, let's remember 2006. The crisis didn't begin with Lehman in 2008. it built slowly over time, brick by brick.
You yearn for another 2006, 2007.
I just see so much disconnect in these markets that I say I don't understand how we don't have one and how we haven't had one yet. And of course, nobody knows when. But these things too have a pattern. They happen all the time.
They do. I don't want to get over I'm not getting over my skis on this. As Howard Marks said yesterday in his latest memo, I'd rather be an optimist and wrong than be a pessimist and right. that may be the yin and yang of our personalities on display over the past few years.
Kudos to Howard Marks, one of the great explainers of markets.
Yeah, and his podcast, The Memo, is fantastic. Right?
Fantastic.
So, and he definitely worth the listen if you're
his book on market cycles is one of my favorite market books, and I think essential reading for anyone that wants to understand what's actually going on.
There are nuances and contours to this market, though, Ilya. RSP is only up by 0.2%. I mean, really, depending upon where you look, it's still a question of dispersion and concentration to a large degree, where you have a Mag 7 that earlier this week was trying to get back into a trading range and bumped right back into that 1 month moving average, where former horizontal support right around that 63 level in the ETF line. And that's where we have since seen the market fall from. We could go down to an hourly time frame to look at this breakout, return to the breakout level, and then ultimate failure. Whatever rebound that we've seen since February 17th, that's clearly been lost today. And you're starting to challenge swing lows that we've seen over recent sessions. So if the Mag 7, Ilya, are still in the blender right now, you have to naturally pop on over to the NASDAQ here. And it's quite frankly not that great. Though the NASDAQ is down less than the Mag 7. So just a quick jaunt over to the QQEW. And, it's not the worst picture in the world breadth-wise today. You're still seeing your industrials. You're still seeing your telecom hold up. There's been a lot of chop. I mean, I think the way that we approach this market at the start of the week here by looking at the dispersion and taking a look at the volatility curves, playing the short iron condor and the S&P has proved to be the best trade amongst the new ones that were put on, including the next leg of the Russell longs, in part because we continue to stay range bound and chop as the market digests disappointing tech versus trying to reallocate capital elsewhere, which to your credit, this isn't happening amidst the backdrop of a dollar falling apart. People aren't taking money out of the U.S. economy.
Right.
They're just putting it in different spots, it seems.
Yeah. Yeah. I mean, it seems like there is some degree of rotation, but I think it would be wrong to conclude that all of the rotation is going into the propulsion of APAC stocks in particular, but stocks outside the US more generally, because if that were the case, the dollar would be down. There would be net outflows out of the dollar, but there are not. The dollar is not down, and bonds are, if anything, up. I mean, February has been an explosive month for bonds. So the question is, where's the money going? It's not going to relatively illiquid APAC markets, because if we think we're seeing gains there now, can you imagine if what was coming out of the tech shares actually went in aggregate to markets outside the US? I mean, we'd be looking at moves several times larger than this. Instead, it seems to be going into gold, into bonds, and into cash. And to some extent in crude oil, but that's only just getting started and maybe is a little bit more speculative. People getting ready for what could be a shoe that drops.
Oil vol today, 85. Come on, people have been bidding up oil vol.
Right. And we've talked about this idea that it's not one thing in oil. It's not that you have the Iran thing or the Venezuela thing or the capture of shadow fleet tankers now by not just the US, but also France and of all places, India. It's not any one of those things. It's all of those things and a universally accepted forecast of a glut of gluts before the year began. So it's sentiment also. It's everything. So So maybe oil is a little bit more speculative. Maybe it's a little bit more geopolitically hedged type of activity. But if you go down the big list, it seems like people are saying, okay, the US AI extrapolation story is priced correctly. Now, where does the money go? And it seems to have gone into a relatively defensive posture because most of it has gone into bonds, gold, and to some extent the dollar. And that's not happy sentiment tidings.
No, typically not. It's why we're calling this the War Trade Part 4, because in fairness, this is the fourth time we've used the War Trade in the title on the show over the past few years. So it feels like a Part 4. Also, War Trade IV, Roman numeral for 4. I mean, come on, this is an option show, so couldn't pass up the War Trade IV. Double meaning there.
Hashtag bars.
Russell 2000. Are we at a precipice? There's no such thing as a quadruple bottom, Ilya. So this fourth test of the 50-day moving average thus far in February, actually the fifth test, if we want to call it, because quite frankly,
is
this one test or two tests? Is this one test or two because we're there 2 days? I'm going to call it a single test, but you also have here at the end of January. So
I mean, clearly there's something there. There's something there at 2,600 that we're dancing on, and we're getting a little bit deeper under, a little bit shallower, but something is right there. And you can see by the axis you have drawn through the middle of the chart, it's not always the prettiest. So the first peak is a little bit shallower than the next peak, but ultimately the place where you're gyrating is the same general area.
Yeah, so if we break through 2,600, this chart looks less symmetrical triangle after uptrend breaking to the upside, which I typically say 70% of the time it works out.
I mean, and you're right.
Studies,
that's how it tends to go.
But there are those 30% of outcomes where it doesn't, and maybe that's
right
where
it becomes consolidation before a sentiment shift.
Yeah, we're gonna look to that 50-day moving average. We'll keep an eye on it. It's been holding up really since the market started moving higher at the end of November. For the Russell, what has been a pretty typical good month of December, it feels like, for the past several years. But we crossed that 50-day. We have not really seen much pressure on the other side of it. We're bouncing a bit here, but the consolidation remains, right? It's like the S&P. I was long the Russell off the 50-day moving average looking for a breakout. So nothing has changed there. We're still consolidating for the S&P. We're still consolidating. So short iron condor, looking for volatility and chop and dispersion to continue. It feels like that's the best bet heading into next week, even if we do carry this risk where maybe some of the downside is tested because of whatever headlines may transpire out of Iran over the weekend, which I think when you look to bonds and gold and oil, that is very obviously the driving factor today. If PPI was so hot, how come bonds are doing so well? I would argue, but I'll nitpick PPI with you in a second because I've been doing it with Josh today. Do we have anything else to say about equities, though, heading into next week? I mean, we could take a brief look at sector rotation before we head out the door, but I'll give you the second to last word before we do that.
I think it makes sense to start looking at some of the thematic things here. So, for example, LQD, HYG. These are bond market ETFs, corporate bond market ETFs. And when you start looking at these things and you see them gap like this and come down, you go, wait, there's something that's maybe untoward here. It's not there yet. There's not breakouts, but there are good and liquid proxies for things out there. And I would encourage people to look at these bond market ETFs because this is starting to become a little bit of a chorus. It's not just Saba Capital. Now it's Jamie Dimon and Barclays and a few other people. And it seems like maybe they're starting to try to get in front of something. Maybe it's nothing. Maybe there's another year or two or three or who knows what. But keep an eye on this space. LQD, HYG, JNK, like all of these types of instruments are great indicators for sentiment.
So the only thing that I would point out is not every private credit ETF is created equally. Some of these, like PRIV, is a public and private credit ETF. So just going through this last night, these are not all very liquid ETFs. Like PRIV here has $850 million in total assets. BizD, the biggest one, has $1.5 billion. Those are drops in the bucket. Big picture here. So I don't know if these are trading vehicles for people or things to watch, but if you look at something like PRIV, most of its holdings are in treasuries and mortgage-backed securities tied to Fannie Mae and Freddie Mac. Okay, Freddie Mac, excuse me. The point there is that when you look at treasuries over the past few weeks, they've been rallying. And so anything in that public credit universe has done a little bit better. And you see PRIV here is doing better than something like the Wisdom Tree HYIN, which does not have the treasury exposure and holdings of government adjacent debt instruments that PRIV does. So if anyone is actually trading these, I'm not. I'm looking at these as market indicators right now. But if you are, take a look at the ETF holdings so you know what you're getting into, because shorting PRIV, which is I think 40% weighting in treasuries right now, that's not exactly the place to get exposure to maybe a financial sector meltdown situation, if that's what people are thinking is going to happen.
And I mean, frankly, take a look at KRW, will you? And you don't even, you don't even have to go far. That's KRE, but let's take a look at the banks
KBW.
ETF.
Oh, we'll go BKX then.
Oh yeah, there you go. I mean, that's not happy thoughts.
Topping, we try to get back into the neckline support level. We roll against the 1 month average, and then we fall into new lows. This is an ugly rejection, technically speaking, of trying to reestablish a move back into the consolidation. It's one of those reasons when you look around the horn right now, carry is not dead on a technical basis, but XLF, it's at that decision point again, the multi-month range lows, where if you fall below them after having tried to reclaim the range, how do you really feel? You don't feel great. And that knocks one of the pillars out from underneath what had been a good market at the start of the year and go December onwards, where it looked like, hey, industrial's up, telecom's up, semis are up, the banks are up. I mean, this is all very growthy. Now it's not looking like that so much, which is one of the reasons why we're seeing bonds bubble up today amid private credit troubles. I would look at the 10-year yield first and foremost here, Ilya, because we take a look at our 10-year yield and we see it as at a 3.969. So we finally cracked through the 4% level. December 27 rate cut odds are the ones that are moving this week. It's almost as if the bond market is taking seriously the AI apocalypse fears and the joblessness that will be arriving at some point in the next 18 months. There has not been
when we looked at the banks just now. What does that recall for you? It's funny how people are naming things, right? They're naming this the AI scare trade or SaaS apocalypse. The situation in the banks is being called the cockroach trade, as of today, anyway, because of the famous Warren Buffett interview where he says, "Look, what you find is there's never just one cockroach in the kitchen when you start looking around." In other words, all of these things are starting to add up.
I don't need to find cockroaches.
I don't think anybody does. I don't think anybody does. But they seem to be popping up. And the narrative seems to be becoming, look, it's never one thing. When you find one thing, and then another, and then another, and then another, you have to be open-minded to the possibility that there is a larger thing.
Yes. The larger thing is playing out here right now in notes and bonds. So there are different regimes, and the market obviously changes over time. But if we think about the interplay between rate cut odds, let's say in 2024, and the way treasury yields moved, when rate cut odds went up and were realized, treasury yields went up. Reflation. We're now seeing rate cut odds jump, and it's producing a downdraft in treasury yields. That's not a maintenance cut or a reflationary type of cut that's coming down the pipeline as the market's pricing it. That's a recessionary cut that's being priced in.
Yeah.
So I'm looking at notes. I'm looking at bonds here. I see a market that is sitting near range highs. Ilya, we're up near 114. Oh, gosh. That reverse iron fly was such a good trade. It just needed a little bit more time to work out because we did ultimately get a move close to 114. Just another 15 days would have been brilliant. But here's why we care about that, because there is a greater implication right now playing out on this chart. In terms of a potential bottom coming together in notes and bonds, it's long been a conversation around here with many false starts. But you can see off the highs in 24, here in 25, we're breaking that downtrend. I'm going to posit Ilya through 114. The notes look like they've turned a corner. It's very similar to ZB, where if we were looking at that weekly chart on the continuous contract, we see a market that is trying to break out right now from a similar consolidation with a trend line going back to the COVID highs here. Oh, need a little bit more time. COVID was more than 4 years ago. So COVID high, tariff high, triangle, bottom. We're getting a pretty clear signal here. Yesterday, I tried getting long ZB. Wasn't filled, just like I tried getting long silver for a fourth consecutive day, wasn't filled. However, we're going to take another bite at the apple right now, which if we're thinking at 56, and we want to be here in ZB, let's go over there to ZB. Okay. Oh, I did get filled now. Wonderful.
Ah, look at that.
120, 122 call spread right now. Hey, sometimes because the technicals here in a 4-hour time frame look like a market that was pennant, bull, flag, pretty clean. You have our rally, we have our consolidation pullback, left shoulder, head, right shoulder shallower than the left shoulder, bing, bang, boom. We should be looking for a move, measurement, maybe up into 121. So 120, 122 call spread, Ilya. It feels like the glove fits. We have rate cut odds going up with treasury yields going down and the banks falling apart. Don't overthink it.
No. It need not be overthought. I mean, there's a very clear setup here. It looks like the markets are saying, I don't think you hear us. You're going to cut rates more than you are saying. And the Fed is saying, look, we have a mandate. Our mandate is inflation and employment. We're not going to come here and rescue you on your potential for shenanigans ideas. Show us the shenanigans and we'll react. And I understand why the Fed has to do that. I think everybody ought to, because they have a mandate and they must live within the mandate. Protecting the market from its own shadow is not part of their mandate.
Well, hold on.
But when the market seizes up, it'll be to some extent later than is optimal for a Fed reaction.
What happened in 2023?
Yes.
Funny how these things happen in March. Always.
Yeah.
Just, when did Bear Stearns go down, Ilya?
Yeah.
March 2008, right? Okay. When did Signature Bank and SVB go down? March 2023. The Fed didn't respond because it didn't seem systemic at the time. And what ultimately occurred? The Fed raised rates a few weeks later. So with the mantra of the Fed always fighting the last war, do we think that the Fed, given the inflation backdrop that we have right now, is going to be keen to act quickly for a private credit market issue where they may feel from recent track record or their experience that they need not overreact in the short term because the market can and has handled failures in the system pretty recently on a significant level, right? SVB was a bigger failure than WAMU back in Washington Mutual back in the global financial crisis in terms of assets held on their books. So it feels like the Fed is going to be late if there is an issue coming down the pipeline right now.
I think that's right.
That means the bonds could get a little bit more traction because, again, rate cut odds up, bonds up. That is not something that we've enjoyed in many, many years.
Right. And I mean, I've taken action. I mean, as you just got filled on your ZB. I'm back long, the long end as well, because I think, to my mind, this looks like a breakout. My thinking, obviously, sounds very much aligned with yours, where I say, you know what? Because of the Fed's mandate, they're necessarily reactive, which means that they're going to be late as a function of how they are mandated to be. This is not the Fed asleep at the wheel. This is the Fed doing its job.
ZN, smaller product than ZB, which is usually applicable for retail traders. ZN has a higher IVR than ZB. So in practice, Ilya, not just in theory, there is perhaps an opportunity to do more of a typical tasty trade here with ZN, whereby we could look to sell a put spread, for example, to get some bullish exposure. And so thinking about, there's not quite a 45-day in, but there is a 56, and it is still in the ZN M6 contract. So the levels on the charts apply. The recent swing lows, if we really wanted to look on this chart, I see 112.5 as a fairly meaningful level, having been resistance in December, and then the pivot point that we had in mid-February. And you know what sits right there now? Our 1 month moving average at 112 and 23.2 ticks. So thinking about 113, 112 here, we could do a 77% probability of profit trade and just trade around those levels. We're going to hold 112.5. We're going to hold the 1 month moving average. It's not a huge high convexity trade. It is risking 3 to make 1, but it is 3 to 1 at a 77% probability of profit. Ilya, that's interesting because usually when you get that high of a probability of profit, you're not looking at 3 to 1. You're more in like a 4 to 1 or 5 to 1, right? Risking $5 to make a single buck kind of area. So
yeah,
I don't think we should dismiss the IVR here and the fact that ZN is half the product size of ZB. A little bit more vol, maybe a better opportunity. You don't have to reach, and this thing just doesn't need a rally for this to work out. It just needs to not fall back below the 1 month. I like it. $500 of buying power.
It's not a bad idea. Certainly, I'm out at the long end, and I'm doing it through call verticals directionally because the vol is so cheap that you're getting 3 to 1 risk reward. And that's 49 days out. So you got plenty of time. You dilute your exposure to Delta a little bit up front, just in case things get squirrely over the weekend. But you're long the bonds. So if things get squirrely, you probably are on the right side of where you want to be directionally. It's not like you're going to get a dramatic de-escalation in any which way. Because again, even if the U.S. doesn't become involved in Iran, Iran is teetering nevertheless. It's a public uprising.
Right. I tried getting out of my ZB short iron condor yesterday for a quick $65 winner, and I couldn't get it filled. It's not going to be a winner now, but do I want to be directionally neutral if I'm also thinking that ZB could rally here? Yes, for one reason. In the event that we don't get an attack on Iran this weekend, given the market's war trade ginning up and how it's behaved on the other side of these weekends recently, there is, I would argue, if oil's pulling back, bonds probably pull back a little bit too. Maybe
I would
half
agree.
a point or a point. And that would allow me, this is not going to be a major loser if this happens the wrong way, because also the ZB longs then would probably be working up more and they would subsume whatever minor losses we have here. So I'm comfortable keeping that on given the staggering 28-day short iron condor. We get to Monday's open. First call, bonds are down half a point or a point because there's no attack. I'm trying to take this off and get a little bit more scratch out of here. And then I will stick with just the long ZB position.
Yeah.
Yesterday couldn't get filled, so we're still dealing with that right now, but $15 loss. Okay. Hey, Metals. Nice to see you again. Hey, finally got my silver back in, which really delights me because it was tough this week not being able to get back in for several days here, but we finally get the bounce. Yesterday, the low was 85.55. Today, we're up at 93.76. It's a 7% rally. Gold, which that beautiful consolidation we've been eyeing for the past few sessions.
That's right.
And even talked about the Druckenmiller methodology, where you look at the 8 to 20 times multiplier on a 4-hour time frame. So within the next few days, week, we should see a breakout if it's right. And we get that breakout starting in today's session with gold up to 52.60. So, Ilya, there's nothing really more to say here than the market is doing what one would hope it would do in these situations, which is why hand sitting has been such a comfortable position to be in. when you see typically, and it doesn't work out all the time, look at the Russell right now, but when you see triangular consolidations after uptrends holding above former resistance become support, there is really only one thing to do, and it's to get long and bide time. So metals, again, are, as is a common refrain, among the best performing things that we have operating right now, because they are giving us the cleanest charts with the cleanest narrative, and it really does feel like we've turned the corner about clearing all the speculative excesses out of the market following all those margin hikes.
It is looking better supported. And we've been singing this song for a while, this idea that this is a structural narrative, that this is an avatar for deglobalization as a structural force, probably for a period of years. It's a little bit dicier in gold, I would say, to put on new exposure. I mean, I got more long earlier this week when we were testing the bottom of this range. So I'm very happy keeping this on, but to add exposure here now, you're at the top of that range, you're testing that recent swing high, probably not what I would do, but on silver, if you look at 4-hour charts, 8-hour charts, you're clearing that range high right now from early February, where we got that initial bounce after that metals meltdown. And that's a clean breakout. So if you haven't been in silver, as I have not, this might be the place. And I'm certainly trying to size something up here, probably to go out today.
You could see how we're clearing the swing low, interestingly enough, mid-January here. And then on the way back up, we run into about 91 and we fail. We failed near 91, 92 the other day, 25th. But now we're punching through it. And we are just stair-stepping higher through former resistance levels. We just did this here at the February 11th high, broke through it, consolidated around it, now moved up to another level. So gold, silver, even copper here, though copper not enjoying the precious metals mania like everything else, which it's a little bit more growth sensitive. So if we're concerned about a global oil shock because of an Iranian war, then the elevation in input costs, because energy is up through the roof for a period of time, however long that may be, could be a negative for global growth. So you can kind of understand why copper is not doing fantastic. Palladium, platinum, those are also having good days today. Platinum futures up 5.8%. Because of the duration in these trades, Ilya, for myself, looking out how long I am in gold and silver, there is literally no reason for me to be concerned about what happens this weekend or not. Gold's story for the past few months has not been predicated on geopolitical risk premium rising. It's been a convenient additive to the narrative, but it hasn't been the primary driving factor. So again, if there's no war over the weekend, does gold probably pull back when we're on first call? Yeah, it does. Does it deter or change the technical structure or the uptrend or anything here? Not until we're below 5,100. And if we're above 5,100, the bulls, they're in the driver's seat. And happy to be a passenger on that ride once again.
Yeah, I mean, as you look at what's going on here, I think there's clearly a level of resilience in this narrative. Yes, we had a meltdown. Of course, there was a sentiment reset. That isn't unusual. But we said at the time, and I'm going to continue to say it, and probably for another 3 years at minimum, this is not having to do with de-dollarization. We can clearly see that. The dollar hasn't meaningfully fallen in months. We do not see this as a function of what's going on with yields, because yes, bonds are up now, but in the grand scheme of things here, for how long gold's been rallying, that has not been the case. This is its own speculative narrative, and it's not one that's going away.
Not going away. If it's not going away, Ilya, I'd point out that gold has survived what's recently been a not great month of February. Past decade coming into this month of February, gold had average gains only 36% of the time, it says here. I guess we're looking back 11 years, technically speaking. So Let me just fix this. This is silly. Why would you do this to the chart here? 2016 starting point. Okay. 40% of the time, we've seen gold rally in February over the past decade. Average gain of 0.37%. It's obviously had a much better month than that, although it kind of gets a nice little base effect because of the late January implosion. In any event, we are going into a window where gold has done well recently. Past decade, March has averaged a 3.1% gain 70% of the time. In April, has averaged a 2.01% gain 70% of the time. So if there was a seasonal window where gold may have a chance to pick things up, February is usually a slowdown point. The tailwinds are back, even if it hasn't seemed like they were absent. But the seasonal tailwinds will be kicking back in perhaps. And we know those can be self-fulfilling for a myriad reasons. Ilya, we do make our turn to the oil market because Trump said, what about Iran? Yeah, he said the thing we said at the start of the show, that sometimes you got to go to war. Which oil prices today, loud and clear, Commander-in-Chief, 86 IVR here. We're cycling up to a new 2026 high in terms of volatility. This is the 86th percentile over the past year. So rare is the occasion that you will find oil vol much higher than it is now. And in fact, the only time you will would be going back to the kerfuffle we had with Iran last June. So if it rhymes, may not be repeating itself directly, but kind of walks like a duck and talks like a duck. This smells like an Iranian duck. What else is there to say? 66.92. Market doesn't get its war over the weekend. Oil's going to come back in. If it does get a bombing, we probably have to see how the dust settles and how Iran reacts to the extent of their response of retaliation, as we've been saying for the past several weeks. Any videos of the statue being destroyed will know.
And again, look at what's been going on with this stair step higher. How many consecutive weekends have we now had of no attack and oil keeps going up? It's not just holding, it's continuing to stair step higher. And so the issue here,
forward, one back.
The issue here clearly isn't whether the US is going to attack or not. That's the immediate concern, and of course, incredibly important. But even if the US does not attack, the situation in Iran has a life of its own because it is a popular uprising, and with the scale of repression that occurred in the initial response, a lot of estimates now starting to settle around 30,000 people killed, basically over a weekend. You're getting into a situation where this is not going to go quietly, and it's not going to be a quick one and done kind of a thing. This is structural.
Oil pressing on. Ilya, I know you and I are taking slightly different approaches here. I'm thinking shorter term. I'm still pushing on that long call spread that was put on several weeks ago when oil was just breaking above 60 at the 70-71. We're beginning to get into the, are we playing chicken zone yet? Because a day like today, the position could be offloaded at a small gain of $130. But if we're patient here, and this is in place for one reason and one reason alone, given our exposure, at least my exposure that I have for risk assets, if oil does touch the 70 strike, it probably means other things that I have in my portfolio are suffering. So this is really a hedge of sorts in case war does break out at a time when the market's not open. And so to that point, there's no reason to take it off. But the other side of this is, of course, the fact that we're sitting right near the midpoint, as we have been doing so recently, of the 52-week trading range. In fact, if that's coming in at 66.5, we're closer to it today than we were at various points yesterday. So with the IVR where it is right now, when volatility is this high, the preferred methodology is to look to sell the vol and give yourself enough duration so that if we get that compression, Ilya, we can be in a place where we can take advantage of it. So what does that look like right now? There are different ways to do this. I am looking at the 78.79, the 53.54 short iron condor at 48 days to expiration. But if we wanted to do this again right now, you could go out even a little bit further thanks to the vol expansion. You could go up to 81, 82. You could go down to 51, 52. And you could start to tinker around some of these strikes that cover the 52-week high lows and put yourself in a position where maybe you're getting a 4-to-1, a 3-to-1, and it's still in that 60 to 70% probability of profit zone. So look through the noise, I would suggest, if you're trading oil. It's not just longs pressing the longs because of hedging reasons elsewhere. We also have to take advantage of the vol structurally. 48 days, if this thing chops around, and even if the vol stays up, we can make money on it. So typical Tasty trade here. Closest to 45 in, 21 out. That's the plan.
Yeah,
it's already on.
For me, obviously, it's a very different trade than what I put on, because it's funny. I have now been in the trade for as long as I have left in the trade. Today is actually the midpoint. I have 49 days to expiration, and I've been in the trade for 49 days. Yeah. So I've got all kinds of call verticals here, but of course they've been put on when oil volatility was dirt cheap. So it was very easy to be directional, to look at those lows around 55 and go, you know what? That's the low from April last year at Liberation Day. Something about this glut narrative is too consensus, and we seem to be starting to perk up through the immediate range. Let's take a flyer. And of course, since then, things have accelerated, and I've built into the position. This is kind of the macro trade, sort of page one of the way that I trade. I look for the price action to start to show something. The narrative catches up because it's time before people in the know reveal themselves in the price action, versus somebody looks at the price action and goes, wait, what? And starts to look at what's actually occurring. The price action will tell you, though. And if the narrative is right, you add and it keeps going. I don't think we're half done with this story. And your sound is gone.
Sorry about that. Yesterday we mentioned that we were a sixth time the charm for the dollar, trying to break through the 50-day moving average. Today, maybe a seventh time the charm, which I really don't think is an expression. Either way, we continue to play ping pong between the 1 month moving average and the 50-day moving average here in Dixie. We're trapped around the lows that we had from December. I'm personally pressing dollar longs right now through a British pound short delta trade in 6B. Short the one, we're cutting it down here, 136, 135, short call spread. Maybe getting out of it this morning would have been a better idea, because we never really could get down through 134. We've bounced, but this is a market, uptrend broken, momentum level starting to be treated as resistance. We're not breaking through the 1 month. We're struggling below the 50. We're struggling below the 1 week. So you got to be selective where your dollar exposure is.
Right. And I'm on both sides of this market. I'm long the Aussie because it's holding up.
It's near the top of its range.
Yeah, I mean, it's trying to grind higher. And maybe this is some kind of an exhaustion thing. It's been kind of slow, but it hasn't confirmed anything otherwise. So I'm long there. I'm short the euro. I'm short the pound. I'm short the yen.
I'm not touching the yen right now because I'm really intrigued that Scott Bessent was the guy doing the rates check, the channel check the other day.
Yeah.
That I need to think a little bit more deeply on what that means for U.S. administrative policy, but it does say to me that 160 is a bit of a ceiling in dollar yen right now. And that maybe
it could be
short put spreads around 62, 63 in the 6J futures could be a viable way to just play that cap. Calendar for Monday. The economic calendar is saturated next week. We have ISM manufacturing on Monday. That's going to be the big ticket item, but there are a bunch of central bankers speaking from around the world. So I wouldn't discount the fact that we could have some more rates-based volatility in this market. JGBs may be in focus, and the BOJ rate hike plans. Also, what's going on out of Australia. Their central bank has been afforded the opportunity to lean a little bit more hawkish recently. Either way, central banks and their chatter more predominant than the earnings next week. So Ilya, you and I are going to be wrapping up the day with last call later today, 3:30 Eastern, 2:30 Central. So you and I will take a quick break. Dr. J's coming up next. Get some coffee, get some water from theory to practice. Up next on Tasty Live. We'll see everyone in an hour and see how the market closes.
See you there, everybody.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the Friday edition of what it is that we are trying to do. I'm glad that you are here. It is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the program. You can celebrate if you are a bear today. You can commiserate if you are a bull. But of course, it is going to be a good time had by most. And whatever questions you have for me, drop them in the chat box. I'll try to get to as many as I can right around the second half of the show. The expected move on the number of questions I get to per show is some number between 0.01 and 0.02. So the earlier you get your question in, the higher the delta that I will get to that question. So Josh, go ahead and bring us into the market. Today, man, guys, it's not good out there. Where's iPod Touch at? Is he here? iPod Touch, identify yourself if you're in the chat. I'm just glancing. I don't see him, man. I see Samuel's in the house. MP is here. E-Media's here. Ramsey's here. N1C in the house and many others. But I don't see iPod Touch, and this is it, man. EMI S&P is down 63. You got the NASDAQ down 189. Not exactly risk-free in today. You got the boomers down 720 and the Russell 2000 futures index down 61 on the day. The weakest of the bunch by far. EMI S&P is only down 1%. NASDAQ down less than 1%. The boomers down 1.5%. And the Russell teetering on the brink of absolute destruction, down 2.25%. So bonds up 19 ticks, notes up 19 ticks, oil up a little bit, UB40 up a little bit. The Shifty celebrating up 74. The Hunt Brothers, everybody's got their Hunt Brothers pizza on order for the weekend. Silver up $6.27. So I would imagine you can maybe take in like some silver receipts, maybe show some open positions, whatever, and maybe they'll knock a little bit off of the old cheese and pepperoni. So silver up 7% on the day. A pretty nice day indeed. Volatility obviously going to be up on a day like today with the market getting absolutely bamboozled. You got volatility futures up $1.20. You got the spot volatility, the old VIX up 229. And so do we have backwardation? I think we do. A little bit of backwardation going into the weekend. Is that allowed? I don't know that it is. And so the VIX is at 29. I don't think we're quite there yet. The VIX is at 2091. The front month futures, which are March, are 2095. And so again, normally you have a situation where the futures volatility is higher than spot volatility. So the front month future, in this case it would be March, is going to be some number above current volatility. This is kind of normal default setting behavior for the volatility markets. And then this relationship also continues along the volatility curve to some degree. But generally speaking, just looking spot price out to that first futures price, you would expect to see future volatility higher than current volatility. And it kind of makes sense, right? Like if you just think about volatility as a measure of uncertainty, it's like, well, I don't know. I mean, the future hasn't exactly happened yet. Like I kind of know what today is because I'm here. But 30 days from now, 20 days from now, 37 days from now, I'm not exactly sure. And so it makes sense that volatility into the future would be higher than volatility today. But there are times when things are so chaotic, when things are so crazy that the volatility today is actually higher than the anticipated volatility in the future. And so the expectation is that, there'll be closure around the world and closure in the markets when it comes to, uncertainty subsiding in the markets and kind of getting some type of resolution on the front across the board, and volatility will calm down from where it is at its current level. So right now, we're not quite there. We're kind of, we are teetering on the brink of some backwardation in the volatility market. Look at that. It's exactly equal. Man, look at that. Volatility now, 2085. Volatility in the future, well, now it's 2090, but it was just 2085. And so anyway, there's a little volatility discussion for you guys. Is it going to make you a better trader? That might actually help you a little bit. Like most of our market commentary, it probably sends you down a couple of ticks. You probably have to kind of overcome it and make up for it. That might actually help you a little bit. And so there's some volatility commentary for you guys. And so, all right, what I want to do though, let's get into the portfolio. We've got a couple of positions. Who took me down in Dell? Who took me down in Dell? Identify yourself in the chat because somebody took me absolutely down in Dell. We are hemorrhaging cash. Trust me, I'm pretty good at doing that on my own. I don't need help. I don't need assistance. And so who took me down in Dell? Please identify yourself. I would really, really like to know. And so Dell, obviously giving us fits, but we'll get to that. It's all fine. It's all good. But let me know in the chat what you guys are doing. I want to know what you guys got on tap for the weekend. I want to know. Right, Josh wouldn't mind hearing, and the algo is dying to know what you've got going on this weekend. Let us all know. We all want to kind of know what's happening in your neck of the woods. So, all right, let's go to. So first and foremost, let's go ahead and do Dell. So Dell, again, I didn't even know they were a public company until a day ago, until 15 minutes ago, and yet here we are, sitting on a short strangle that is 100, 150, and we are getting creamed in this position. All kidding aside, though, whoever brought this to my table, it's all good. It's going to be fine. Trust me, what's the worst that could happen? Like, what's the worst that could happen? Oracle from last year? What did we lose, like 50, 60 bucks? No problem. SLV from 2 months ago? What were we down on that trade? Like $60? No problem. Don't even worry about it. Because here, we have an amazing teachable moment, right? Look at this. Oh, this is actually perfect. So whoever did bring me this Dell trade, all kidding aside, thank you, because this is an amazing teachable moment. We'll get the money back one way or another. And by that, I mean, it's like 40, 60 that we'll be able to overcome this loss. But if you look at the strangle, 100, 150, you've got the stock at 147. Here's what's crazy. right? And the P&L Open bros, they're going to be like, dude, is this cat out of his mind? They're going to be like, I don't know what kind of nonsense he's spouting off, but that's dead wrong, because here is the real deal. This trade is working. This trade is working. And I circled the P&L Open for the P&L Open bros. I'm making your job easier for you. I'm circling the P&L Day for the P&L Day bros. I'm making your job easier for you. So you're both very welcome. This trade is working as far as I'm concerned. Now, again, you may look at that and that may sound a little crazy. You maybe have been watching the show for a little while. You're like, yeah, this cat is a little crazy. I don't exactly understand what he means by that. Well, give me 17 minutes and let me unpack exactly what I mean by that. When you sell out of the money premium, it doesn't matter what strategy you choose. It could be a short strangle, which is what we have on here in Dell. It could be a short put. It could be a short call. It could be a ratio spread. It actually doesn't matter what you do. If you sell out of the money premium, then you are in a position where the stock has to beat you. And by beat you, I mean it has to push one or, well, it can't really be both. It has to push one of your options in the money, right? I mean, obviously with the strangle, you have two options brewing. One of them could be in the money. With a short put or a short call, you only have one option. So it's the only option that could be in the money or out of the money or whatever. For the stock to beat you, it has to push one of your options in the money. Right now, when you look at Dell, neither of those options are in the money. And so the way that I'm going to classify this, for my mental records at least, this trade is working. Because if nothing else changes about this strategy, if it keeps going forward and the stock price were to stay fixed right here, what is going to happen? The option prices are going to go down. The extrinsic value in the trade is going to fall. And what's going to happen to my P&L? It's going to improve. Little by little, day by day, I'm actually going to hit whatever targets I might have for the trade. I'm going to get to wherever I'm trying to go on this position if I just sit tight and if the stock did nothing from this point forward. Now, is that a realistic expectation? Is it a realistic expectation to look at Dell or Snapchat or any other stock and expect that stock to go nowhere? No, of course not. It's going to move. It's going to go higher. It's going to go lower. It's going to bounce around, what have you. But again, thinking in terms of the stock beating me, thinking in terms of, all right, if this thing just moves forward from this point and doesn't go anywhere, but time rolls off, the calendar marches forward, and we get to expiration, I'm going to be in a good spot. And so in my opinion, and for my money, this is the biggest advantage of short premium, right? I mean, we've been able to absorb a $26 move in Dell. And of course, we are losing money because the extrinsic value is increasing on the options, right? Because the extrinsic value is rising on those options. And that 150 call is getting closer to the at the money strike, which, oh, by the way, there's a brand new calculated risk coming out. When is this guy coming out? Is it Monday? It's either Monday or Tuesday, but there's a new calculated risk coming out that's all about this. Man, it's almost like this stuff's all related. Like, it's almost like there's like this cord of quantitative principles that just connects all this stuff. Extrinsic value and at the money options and the stickiness of the extrinsic value and things like that. But anyway, check out Calculated Risk, the brand new show on YouTube. There are new episodes every night that get dropped sometime between 4 Eastern and midnight. So somewhere in that 8-hour span, just make sure you are at the ready and you are ready to go for the drop, and it's going to find you. And so that episode's coming out pretty soon. So that's kind of cool. But anyway, this position is working. I know it's crazy. I know you're looking at the P&L, you're like, hey, it's red, how can it be working, this, that, and the other thing? That's fine. If you actually classify this as it not working, that would kind of be the conventional, kind of framework here, conventional wisdom. But for me, when it looks at, when I look at this position and I'm thinking about, all right, do I need to make an adjustment? I typically, when something is out of the money, I am not going to do anything. I'm going to sit tight and we're just going to kind of let this guy move forward. So anyway, that is our Dell commentary. And so DELL. So there you go. So all right. So Dell is over and done with. What's next? Oh, SLV. Oh, we're at 21 days to go. Man, look at this. 21 days to go. Wow. SLV, 21 days to go. What are we going to do? We're going to take it off. Right, we got a little bit of a profit in the position. We're up about 50 cents, 45 cents on the trade. We're at 21 days to go, right? And this is it. If you have an economically significant profit at 21 days to go, just take it. Like, if you have an economically significant profit at 21 days to go, don't think twice about it. Just take it off. Right? There's no reason to keep it on inside of this, marker in the expiration cycle. Just take it off. Just book the winner and move on. Now, Is 21 days to go that different than 18 days ago? Not really. Is 21 days to go that different from 16 days ago? Not really. Is 21 days to go that different from 14 days ago? Not really. Not if you look closely at the out of the money decay curve and try to figure out, or just look at the curve and see kind of where the decay really begins to change shape and the gamma becomes a bigger issue. It's not really until probably 14 days or so. But 21, I mean, it's a nice little mnemonic. It's easy to remember, and it's already the thing we've been using for so long. And so let's just kind of, dance with who brung us at this point and stick with 21 days to go. So SLV, we're at 21 days to go. We're up 45 cents. We'll take it off. So let's go ahead and let's close this guy out, and banana natties for everyone. I mean, that's the only solution here, I think, when it comes to the 45 cents that we were able to wrangle up here in SLV. So, all right, SLV 278. Let's give it a shot. All right, so we got filled at 278. Beautiful. Okay, so there's SLV. All right, so SLV over and done with. What's next? Oh, Hood. Man, look at Hood. Look at Robin Hood. Man, we're up about $2 on the trade. So Robinhood is down today, which is hurting us. We were actually up more yesterday. But for whatever reason, I forgot to look at Robinhood yesterday. It was actually on my list, but we never got to it because we were doing other things, and the wind kind of blew us in a different direction. But for Hood here, similar thing to SLV, other than the fact that we actually have a higher profit. We have a more economically significant, P&L on this position relative to what we just saw in SLV. SLV, it was 45 cents. We're at 21 days to go. Let's take it off and move on, and then that's going to be that. With Hood at 21 days here too, so the same kind of rules apply from where are you at in the expiration cycle? Where are you at in terms of entry around 45, exit around 21 for undefined risk positions, especially. Defined risk are a little bit different. We'll take a look at Meta here in a minute because that guy is right at 21 days to go as well. But for undefined risk positions, again, with the gamma risk and things of that nature, getting out around 21 days to go is a really, really good kind of reference point in the sea of duration that is an expiration cycle. And so as we are navigating said seas of duration, I'm looking at this and I'm like, man, we're up $2 on the trade. I don't really know why we would keep it any longer. I mean, I can talk myself out of it and we can keep this guy for another week or two for sure. But I think, man, let's just try to be, I know it's a Friday, but let's try to be a little bit disciplined today, right? I mean, it's very out of character. I mean, I really have to exercise a ton of intentionality to do that, but let's do it. I think we can do it if we do it together. And so for Hood here, let's go ahead and shut it down. EMI S&P is down 63. NASDAQ down 200. Man, it is over. It is literally over. And by that, I mean, it's just getting started. So let's go ahead and let's see here. 295. 295. All right, so we got Philly at 295. So there you go. So Hood is over and done with. SLV is over and done with. Man, what else do we got? Is that it? No, that's not it. What about, look at AMD, man. Hemorrhaging cash in AMD. Oh, that's also at 21 days to go. Okay. I actually wasn't going to look at that today just because it made me a little sad. It's like I'm hemorrhaging so much cash, which is bleeding red. And not only that, but actually, if we look at a chart of AMD, let me bring up my chart of AMD. Oh, that's not a daily. Is that a daily chart? No, that's got to be Errol Coleman stuff. Yeah, that's Errol Coleman settings. Let's go to the daily here. Let's go back if we go back 6 months, that's fine. So we had a couple of opportunities, right? We had a couple of chances here to take the off ramp. I mean, you guys were here. I mean, I don't think we were never up on the trade. We've always been down. It's always been some hue of redness on the position. Don't let me fool you and lead you to believe it's been something else because it hasn't been. But still, we had a couple of blips. We had a couple of kind of buoys up higher where we could have taken the trade off, and it all would have been obviously, not exactly strawberries and sunshine, but not sauerkraut and sardines either. It would have been somewhere in between there. So that would be what, honeydew maybe? I don't know, maybe like a Brayburn apple, something very middle of the road. I mean, Brayburn is obviously very middle of the road. I mean, your Galas and your Honeycrisp are on top. Your Macintosh, red or green, are definitely dangling off the bottom there. And so, but here, I'm thinking we got to stay in the trade now, right? I mean, what could possibly go wrong with AMD? What could possibly backfire on us with this AMD position? But given the fact that we are at 21 days to go, I am thinking, we're down $10 on the trade. It's been worse. I mean, you guys saw the SLV trade. You guys saw the Oracle trade from, I think it was last summer, actually. You guys are seeing the Dell trade right now. And so there you go. I think for AMD, I'm just going to roll it out. Let's just roll it out and keep the same strike. And again, like this is such a good exercise. And this is another good teachable moment, in my opinion. When you have a short put, right? One of the biggest advantages you have, in my humble, personal, professional opinion, is if you want to, you can just treat it like long stock. Now, you can do that a couple of different ways. You can just take the stock. You can just say, hey, I'm just going to sit there and I'm just going to wait till I get assigned and then I've got the stock and that's what I wanted all along anyway. That's obviously totally fine. Or if you have the in the money short put, but you kind of like the extrinsic value, you kind of like the buying power relief that you get from the short put over the long stock, you can just roll it out. Right? You can just say, hey, I don't really want to add a call. I don't really want to control my directional bias. I want all the directional biases on this position. Right? Like I want to be long. I want the delta. I don't want to shy away from the delta. I want to embrace the delta like a family member. You can do that with the short put, when it comes to this specific strategy. You can't do that with every other strategy. Like you can't necessarily do that with a short call spread. And you can't necessarily do that with a short strangle where you're tested on the upside. Because holding, short stock or a deep in the money short call for a really long time, that can be a little squirrely in an individual stock. Right? That can be, especially something like AMD. I mean, if something crazy happens in here, this thing's going to be 300 in like a week or like 4 days or whatever. And so when it comes to the short put, again, in my opinion, the biggest advantage that you have is just holding the position, right? You can do a bunch of things around the edges if you want to reduce basis, control directional bias, whatever you want to do. But if you don't want to and you just want to treat it mostly like long stock, you can do that. And that's what I'm doing here with AMD. And so, whether it works or not, at least we've learned so many things along the way and we've had a little bit of fun. And so again, banana natty's on me for the AMD position. And so let's go ahead and let's roll this guy out. We're going to get another $4 for it, it looks like. All right, $4.50. So that's a pretty nice trade. And so, all right, so that's AMD. And then the last thing I want to do is MES. So MES, we're at 20 days to go in MES. And, unfortunately today is costing us a little bit of money. But again, I didn't know what was going to happen. You didn't know what was going to happen. Nobody knew what was going to happen. Again, you're looking at it today. You're like, oh, it's so obvious. That's because it's today. Right? Yesterday, it wasn't so obvious. Yesterday, you're looking at tomorrow. You're like, I don't know. It's 50-50 maybe? 53-47, then it goes higher. And here we are actually on the 47 of that 53-47. And so sometimes they're going to get you, man. Like sometimes you just got to tip your cap and just say, man, like you got me. And so for MES here, I think, we're at 20 days to go. We're right at that marker, similar to SLV, similar to Hood. We're going to look at Meta here in a second too. We do have an economically significant profit on the position. It's only about $60, but that's more than we made in SLV. And we didn't really think twice about that. Like we went ahead and just took SLV off, like no questions asked. Like we didn't think twice about it. We just went ahead and did it. So I think let's do the same thing with MES here and we'll just take it off. And we can always lay it back out or lay something else back out next week and kind of do that, guys. So let's go ahead and, man, can you guys believe that next week is going to be March? So March 1st is Sunday. Happy month anniversary to you guys. That's going to be a fun day. Have I told you guys the story of how Autumn and I met and our first date? I don't think I have. But I want to get to you guys in the questions, so maybe another time. But Sunday, we are going to celebrate another month anniversary. So happy month anniversary to you guys. But can you guys even believe, can you even process the fact that it is March of 2026? It's not 2024. It's not 2021. It's not 2019. It's 2026. Josh wants to hear the story. I wish I could do it, man, but I don't have time. And I know I've been itching to tell this story on air for a long, long time now, but maybe Monday or Tuesday. And James is trolling me too, man. You guys, it's got to be a Friday. It's got to be a Friday. You get the James, Josh 1-2 punch. Like usually they're against each other, but when they're on the same side of the fence, man, I hope you got your defenses up. But anyway. Now they're trolling each other back and forth. Like, yeah, there you go. So let's close out of, but happy month anniversary to you guys. It is crazy to me that it is March of 2026. And it is equally as crazy to me that my little Amelia May, our intern for the show, my trading assistant, she does all of my trade analysis. I'm the only one on the network that has an intern. I'm the only one on the network that has a trading assistant. She is my soon to be 6-year-old daughter. I can't even believe it. She is very, very, very clear of the concept. The other day we were driving around. This is so funny. The other day we were driving around and she was talking about she was talking about like grandparents or whatever, but she was like, when I'm a grandparent, she's like, so when I'm 25, and I started dying laughing. I mean, that's just funny on its face, right? She's like, when I'm 25, I'm like, 25? That's a little bit young. She's like, okay. She's like, so when I'm 100 and I'm a grandmother, I mean, she just went right to the other extreme. I'm like, man, she's going to be a trader. She's 100% going to be a trader. I'm like, yeah, she's going to be operating on those edges pretty well. But anyway, let's close out of this MES position. Now the show's off the rails. So we're back to Friday form. So that's good. All right. So we're out of MES. So there you go. And all right, what else do we have to do? Do we have anything else to do? Oh, Meta. I want to talk about Meta really quick. So Meta, we're at 21 days to go, but because of where this trade is, 638, we might not be able to roll this for a credit. So this is the tricky part about defined risk at 21 days to go. If you can roll it for a credit, then go for it. But a lot of times you can't, just because you can't. Like it's a debit to roll, and that's one of the huge drawbacks of defined risk. It's a lot harder to adjust and a lot harder to, make management decisions along the way without incurring additional risk, which that's what rolling for a debit would be. It means that you are paying more for that strategy. And so your ultimate total risk in the trade increases by whatever the debit that you pay on the roll might be. So if you roll for a 10-cent debit, you're adding 10 cents of risk. If you roll for $1 debit, you're adding $1 of risk in the trade. And so obviously if it's 5 or 10 or 15 cents, it's not that big of a deal. But if you're thinking about rolling for like more significant debits, it can become a little bit of a deal there. So Meta though, if I go into Meta, let's see here. Oh, I don't want to close it. What am I doing? No. We got to roll it. I just want to see what it looks like if I roll it. Yeah, so you can see it's $1 debit. This guy's going to be $1 debit to roll. So I'm not going to do anything. I'm just going to sit tight because, again, I don't really want to add risk to the trade. And the beautiful thing about it being defined risk is, hey, if it doesn't work and this thing just crash, boom, bangs, then that's fine. I'm out whatever I'm out on the trade and no more. And so again, huge benefit to defined risk. It's got plenty of drawbacks, hard to adjust. The probabilities are much lower than undefined risk and what have you. But the biggest benefit, of course, is your worst case scenario is known on entry. And so as a result, you can just let your trades go if that's what it comes to. So for Meta, we're going to sit tight and do nothing. And we're going to let that be that. So, all right. So where are you guys at, man? I see you guys in the house, man. Look at you guys. Look at you guys, man. Can I surprise and delight somebody in the middle? Man, I appreciate you guys so much. Man, look, Andrew Fansler is in the house. Grumpy Mike is here. Man, Martin Walker is here. Man, Ramsey, Sam L. John Cummington is in the house. Man, Ranch is in the house. E-Media, the Preston. What's going on? Let's see here. Let me go ahead and let me surprise and delight. I saw a good one in the middle. Maybe near the end. Where is it? Let me see if I can find this really quick. I saw a good one. Yeah, Josh said he gave me one. Yeah, I'll get that one here in a second. But I see JT. JT says, Doc, I have noticed higher volume in VIX options. I am curious if you are familiar with what drives a sudden increase at such a magnitude. Simple expectations, hedging, something else. Okay. So, well, I can't speak to the VIX options specifically, and I think I've mentioned this before on the show, but in terms of directly trading volatility products or directly trading the volatility curve, there are plenty of traders that do that. I'm not one of them. And so there's all kinds of subtleties and nuances when it comes to trading volatility directly like that I'm just not an expert in. I'm not even going to pretend to be one. I'm not even going to throw some AI slop cannons at you guys and pretend like I know what I'm talking about. Like, no, I'll leave the launching of those slop cannons for another time. I'm trading volatility more indirectly through the equity options, obviously, and the futures options. But when it comes to just you start seeing volume increase in the VIX or anything else, I mean, that is just an indication that, that stock or that underlying is in play. That is just an indication that that stock, underlying index, whatever, is drawing more activity. And so it's really as simple as that. Now, could that be because of hedging? Of course. Could that be because that stock is kind of, in the news or there's a lot of things going on in the market? Of course. When you have a day like today where you have, volatility up, the market down significantly, generally speaking, those do tend to be higher volume days. I think. I could be misspeaking there, but that feels like it's right. I don't have any hard stats to present to you. I don't have a market measures that I can cite. I don't have an options jive on me that I can give you. But I think on the higher volatility days and the bigger market down days, volatility is obviously higher. Volume tends to be a little bit higher on those days as well. And so because of that, it's natural to see greater open interest, greater activity kind of across the board. And so I'm not surprised on a day like today, JT, that we're kind of seeing that. I don't know the reason or the rationale behind that, whether it's a VIX option or something else. I really think that it's going to be driven just by the activity. Sorry, I got a little distracted by the messages coming in there. And so, but thank you there, JT. And then let's see. Yeah, Ranch had something. Hold on. So thank you, Josh, for bringing me Ranch's question. So let's see. So Ranch says, with the SPX IVR at 22, would it make more sense to buy a long call spread than sell a short put spread here for 7 DTE if we are bullish for the next week or at least for Monday? And so thank you very much there, Ranch. I appreciate you, my friend. Would it make more sense to buy a long call spread or sell a short put spread? When it comes to this, a lot of times what I like to do is just look at the market. So generally speaking, when volatility is higher, selling premium is going to be the go-to. So this is where if you want to be bullish, selling a put spread is going to be probably preferred over buying a call spread. If I was bearish, probably selling a call spread is going to be preferred over buying a put spread. But when it comes specifically to the verticals, the volatility skew that might exist in the market or in that index is not taken into account when you're just looking at IVR or you're just looking at the raw volatility expansion for that day. And so I would much prefer to just go into the market. So let's go into the market range together here. We look at SPX. And let's say I wanted to be bullish for next week, like a 7-day option, Shooter McGavin style. And so, yeah, if I wanted to sell a put spread, let's just compare and contrast selling an out of the money put spread and then even buying an out of the money call spread just to make it kind of an apples to apples comparison. So if I was going to sell a 68.20, 68.10 put spread, so that's going to give me my probability of profit here is 57%, right? I'm only collecting about $3. And you can see, the index is at 68.49 and your short strike is 68.20. So there's not a ton of room between the short strike and where the stock is right now. There's a little bit of room, but it's not a ton. You've got some buffer built in, but these brake pads are going to need to get changed rather quickly. You don't have a lot more to go before all of a sudden it's metal on metal. You hear the squealing, you hear all these things. Everybody knows, even I know this. I don't know anything about brake pads. I don't know anything about cars. And I know that analogy was A-. Absolutely A-. And so when you think about, a short put spread here, it could work. The problem is don't have a lot of buffer. Brake pads are getting worn. Also, not exactly collecting a ton of credit right here. So I would like to be more like a third of the width of the strikes. Of course, that's kind of our reference point. I personally like to even go up to maybe 40%. So I want to be kind of closer to maybe $4, right? And so the only way to get that in this situation, Ranch, would be to move the strikes in. So now I'm bringing the strikes in even more. And now all of a sudden we're changing rotors. Now all of a sudden it's more than just a brake pad deal. You're talking rotors, you're talking calipers, right? You think your boy hasn't changed some brakes before? Well, your boy actually hasn't changed any brakes before, but I know my rotors and my calipers, right? They're all down there in the same general area of somewhere underneath the vehicle. And so 68.20, 68.10 might not do the trick. You would probably have to roll this guy in a little bit more. So you'd be looking at a 68.30, 68.20. Now it's only 325. So you can see, Ranch, short put spreads can be a difficult trade because of the volatility skew that's working against you. You can actually see that over here on this column of 1861 and 1892. So I'm paying 1892, 18.92% implied volatility on the option that I'm buying. I'm only collecting 18.61% implied volatility on the option that I'm selling. So that relationship is working against me. So the short put spread, not necessarily looking super amazing right here. And so, we could look at an out of the money call spread, but I'm actually not going to do that simply because we never do out of the money call spreads. And so instead of that, a 68.45, 68.55. Whoa, look at that, 630? Man, we might have to do an out of the money call spread there, Ranch. I don't know. Look at that. Man, they're really coming after you on these call spreads. Wow. I thought I was going to pay $5 for it, and I'm paying $6.30. Is Vinny Batista running the SPX pissed out too? I know he's doing MNQ. I think he's also doing Procter & Gamble. But is he doing SPX as well? Wow, 68.45. 68.55. Man, I thought it was going to be a risk one to make one, Ranch, but it's not. Like now we're risking 630 to make, only make 365. I don't know, man. That short put spread's looking pretty decent now. And so the call spread pricing, in the in the SPX pits is just really not favorable. And that's not super surprising because generally speaking, because of the volatility skew, when you sell a call spread, you get a decent price. When you buy it, oftentimes it can be a little bit expensive, of course. And that is kind of the nature of the beast. And so I honestly, Rance, don't love either one of these trades, to be perfectly frank with you all, to be perfectly frank with you and everyone else. But if I had to choose between the two, maybe take the higher probability on the short put spread here for SPX. And so anyway, I digress. But let's see, where are we at? Can we surprise and delight? Where are we at? Now let's go back to the beginning. Where are you guys at in the beginning? Man, look at you guys in the beginning. You guys been waiting. It's so funny. So funny. So like when like Josh is counting me in and like we're chatting before the show, whatever. Like, I put my comment in so that I can clearly see like when my show begins. And then I'll see the first 5 or 7 that usually float in before the show begins. And you guys oftentimes, you leave me laughing like it's funny, like it's amazing. Like you guys are the best. And by best, I mean, you're all pretty closely clustered around that B- level. But you guys are my people, man. Like you guys are 100% my people. And so it's funny that you guys put this in when the show began and literally the show is about to be over. And here we are. But that's just because of the way I'm doing the show, right? Like I want to do the things I want to make sure I do in the portfolio first, and whatever topics we might want to cover that day, and things like that. I think that's just it's kind of the way it has to be. But I appreciate you guys, man. Look at the Preston in the house. Dr. Jim, you're the king, man. I appreciate you. What a week. You crushed it. What are your thoughts on SoFi? Thank you for all that I do, man. I appreciate you so much. And don't forget to smash the like button, right? Smash it during your boy's stream, because I think that the AI overlords and whoever else, like they're tracking all that stuff now, man. So smash it during your boy's stream. And if you are subscribed, unsubscribe and resubscribe during this show. This is just good algo spoofing strategy. And so SoFi up to $17. Man, I haven't thought about SoFi. It's been a long time. I don't think I've ever thought about it actually. So it's going on about 45 years for SoFi, but SoFi down to $1.70. I mean, the Ivy rank is 24. I mean, the markets are really not too bad. I mean, the markets are pretty tight. The liquidity in here is 4 stars. I mean, it's not too bad. I mean, yeah, if you wanted to do something, you could I don't know. Should we do a straddle maybe? I don't know. What do you think there, the Preston? Should we do maybe a straddle? Yeah, let's sell straddle. SoFi straddle? What's the worst that could happen? What could possibly go wrong? Could it be another Dell? I don't know. You just got to tune in to find out. But the buying power, 347. I mean, that is, I don't know that I've seen a lower buying power on something that isn't, about to get pink slipped. And so, yeah, I like it. 17 straddle, SoFi? Yeah, sure. Let's do it. I like it a lot. So let's go 339. We should get filled there. So there you go. We got filled. We got improved at 340. And so that is that. Thank you there, the Preston. I appreciate you, my friend. Look at Ordenu in the house. Hello, Dr. Jim. I wanted to start doing strangles. Where can I start? Please tell me what to do. Well, so you should look at the strangle episode that's in the strategy management crash course that is already on the YouTube channel. It's a couple years old. I think I'm doing the short hair thing. I think there's a whole bunch of hair wax that's somewhere in the video. There's, microphones are different. A lot of things are different, but the information I think will still give you enough to get you up to speed. And then of course, with calculated risk and whatever, like we should definitely do a show on strangles here moving out into the near future. But yeah, and maybe it remind me again, Ordenu. I don't want to do it now when I don't really have that much time left. But if I ever get to one like early on, try to remind me, Ordenu, and I'll give you a couple of things next week, for sure. Wolf in the house. After a great week of dock trades, just splurged. I DoorDashed a Diet Pepsi from the gas station. My man. A Whopper from Burger King and fries from Rally's. This is what I'm saying, guys. A 5 Delta financial move, but 100 Delta lunch. That's correct. That's correct. And now all you've got to do is mosey on back into the DoorDash app and order yourself a banana natty for the evening. right? Like you've got lunch on lock. Lunch is taken care of, man. Nice job out of you, right? You went to 3 different establishments for you went top of the food chain in all 3. You went Diet Pepsi, excellent choice. You went Burger King Whopper, very solid selection. And then you went to what? You went to the Rally's Fries? I mean, I don't know where you are there. That was, Wolf. I don't know where you are, where you're located, but you may have had to DoorDash that from a different state. Like you may have had to go intrastate on that guy. It's pretty impressive, man. That's, you just got to want it, right? So this is a good testament to just gumption, just discipline, just willpower. Like Wolf, he knew what he wanted and he just got it done, right? At the end of the day, the only thing that matters is results. That's the only thing that matters. And so nice job, my friend. N1C in the house. What's going on there, N1C? Griffin Jones for the algo. What's up, my man? Sam L. Doc, what a week. Closing the charts and the philosophy book at the same time. That's right. That's right. We're closing it all down, man. Shutting it all down. Happy Motherversary to you guys. That's going to be on Sunday. Ranch. I was going to sell a simple short call spread. 7 DT and SPX, and now I'm going to do that, but on the put side. Oh, okay. So Rance, I see. Okay, I get the question now, the full context of the question. If you go to sell a call spread, you're going to play around with it. You get really nice pricing selling call spreads because the skew is kind of working in your favor. And so if you want to be a little bearish and sell them in the hole here, you're kind of going to get, you'll get paid for that a little bit. Now, of course, if the market rips next week, it's not going to matter, but that's the way the volatility skew typically works in the markets. And so let's see. N1C is in the house. Ranch, howdy, Dr. Jim. What's up, my man? What is up? Let's see. Sam Alpino, open bros reviewed, life audited. I'll see you Monday, Coach, man. I'll see you guys Monday too. I hope you guys are coming back, of course, whether it be my show or all the other shows on the network. There's so many to choose from. Like if you're brand new and you're still here today, like that's amazing. That's incredible. Like pat yourself on the back. Nicely done on your from your vantage point. But when it comes to all the shows on the network and all the different things that we have for the active trader, it's like, man, like I feel so humbled and blessed to be a part of the network because it's like if you want to take an active approach to your portfolio, derivatives, futures, even stock, I mean, just whatever, you just kind of want to be in there and try to find ways to adjust your risk return profile to make it a bit more customized to what you want personally and professionally and portfolio-ly, then you can do that here on the network. And, by all means, my show, the other shows, like you're in good hands. And so, let's see, Ranch. Oh, and there's MP in the house. What's going on there, MP? Edward Lond is in the house. What is up, man? You guys got some inside conversations. I love it. And the algo can't get enough of it. Cannot get enough of it. So thank you guys very much. And it thanks you as well. Margin Walker, hey, Dr. J, thanks for following me in that loser tell. Oh, this was your trade, Margin Walker? Man, you're my boy. Like, don't you worry about it, man. Like, we're going to be totally fine. And by totally fine, I mean, I'll probably be sending you an invoice at some point here pretty soon, but I appreciate you, my friend. He says, now we have ourselves a genuine teachable moment. That's correct. We do. As we wax philosophical about merits of proactive management versus the do-nothing approach. See, Margin Walker, this is what I'm saying, and this is why you're my man. Like, this is why you're my guy. Like, that's exactly how I feel about this. All kidding aside. It's like, man, now we've got a little something like, yes, we've had a couple nice trades and we've been on a wee little bit of a hot streak and it appears to have ended. It appears to have come to a screeching halt with this Dell trade, and that's fine. That's totally fine. Like, now we're going to be rolling. We're going to be adjusting. We're going to be managing directional risk, and I think it's going to be good. I think we'll learn some things along the way. And so Brian Dowdy's in the house. What's going on there, Brian Dowdy? Hey, Dr. J, I have 3 in the money puts, about 80% of my cash, and I'm wondering what your thoughts are on opening more short puts when I plan on holding the cash for the in the money short put. Any trades I should make? Well, I don't know about the cash position specifically, but I mean, I would just be thinking about delta risk and I'd be thinking about unit risk when it comes to deciding if I want to sell more puts. So if I'm short 3 in the money puts, right, and it's like, all right, the deltas are growing and what have you, I mean, cash buying power aside and what I've collected aside, that's not even what I'm looking at first and foremost. I want to know what is my overall risk in this position. Like if I plan on holding these, which it sounds like you might, am I okay holding basically the notional equivalent of 300 shares in whatever the stock might be? Did you say? You didn't say. So whatever it is, SPY, Snapchat, SoFi, whatever it might be. And so as long as you're okay with that, you want to layer in some more, then layer in some more. But it all comes down to total position size and unit risk. And so that's what I would be looking at more so than like cash or buying power. I mean, buying power, all that stuff matters, but it doesn't matter before I address my leverage point, my unit risk, and my overall kind of directional exposure. And so John Covington is here. Dr. Jam, what a week. We are going to do banana natties for all. My man. But now it's a tuna fish and applesauce day. It is. And you got to go with that chunk light tuna. And it ain't the chunk light tuna in oil. It's got to be chunk light tuna in water. Like we ain't got any money left. There's no money left to get the good stuff. No albacore, no oil. Like we're doing the 30 pack for $3. That's all we can do today. Even the S&P is down 50. And so, iPod Touch is here. What's up, my man? You snuck in right before about to end the show. And so look at you. I appreciate you. E-Media, Dr. Jim, I'm commiserating today, but celebrating today because today's the last Friday in February. That's correct. That is correct. Jared Kramer is here. Finn West is here. Sparky Dog is here. Darren is here. Man, look at you guys. I got a Danish Dynamite snuck in at the end. Junior Mac. Man, look at you guys. I appreciate you guys so much. You guys are the best. Absolute best, but I got to go. I got to get you guys to Tim Knight. I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And no stress, no five. On the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled, jokes twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 sodas. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Yeah, it's in the air.
Hi, happy Friday. We're all done with what's been a very interesting week. A lot of ups and downs. We had a big tumble on Monday, and Tuesday, Wednesday, Thursday, not so much. And then we are down somewhat today, which is kind of cool. The big event next week will be the jobs report on Friday, I guess. Earnings season, of course, is sputtering down to nothing. The NVIDIA report this week kind of put a bow tie on it. And as it is now, it's I think we're all ready for the weekend. So I've got a goodly number of charts loaded, and I'm sure I'll think of odds and ends to say along the way. So let's just jump in. And we begin with what's become, I used to never show this, but now it's become a bit of an obsession of mine, the diamonds. I am acquiring an increasingly large quantity of June puts on DIA. Actually, April, excuse me. That's my only, for me, kind of short-dated put. The rest are June, September, even January of next year. But one exception is the April diamond puts. And this has been, on the whole, in spite of some real bumps along the way, it's been a fairly positive week for the bears. There have been some things tilting in their favor. The diamond is a big one, because last week we started to cause a little damage to the diamonds. This week we went fully below it, this big red bar here, fought back Tuesday, fought back Wednesday, fought back Thursday at first, then it sank, and then today we've got a price gap. So we've got a nice gap down, and we've basically undone that healing that had taken place on Tuesday and Wednesday and Thursday. So we're cleanly below the broken trend line. What needs to happen next for us to really rock the free world is to cut below this support, which is not only the lowest level we've seen going back pretty much for the year, but also is a price gap right there. And for God's sake. I don't know what causes this cursor to barf, but it does anyway. So that's the next key. That's the next big event, hopefully, will transpire. It's going to take some doing. The whole Dow $50,000 thing has helped us a lot. We need something else to vex the market gods to get us lower. So that's the next goal, and if we can break that, then that's even better. The small caps, IWM, have been especially weak today, off about, well more than 1%, but I've said it again and again, but I'm going to say it again for emphasis, and also because there's something to say that's new. Bulls need to cross above this line, conquer that gap. Bears need to crack this trend line. We are getting close. I used to talk about, it's going to take so much work to get there and so forth. If we had one more day like today, on Monday, we're done. That would do the trick. So we are getting deliciously close to that. Hopefully we'll not be teased relentlessly as we approach that trend line. So let's crack that. That would be pretty cool. As I said, earnings is kind of drying up. CoreWeave announced, and they are down hard. We've been bearish on this for a while, but it's in a very sloppy chart. As you can see here, we had a top here, and then yes, it fell, and then it just defied the pattern. And then once again, we get a nice little topping pattern here, and it fell, and then this nonsense again, pushing back into the pattern, and then we fell again. So I haven't been in this for a little while because it is a big, fat, sloppy mess. But on the whole, just with a 10-inch brush, just broadly stroking the screen here, yes, we're in a downtrend on this as the whole AI bubble continues to get called more than a little bit into question. Now, like I say, this week has had a share of duds for me. I've had some real stinkers, as I've been calling them, because the way I chart, it's old school, Edwards and McGee, classic patterns, like zero indicators, basically. Just, give me a ruler and a pencil and I'm on my way. And things like this is how it's supposed to go. So here's SLM Corporation. And this is just a nice topping pattern, big old sucker here. And once it cracks support, well, off you go. Down, down, down. No turning back. You can turn back, you can retrace, but don't go into the pattern again. Don't pierce that resistance after you failed it. No, you can either go down or bounce around a bit, but below resistance. That's how it is supposed to work. And so here again, we're down double-digit %, even after we've already fallen a lot on this thing. But there's no codicil in the federal statutes for these patterns to function properly. And it's sort of like I think every day this week, with the exception of Monday, I've had a special little friend show up to blow up in my face. Now, I keep my positions thin. Like, I've got like 34 positions now. Nothing is going to count for more than 3% or 4% of the portfolio, if that. But it's still fun. Like, for example, we don't have to look very far to find the example, Dell. Dell is on fire today. Now, until, yesterday, it was looking pretty good. A few weeks ago, it looked fantastic. I mean, this is a very exciting looking pattern. It looked ready to break down. But the thing I've said before, and bears repeating, is a pattern that's almost complete is not complete. It's not ready yet. I'm guilty of jumping the gun plenty of times, getting into things like, well, it looks like it's going to break. Well, until that actually breaks, the risk is still there. And that's what happened with Dell. Now, to my relief, I'm not going to tell you I didn't lose money on this. I did. To my relief, I had put options on this, and it was kind of misbehaving enough. I'm like, forget it. So I went into something lower risk, which is just a short position. Added to which, after earnings came out last night and things started going off like a bottle rocket, it's like, okay, I guess I'll hang on, but I'm going to dump 3/4 of this position. I'm taking 3/4 of my loss right now because I don't want to worry all night about how high this thing's exploding. And so lost money on the cover last night, but not nearly as much as if I just held on. And right from the get-go this morning, the other quarter blown away. So, so nasty stuff. Sometimes I had to cry after hour sessions. There are times when it's actually the right thing to do. And this was one of those times. So this pattern is no longer a pattern anymore. It got tantalizingly close, but it's completely defied what should have happened. So that was my dud for the day. Earlier this week, Supergroup was also kind of a dud as well, because this was extra cruel. Not only was it a nice pattern, but it had completed the pattern, fell, retraced, fell some more, and was pushing higher. And here again, what kind of should have taken place here is to tumble away from this level here. But it pushed higher, and I got out, and it's just kind of hanging out there now. So this isn't as egregious. I mean, it would be possible, I guess, to try shorting it again. I'm not going to, but it is not as grotesque as Dell is right now. I'm whining and complaining here, but these are kind of the exceptions. I mean, on the whole, the patterns are doing just great. But now and then, and lately daily, there's one that sticks out as a bomb. And just one last example, of course, Axon, that just exploded higher earlier this week. I guess that would have been on Wednesday. It went blasting higher. And so the big pattern here has been pierced. I've actually, today, I entered a small short position on this because long-term it's still quite vulnerable looking, but the clarity of the pattern is definitely, kaput. I'll also say in closing about patterns is that it's important to basically, I've said this earlier this week, when the rationale for a trade is violated, then to get out of the trade because the rationale has been broken. So that's happened more than a few times. In general, though, it's been not a bad week. The cubes are down, not much, because they kind of got walloped yesterday, but they're down about 1/3% right now. Pretty much opened weak and pretty much trading strong, relatively, right now, but still very range bound. We're going to close the week almost exactly, probably at 50.0 mark between the extremes here of support and resistance. And of course, the driver of all that in a big way was NVIDIA. Big red bar yesterday, continuing to drop today with a price gap. So it's lost another 3.1%. This is not a pattern. It's just a range. And, I'm not sure what would compel it to actually break support, but if that did, that'd obviously be a monstrously big deal. SMH is a little cleaner because in this case, we have a failed bullish breakout. And as with IWM, it's not that far away to break the trend line. It would not take much. One even kind of down day on Monday would do the trick. But, as with Dell, let's not get ahead of ourselves. It hasn't broken yet. It's still in an uptrend, and the uptrend has not been violated by a single penny. So, we'll just keep an eye on it. What else is going on? Well, Japan, EWJ. This is something I entered today on the short side as a gap trade. There's a price gap there. Very simple. I shorted a bunch of this, have a stop at 92.92, and we'll see if that gap is respected or not. Asian stocks all over the world have just been ripping for months now, and especially in recent weeks. So we're going to kind of defy that with the EWJ short. And I'm not doing anything about Canada, but I just wanted to point out this too has been sensationally strong. And it may mean nothing, but we do have a cute little shooting star there. We had a lifetime high earlier today, but it's given up that strength, and it's actually down a little bit right now. So it'll be interesting to see if that turns around. As far as some shorts here and there, just quickly, because we don't have much time, these are a few items to highlight. Applied Digital continues to do well. APLD, nice breakdown there. ASTS, I've got a small short position on this because the stop is so wide on this, but this is down nicely over 8%. Infosys, INFY, down again, about 2.25%. CrowdStrike, CRWD, also slipping 3.33%. And this is how it's supposed to behave. There's a top, down, up, down, up, down, up, lower lows, lower highs. That's how it's supposed to go. FUTU, F-U-T-U, FUTU Holdings. This pattern is complete. It's not exactly collapsing here, but it's slowly moving the right way. We're down almost 3.5% today on FUTU. And then QUBT Quantum Computing is also down nicely, almost 9% on this. And let's just really quickly rough out a rectangle there, like so, just to kind of highlight the distribution top. And what's become a real favorite of mine lately is CRD Credo. Lovely top on this one. We did get a bit of a violation, but we've got to straighten ourselves up now. We're back below that pattern again. So this is off 3.1% as well. So that's looking awfully good. Bitcoin, which yesterday when I chatted with you, I said, I'm out of my Bitty. And after you and I talked, it's like, you know what? I can afford the risk. I'm going to go into Bitty again. So I bought Bitty once more, and that I'm glad because it's down 2%. This is still very stubborn. It's not, this is just grinding away in the upper 60,000s, but I am long BITI again as of yesterday after I saw you. And so that's so far so good. There's Bitty itself, which is the inverse Bitcoin fund, and that's up 2.74%. And this is just, BM&R, which is Tom Lee's Ethereum play. This is just a good example of how, I'm sure on Wednesday, everyone was chirping about, party time, the bottom is in, et cetera, et cetera. And 2 days later, the entire gain's gone. Ethereum, Bitcoin, BM&R, MSTR, they're all, I think they're all in like giant bear markets right now, but you're going to get pops now and then, but it doesn't necessarily change anything. Just to wrap things up real quick, IEF, talk about a pattern that was, and this one gave us the heads up because we had a nice reversal on this. It started hit down and then started pushing higher. As of here, it's like, okay, forget it. And it's been up ever since. So, interest rates are going down and bonds are strengthening. You can see that with TLT, IEF. You can see it even with corporate bonds by way of LQD, which is here. So yeah, rates are slipping. But last chart, what we used to always begin the show with, Spider. Same old, same old. Long range, months and months, grinding away, right smack dab in the middle of it. So what I'm trying to do, just here and there with my little individual picks, stock pickers market, try to pick the right stocks. So good. Have a good weekend. See you next week for another full week. And hope you've done all right. See you Monday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that. Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back. It's Friday afternoon, which can only mean one thing. We're here to end the trading day, the trading week, and as it turns out, the trading month. You're watching Last Call here on Tasty Live. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's a day of pressure, particularly in the banking sector, where we have KRE, KBE, and XLF as our worst performing ETFs. Credit concerns have been percolating the last few days. Jamie Dimon's been commenting on them. We can turn our attention to the charts, where we do see the Russell is still the leader to the downside off 1.78%, bouncing off of its 50-day. Your NASDAQ is less so in the blender, where tech had been the weakest component of everything. It's only off by about 0.5% at present time. The S&P somewhere in between, nearly off 0.6%, as it were. We do see the 10-year yield. It crosses below that very important 4% threshold, 3.96% right now on our screen. ZN testing 114, ZB through 118 here, some of the highest levels that we've seen in a few months' time now. Good news for gold and silver, perhaps? Yes. Stocks down, bonds up, oil surging. Gold up at 52.77 right now, 1.6% gain as it makes further progress from its potential breakout. Likewise, silver up a 7.4%, back to $94 an ounce. Lots of volatility here in the metal space coming back in as we look to that potential war trade. Mr. Oil now up over 3%, IVR sitting at 85, highest level that we've seen thus far in 2026. The sector performance, as I noted earlier, it's all about those weak, struggling banks. On the other end, you do have some growthier names that are doing well here, like your telecom. Even to a certain extent, you could have some rate-sensitive things like your home builders. But we are coming to the end of the session here. What did we learn about this market this week after NVIDIA earnings? And broadly speaking, the month of February?
I think we've learned that there is clearly something happening under the surfaces of the indexes, and the markets are becoming more sensitive to finding out what that is. When sentiment is generally rosy. The markets don't go looking for trouble and try to ignore it where trouble appears. This now appears to be something of a sentiment shift. If we take a look at what's happening in the S&P, for the month, it's down a fraction, although it's not a big decline. It is also the biggest decline since March of last year. So momentum is starting to break. It's a similar thing for NASDAQ. Not surprising, XLK, if we take a look here at the technology benchmark, is having an ugly month on the whole. This is about to be the lowest close in 4 months for XLK. So
Mag 7 in particular leading the way down.
Mag 7 in particular. And then you're immediately drawn to say, well, something about the AI narrative maybe is long in the tooth, but not so fast. If you look at the Old Country World Index, excluding the US, ACWX is the ETF. There you can see ACWX, no E. There we go. Look at the monthly candle, and it is very clear where we're going, up and to the right. And that's been driven mainly by APAC stocks. AIA is your ETF there. That's the Asia Top 50. And that looks mainly at what's going on in Taiwan and in Korea. And it is a surge of chip-related and AI-related names. So we're looking then and saying, okay, well, fine. We're rotating out of AI in the US to AI everywhere else. This one is mature. This one is the catch-up. There's a spread there. Okay, cool. And then you look at the dollar and you go, no, capital is not leaving the US because the dollar isn't falling. And so you're left with this kind of sense of generalized unease. But when you put all of it together with surging gold prices in particular, surging bonds alongside, it starts to look like the market is entering March with a defensive posture. Because capital isn't just leaving tech in the US for tech not in the US. It's nibbling on tech not in the US. Because those are not so liquid, those markets. They're not so difficult to push around to highs like this. But there's much more money sitting in US tech, and there's a good chunk of it that seems to be going to very defensive things like cash, bonds, and gold.
Well, aside from the high-level macro shift in capital within the market itself, I'm paying attention to this dispersion that's continued for a second, maybe third week, you could argue here. The equal-weighted NASDAQ, for example, outperformed the Mag 7 by over 3% this week if you were long equal-weighted over short Mag 7. It hasn't really, that ratio hasn't gone much of anywhere over the past several months, but you're starting to see that marginal outperformance, whereas the equal-weighted S&P has outperformed the triple Qs for 4 straight months now. You do see, as volatility sticks around and ultimately stays elevated here, the market is telling us that we have to shift away from the tech names which may have overbuilt too much CapEx. Ilya, when it comes to AI, there's been a lot of confounding reports. I know that Block yesterday laid off all those people. I'm kind of astounded by the market's reaction, not to Block itself, but to the read-through, considering Jack Dorsey has a track record of overhiring at firms that he has staffed up at. I mean, there were problems when Twitter obviously lost 80% of its staff, but the service didn't shut down. Musk was able to trim the headcount there, and XYZ Block was one of the largest Silicon Valley companies that expanded headcount during the COVID era. So it feels like a flimsy excuse to just get the bad news out of the way. They're using it as an excuse to make these layoffs. Like, oh, we've invested all this money in this technology and we're not getting the results we want. So you know what? Let's just start trimming now. It's just an odd week. We start with Citrini, we end on Block.
I think that's really the key here.
Mm-hmm.
I think you've hit the nail right on the head. These are markets looking for bad news. The substance of the news is not great. Were we talking about this same thing in late 2024, the second half of 2024, before the tariffs before, let's say, we knew the outcome of the election, before we even had a suspicion that the election would tilt, because it was pretty clear which way it was likely to go beforehand. The polling was very emphatic. But you look at this and you go, well, the market has no intention of paying attention to this minutia. And indeed, when you would get things like this, the market would find, as we're doing here now, all the reasons to go, yeah, but this is not a story you can extrapolate. You look at Block and you go, Jack Dorsey's going to Jack Dorsey. And then you look at the Citrini thing and you go, even Citrini himself isn't saying this is likely. He's just saying, look, at my vivid imagination, for a worst case scenario, let's explore as a thought exercise. Why is the market freaking out? Why is the market suddenly going, yeah, this thought exercise feels too close to home? Why? Because sentiment is changing. And I think that's the biggest insight here in this price action and in this sensitivity to seemingly easy to write off headlines. They are easy to write off were you in the sentiment headspace of even 9 months ago, but no longer. And that's the thing that we need to be paying attention to, that the markets are no longer impervious to things they clearly wouldn't have even noticed very recently.
You know, you mentioned the market has a certain stickiness to it, depending upon where we are in the sentiment cycle. The AAII sentiment survey data that we've seen this week reinforces that. When we take a look at the survey results itself, 39.8% of respondents are expecting the next 6 months of returns for the S&P 500 to be, going down. That's why you're bearish. Yeah. That's the most bearish people have been, however, since the last week of November. The key difference, of course, is that last week in November, we wake up to New York Fed President John Williams, who on a Friday morning at 7:30 Eastern time, I was there, I was looking at my screen, he says that a December rate cut's likely to occur, and that kind of saved the market from its into Thanksgiving and post-Thanksgiving swoon. We don't really have a white knight like that awaiting around the corner next week. Maybe it's Broadcom. That's been a big important company.
Who knows?
Maybe CrowdStrike shows that the AI SaaS apocalypse is overstated and they're adding headcount, hiring more software developers. So whose jobs are really at risk? But I don't know if there is a turning point.
You raise a very important point, though. Who did it take and what did it take to get the markets to calm down? It took a credible Fed official to promise rate cuts.
And that's probably not coming in the next week. And
this is the whole thing. The markets have been asking for cheap money to protect them from the many headwinds now emerging. Let's not forget, it's not tech that's the worst off today. It's financials. And it's because now we have private credit rumblings out there. Because, to borrow from the phrase that's now making the rounds in the financial news media vis-a-vis all of this, there's never just one cockroach. So when you look at what's going on here, and you go, look, KBWB, the KBW Bank Index ETF, it's breaking down. This is not AI. This is something else. And so now you don't have just AI exhaustion, if that's what you want to call it. Now you have something happening in the financials. And what's the unifying theme to all of this? Not enough rate cuts for the market's taste.
Well, if it is that case, one thing that is noticeable today, and we're going to swing over to single stocks momentarily, you do see for the first time in a while, Treasury yields going down alongside rising rate cut odds.
Yes.
That is a relationship that's plain as day. We go to the SR3Z7 to look at where the rate cuts are coming at the end of next year. And those have been surging over the past few weeks. We've gone from, roughly speaking, we'll call it, a 3.4% year-end rate for 2027 to now 3 effectively. We are moving. It's a 2.96 year-end rate now. We've added 2 cuts to next year with Treasury yields going down. So let's just that's a recession type of move in the market, which then begs the question, when the market is trading recessionarily, how do you position yourself? If history's any guide, since 1980, the long end of the curve and gold have been the best places to hide out when the market's going through one of its recession fits. Maybe this is a war trade, area because of Iran. All the pieces kind of fit there. Maybe it's seasonality. It's late February still, after all. But I don't want to ignore the fact that we have our two indicators here in the SR3 and in our 10-year behaving in a manner that's, against the backdrop of what's going on with the banks, a little disconcerting. So I know you and I spoke about this on Futures Power Hour earlier, but you and I had some things to do. In fact, in ZN, which I do think for myriad reason, it may be the better vehicle for the retail trader who's interested in approaching this market. Just for some quick product specs here, in ZN, you're looking at a $15.62.5 tick value, whereas for ZB, it's $31.25. And then in terms of the buying power required, it's $2,063 overnight buying power for ZN versus $4,070 for ZB. What makes ZN even more appealing, though, is the volatility profile with a 22 IVR compared to ZB's still, well, I guess we're no longer single digits. We've gone up a little bit from this afternoon. It's still a 10.1. So if I was going to execute anything on a typical tasty type of trade here, 45 in, 21 out, look to sell the vol, ZN actually offers a better opportunity where it's a little bit more approachable. So that was filled today after Futures Power Hour. I do need to put that on the follow page. I'm in the 112, 113 short put spread at 56 days to expiration. I really like this most recent pivot level here that we had a few days ago. It dovetails really neatly with that yellow line, the rising 1 month moving average. So as long as we hold 112.5, I should be good. And that's a trade I'm comfortable putting on the books alongside the out of the money ZB call spread up in that 120 neighborhood right now, which 120, 122, 1.5, and all of a sudden this is working out neatly as well.
Yeah, I mean, I'm on the long side here as of today. It looked like there was a break in the long end. It looked like there was a little bit more stickiness for now. In the short end, we're at the top of the range, but we haven't quite cleared it. But looking at where we are in notes, ZN is at this point scraping the high from mid-October. And of course, we know what happened in October. That was when the Fed came out with all that hawkish fire and fury, and we see the big drop in bonds and the big rise in rates really starts on October the 29th, which is when the Fed puts a top in for stock markets that they've yet to clear, and we get a run-up in rates. Again, no surprise. Sentiment is a function of what the Fed is going to do at this point, because everybody sees a myriad risks and wants the Fed to give them the exit liquidity if they need it. They want to be able to borrow cheaply if something goes wrong. So what we're looking at this at this point now looks a little bit risk-reward suspect. But then you look at ZB and there's still room there. And I got in a little bit earlier. Today it started to move our way here a little bit over the course of the day. It's still early days yet, but I think if the market is going to angle for the Fed to make a move, and as we talked about earlier on Futures Power Hour, if the perspective was, look, the Fed is a function of its mandate. It can't start cutting because the markets feel like they need a safety blanket. Something wrong actually needs to occur. So the Fed is, by definition, reactive, not proactive when it comes to these kinds of things. It might be proactive if it sees unemployment weakening downwind, and indeed was so. We saw unemployment numbers moving in the wrong direction. The Fed was already all over it by September. They were already cutting, saying, yeah, we don't like what's going on in the labor market. The data hadn't caught up yet. So it's not like the Fed is permanently reactive to everything. It is proactive as per its mandate. Inflation, employment. Something's going to have to actually break in these markets. If that's what's going to have to happen for the Fed to act on these concerns, be it AI, over speculation, or whatever underwriting faults we're finding in credit markets, then what we're going to see is a Fed that's late. And a Fed that's late has to cut more. And that just helps what we're seeing in the bonds, especially at the long end.
It's certainly something that we need to be concerned about. For the trade construction here, Ilya, in ZN versus ZB, why the short put spread as opposed to the long call spread? Well, with ZN, because of the higher volatility, the environment, I think, favors doing it a little bit more of the typical tasty way. When you're long a call spread, well, first off, both of these long call spread, short put spread, they're both going to be positive delta. They're both defined risk. Okay. But in the long call spread, it is a debit and you're sitting positive vega. You want volatility to keep going up with price. But when you're in the short put spread, it's a credit and it is negative vega. So you have a position that will do better if volatility contracts. And I like to call it the wedding crashers trade because you're not looking for an extended rally. Like for my ZB call spread to work, this thing needs to keep going. Whereas if ZN just shows stability here or even modest upside, that short put spread will work as long as the market stays above my strike. So just mixing and matching, same view, long deltas in both, just different ways to express it to take advantage of the volatility difference. And, I would hate to be, let's say they just stick here for the next 3 weeks. The ZN trade will work out, the ZB1 won't, and I'll have been right for being long deltas in both occasions. Just the way I expressed it was, wrong in the ZB case. Yeah. Before we move forward, though, I do want to get over this quickly. Production team, we could toss this up on the screen. The refer a friend. We've been running this for a while. You guys should know it. tastytrade.com/refer a friend. $100 for you, $100 for the person you refer, the referral, and the referrer, and the referral. That's where we go. Each get $100. tastytrade.com/refer a friend. And no, Ilya, we've tried. You can't say you're friends with someone and then tell them they're no longer friends and then say you're friends again and have them open up a new account. It's just doesn't work.
Alas, not even $100 will seal that deal.
We look into the last 7 minutes or so of the trading day here, Ilya. I'm looking at the high options volume watch list on the platform here to see what's really moving. And it's a lot of the familiar suspects, your NVIDIAs of the world, the Teslas of the world, which not feeling too great about that for myself right now. Vol has ebbed and flowed, though, and I think that's a good place to stick because VIX right here shows up as number 6 on the top tickers right now. Earlier today, the VIX 3-month, 1-month spread compressed to effectively flat, which suggests that we're seeing some near-term risks really crop up. It got to 48 cents. Correct. It got to a low of 73 cents wide. It's back to $1.80, so a little bit more contango as the session's gone on. And spot vol has come in, which has in turn helped cater to a modest rebound here in the stock market. S&P's only have 0.5%. Where do we turn with vol, though, moving forward? Because as a seasonal person, vol rises in the second half of February through the early days of March, if history is any guide. Why shouldn't I be thinking, this is just another SVB signature bake type of setup where maybe 1 or 2 private credit lenders go down, the system survives, no systemic risk, and the Fed can proceed as it wants on the other side without any major disruption, but for maybe another month or so of choppy trading?
Well, let's consider here. We're looking now at a second consecutive monthly rise in VIX for February. VIX is up, for what it's worth, 15% month on month from January to February. And it was up in January by a healthy 16.6%. I mean, these are not small things. We're also about to close the highest monthly close on VIX since May of last year. So things are moving, and they're moving in the wrong direction. But sure, it's still relatively low. We're only at about a 20 VIX here. This is by no means a number consistent with any kind of catastrophe. I mean, we've been basically since November 2022, when the markets bottomed after the Fed's rate hike cycle, we've, barring a couple errant spikes, one in August to 2024, reasons. One in April 2025, obvious reasons. Barring those things, we've been basically in a range from about 24.5 to about, let's call it 11.5, 11-ish on VIX. And this is not
something
too
maybe
far
that's
from
different though?
This is something that's different because in that time,
it's clustering.
Well, and February, even just as an example, VIX hasn't moved much. It gapped up at the start of the month. It hasn't really moved since then. It's gone up a little bit. It's gone down a little bit. As far as the internals of the move, we opened the month at 1995. We're about to close the month at 20.
Well, that's
We've
the stickiness, right?
We've been as high as 23. We've been as low as 16.
But when was the last time we've seen this?
But in
This is what I'm
that
asking.
time, stocks have been down. And that, I think, is the key.
When was the last time? It feels like over the past year, including in April,
yes,
that we didn't have volatility clustering up at elevated levels. These were flashes in the pan. We'd go up for a week or two. We'd come back down and we back below 15, 16, 17. Now we're just chopping around between 18,
we're building,
19, 20.
we're coiling.
Yeah, we don't do technical analysis on the VIX, but
but you can do a sense of you can do a look at sort of using the candles to sort of visualize the underlying sentiment.
Right, and periods of time when volatility goes up and clusters at points tend to be bad for the market. I mean, I think just doing a quick scroll back here, the washout in September, October 22 is the last time you see a decent cluster of vol at high levels. Maybe before that in May of 22, when the market was on the way down post Russia invasion of Ukraine. It feels
the rate hike cycle, the start of the rate hike cycle.
It feels a little bit different, and it's felt different for the past few weeks, which is why in the 3 things to watch note, which if you're not subscribed and you're interested in learning what's going on at the start of the trading day, I would suggest that you check out our 3 things to watch morning video, as well as the Tasty Report, which delves into a more thematic topic every session. We've consistently been talking about the dispersion trade, how volatility is staying sticky. It's really not a great place to be directionally beta or have directional beta in your portfolio at the index level. Stock selection, sector selection matters more. I think as we go into the first week of March, which is still part of this week seasonal window that ostensibly begins in February and extends to about March 10th, I think we have to respect that still. So as we go out into this close where stocks are bouncing a little bit, I don't see much of a reason to change what I'm doing right now, which is leaning a little long MES, still short the iron condor on ES. They've scared me in RTY for sure. The children have been scared here. But we're still consolidating, and that has been the name of the game. And if you're positioned for at least in equities, the consolidation right now, there really isn't much more to do than wait for price action to provide clarity. The puck isn't skating anywhere right now. It's just kind of oscillating.
Indeed. And I think this is really where things get interesting. Earnings were great. The economy is slower, but by no means falling apart. Inflation is certainly not plummeting, but there is a credible case for it to improve over time, at least on the good side of things, as the tariffs filter out. We've yet to see what the oil implications will be. They don't look great. But the market is still enjoying, as we just learned in the fourth quarter, excellent earnings growth.
Ilya, that's
here we are.
That is the closing bell for this market. We get a little rally here after 3 p.m. Eastern to bring us into the closing bell. S&P 500 only down 37 points on the session, so we covered about 30 points off the lows here. NASDAQ, it is still in the red, but it's off the lows as well, down only about 0.4%, and your Russell off 1.85%. Oil here, 3.2% heading into the weekend, folks. So keep an eye on those headlines. They're headlines that Ilya and I will be watching because, of course, we'll be back on Sunday for first call, 5:55 Eastern, 4:55 Central Time. We'll see whether or not we get any more geopolitic murmurs out of the Middle East and if oil provides one of those weekend gap lowers to potentially have bulls load up again, Ilya, which you've been doing successfully. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Have a nice weekend, and we'll see you Sunday night.
Have a good weekend, everybody.